Hi guys, so welcome to shikharatutorials. So this is the first class of CMA Inter regarding to the financial accounting. We have started the CMA Inter regular batch for June 2026 examinations. So as this is a first class, I'm not going to discuss directly the subject related topics. So first of all, I will clear you some doubts regarding to the students. So firstly, happy congratulations to all of you, those who have cleared the CMA foundation. So as like your CMA foundation, CMA Inter also is very easy. So easy to manage. You can get all in the rank easily if you follow the things those I am discussed in the classes. So what are the steps you need to follow, sir? You need to follow daily attendance to the class. Next, you need to write the weekend examinations which are conducted in our institute, and you need to be more confident. So how the students can score the good marks means, first they should have more confidence and positive thinking. So how they will get the confidence, sir? In order to get the confidence, they need to trust the two things about the campus and the faculty. What is the meaning of campus means? So nothing but a college, so which they have joined. So the students who are joining to the shikharatutorials, I would like to say something, and next I will discuss about myself. So regarding to the shikharatutorials, yeah, this is our CMA team. So even though the shikharatutorials have started recently, but the faculties in the Shikhara is having a experienced faculties. So each and everyone having at least 10 years of experience in their subjects. So first I would like to thanks to Bhaskar sir for giving this wonderful opportunity. So next, a very thankful to Srinivas sir as working with you as a co-faculty. So next I would like to thank to Satya sir and Satish sir, and next of our material department, Bhavani madam and Bhanu madam. So these two members have helped me related to preparation of material. So I would like to share my material. So this is our material. So totally in the financial accounting, we are going to provide you two books. First one is called as concept book, including the MCQs. Next I will provide you the workbook. In that workbook, you will get the practical questions. So totally this is my concept book. As this is a first class, I would like to discuss the index. So first, we are having the accounting basics. Next, double entry system, journal entry, cash book and BRS, capital and revenue transactions, depreciation, trial balance, and rectification of errors, bills of exchange, consignment, etc. These are the topics. These topics are 50% related to CMA foundation itself. We already covered the CMA foundation syllabus once again in the CMA Inter. So because in the CMA foundation, you are going to concentrate only on MCQs, but in the CMA Inter, you will concentrate on practical questions. So easy to overcome this subject. So then after I will discuss about what are the subjects in CMA Inter. In CMA Inter, we are having the two groups. So group 1 and the group 2. In the group 1, we are having the 4 papers. So already you have completed the CMA foundation 4 papers. So related to 1, 2, 3 and 4. Then here continuation papers will be there. So paper number 5, 6, 7 and 8. Paper number 5 is for business law and ethics. Paper number 6, financial accounting. Paper number 7, direct taxes and indirect taxes. Paper number 8, costing. So we are having totally 4 subjects. In these 4 subjects, each subject is for 100 marks. So that means 4 into 100, how many marks? What are the total marks? 400 marks. In these 400 marks, you need to get 50%. That means how much? 200 marks you need to get. So overall 200 marks. And each and every subject you are having a qualifying paper, qualifying marks. That means at least 40 marks you need to get in each and every paper. So 40 into 4 means 160. So 160 plus 40 additional marks you need to get. Totally how much? 200 marks we need to get in each group. In the group 2, we are having the OM and SM. CAA means corporate accounts and audit. FM means financial management and business data analytics. MA means management accounting. So here also the same manner we are going to follow. Each subject is for how many marks? 100 marks. So 4 into 100, that is equal to how much? 400 marks. So here also we need to get how many marks? 200 marks. And again in the each subject you need to get 40 marks. So if you write both the groups at a time, you are having one advantage. What is the advantage, sir? Imagine you are getting 160 marks in the group 1 and you are getting 240 marks in the group 2. That means you are qualified only. Why, sir? Because 160 marks means each and every subject 4 into 40 marks, that is equal to 160. Here in all the subjects you are getting more than 40. So that means if you total 160 plus 240, what is the total marks? 400. So if you get like this also, you will be qualified in the CMA inter examinations. So writing both the groups is a best suitable manner, even though writing a single group. So first, in this batch of CMA inter, the classes are available in 3 modes. So face-to-face, online and live recording. So you can purchase in online. So if in case you are having a distance from your homes, or if you take some of the, as this is a 100% English classes, some of the students may get from the Chennai, may get from Coimbatore, so etc. So those students can also purchase these classes because we are selling in the online also. So these are the subjects. So when come to financial accounting, so this is the easiest paper in the group 1 because we are having the CMA foundation topics. In the previously I have showed you what are the chapters are there in our subject. If you see up to 16, we are having only CMA foundation topics. So even though if you are learn in the CMA foundation, I will discuss once again from the basics. Okay na guys, because I will learn you a different approach of journal entries. Okay na, till now you have followed the traditional approach regarding what are the golden rules. We are having the 3 golden rules: personal account rule, real account and nominal account rule. But we are not going to follow those rules for while writing the journal entries. We are following a different approach. So I will discuss all the things from tomorrow onwards, so no problem. So if you see, easily you can get 80 plus marks in the financial accounting because we are having the CMA foundation topics. Next, when come to the model paper, so paper number 6, a financial accounting model paper, we are having the 2 sections. Section A is having the MCQs. MCQs for how many marks, sir? 30 marks. So they will give 15 MCQs. Each MCQs carrying 2 marks. That is equal to how much? 30 marks. So there is no need to write any explanation for the MCQ. So directly you need to bubble in the examination. So easy to score how many marks? 30 marks. Again, your MCQ, your CMA foundation MCQs, you can see here also. Okay, now easily from 15 MCQs, they will give 10 MCQs from CMA foundation itself. So easily you can score how many marks? So 10 MCQs into 2, that is equal to how much? 20 marks from the CMA foundation itself. Again, what are the MCQs you have already learned in the CMA foundation? Those MCQs only again will be repeated here also. So even though those MCQs are repeating, I will teach you once again, no problem. So because some of the students, they may read or they may not read. So even though they have they will qualify in the CMA foundation. So next, when come to the when come to the section B of descriptive, in this descriptive questions, they will give 7 questions. They will give what ma? 7 questions. In these 7 questions, we need to write only 5 questions in the examination. That means how many questions we are having the choice ma? We are having the 2 questions as a choice. So 5 questions into 14 marks, that is equal to how much? 70 marks is from the descriptive. So how many marks we are having the choice, sir? 7. We're having the 2 questions. 2 into 14, that is equal to how much? 28 marks we are having the choice. So totally the paper we will get from 30 plus 70 plus 28, that is equal to how much? 128 marks. Totally from 128 marks, you need to write only 100 marks. So easily we can score 80 plus, no problem. So this is the overall model paper. So in the section A, we are getting the MCQs. In the section B, we are getting a descriptive questions. They will give the 7 questions. We need to write only 5 questions. So that means 5 into 14 marks, that is equal to 70 marks from the descriptive, 30 marks from the MCQs. So this is the overall information about the financial accounting. So what are the subjects will be there in the CMA Inter. So next, I will show the next we are going to discuss about question paper analysis. If you see the question paper analysis, as I told you, the descriptive question. So already question number 1 will be cover of MCQs. Then after from question number 2 onwards, we are getting the descriptive questions. So 2A we will get from depreciation on the BRS. 2B rectification of errors on capital and revenue. 3A consignment and bills of exchange. 3B leasing and hire purchase. 4 single entry. If you observe this scenario, depreciation and BRS, rectification of errors and capital and revenue, these are the topics you have already learned in CMA foundation itself. How many marks we are getting ma? 7 plus 7, that is equal to how much? 14 marks here. And again consignment and bills of exchange, the same. Once again the CMA foundation topic is for how much? 7 marks. Single entry is a easiest chapter, same like a final accounts. Again how many marks ma? 14. So 14 plus 14, 28 plus 7. So totally 35 marks plus 5 MCQs, at least 5 MCQs, 5 into 2 how much? 10 marks. So if you observe in the overall 100 marks, you are going to get 45 marks from the foundation syllabus itself. How many marks ma? Overall found 45 marks. That means nearly 50 marks you are getting from the foundation syllabus. That means you can score easily 80 plus in the financial accounting. This is my conclusion when come to the student point of view. Now I think so you have got the confidence in my subject and in the Shikhara as well. So first trust the institution, then after trust the faculty. So when come to the my point of view, myself BHANU, I'm accounting faculty, so I'm having a 3+ years of experience so in accounting. So I can taught you CA foundation, CMA foundation, CA inter and CMA inter. So I can taught you the CMA final also. So no problem. So you no need to think anything. Whatever the things I am saying in the class, please follow those things. If you follow those things, you will get exactly 80 plus marks in the financial accounting. If you get the 80 plus in the financial accounting only, remaining 120 marks you can get easily from other subjects regarding costing, regarding law, etc. Okay na guys? So this is my conclusion. If you see next we are having the partnership, branch accounting, insurance claims, accounting standards. These topics you may don't know. Okay na? Even though if you don't know these topics, from these topics we'll get only 50 marks. From those topics we already know about the CMA foundation. From those topics we are getting 50 marks. That means easily 50 marks we are having the knowledge. Okay, now we have to learn only for 50 marks. In that 50 marks we are having the easiest chapters. You can easily to manage to get the 30 marks from the 50 marks. So my conclusion is you can get easily 80 plus marks in the examination. So this is my conclusion when come to financial accounting. So next, if you see the ABC analysis, this analysis will be help you after completion of syllabus. So once if you see, so A category chapters are the highest priority chapters. Accounting standards, from the accounting standards nearly we are going to get 19 to 24 marks. From the partnership 16 to 23, from single entry and NPO 16 to 23. If you see the topics which we are already know, I have put in the category B. Why sir? Because the students are more, we need to give less concentration because we already learn in the CMA foundation. For that reason only I am putting these chapters in the category B, that's all. Okay, now these chapters are much more important. So you need to learn these topics also, but we already learn in CMA foundation. Only for that reason I am putting these topics in the category B, that's all. Even though if you follow these topics, you are getting how many marks? 30 to 38 marks. If you add the single entry also, you are getting some 14 marks extra. So this is my conclusion. Is there any doubts, sir? Is there any doubts? So what is your name? Udbhav. Where are you from? Miyapur. So the students, we are having a lot of students. I may not get to know the so many names. So daily we are going to learn. I will remember one person name. Okay, now Udbhav. So is there any doubts, ma? So what is my conclusion? So how many subjects we are having? We are having the 8 subjects. Sequence from paper number 5. We already complete the 4 papers in CMA foundation itself. So in this, which paper is very easy, ma? Financial accounting. What is the reason? Because what are the topics are covered in CMA foundation? Once again, you are getting for 50 marks. For that reason, you can easily score 80 plus marks in the financial accounting. So I will leave those topics. I will teach once again. I will teach once again those topics. Next, in order to qualify, you need to get minimum 200 marks for each group, and you need to get minimum 40 marks of each paper. That means 160 is not sufficient. You need to get 40 extra marks from the group. If you write both the groups at a time, you are having some advantage. What is the advantage, sir? If you get 160 marks in one group, and if you get 240 marks in another group also, they will add this 40 marks, 40 surplus marks in this group. That means overall you are getting 400 marks. You are qualified. When this advantage you will get only in the situation of while writing both the groups at a time. Next, I will show you the index. I have showed you the index. This index we are getting, first we are going to target the accounting basics. Next, double entry system, accounting principles. So accounting principles we will discuss at last, because after covering of all the chapters, you will get the knowledge related to accounting principles. Next, journal, ledger and subsidiary books. Here the most important topic is subsidiary books. Why is our subsidiary books is more important? Means if you know the subsidiary books only, we can solve the rectification of errors. So there is a linking from one chapter to another chapter. If you know the subsidiary books, then only we can easily solve the rectification of errors chapter. Next one, if you know the capital and revenue transactions chapter, then only you can easily solve NPO, non-profit organization. So there is a linking between one chapter and another chapter. And next, if you know the depreciation, and we need to learn the trial balance. So journal and the ledger is most important topics. Without these topics, we cannot do anything in the accounting, as you know, because These are the basics like alphabets. Without alphabets, we cannot write the words. Without words, we cannot write the sentences. Same manner, so this journal is like a alphabets. This ledger is like a words. Without this journal and the ledger, we cannot do anything in the accounting. That's all. Next, bills of exchange. Already you have learned in CMA foundation. Consignment, joint venture. These chapters are new chapters. Insurance claims, hire purchase, and next partnership accounts, branch and departmental and accounting standards. If you observe, we are having only limited topics of new chapters. What are the limited topics here? Hire purchase 1, 2, 3. This is a old one. 3, 4, 5, 6. Only 6 topics we are having the new topics. That's all. Remaining all the topics are same like CMA foundation. So from the 5 topics, we'll get the 50 marks. For the remaining topics, you will get the another 50 marks. So like this, this is the question paper pattern. I've discussed all the things. So is there any doubts up to here, ma? Just a second. Okay, next. I would like to discuss some of the basic terminologies. In this class, we are going to see the meaning of business. So first, we will learn the terminologies. What are the terminologies are there in financial accounting? You know already. What is the meaning of goods? What is the meaning of services? What are the meaning of capital goods, like that? So you know. So I will explain you. What is the meaning of asset? What is the meaning of liability? So all the topics we are having in this financial accounting. First, I would like to take some small example related to, you know, you will get a clear understanding about what is the accounting means. So just a second. Imagine we are going to start a cultivation of tomatoes. What is our objective, ma? We are going to start a cultivation of tomatoes. So in order to cultivate the tomato, first we need a land. So we are taking a land. So if you observe this one, so guys, if you see here, what is our plan, ma? We are going to plan to start a cultivation of tomatoes. So in order to cultivate the tomatoes, what we have needed, we have needing a one land. If you see here, we are having the land, and next we are taking a land for a rent. We are taking a land for a rent. So imagine we are taking a rent that is equal to 1 lakh. So imagine we are taking the rent as 1 lakh. I think you know the numbers. So I will teach you once again. This is called as 10 rupees. This is called as 100 rupees. If you put the 3 zeros, this is called as 1000 rupees. And next, if you put the 4 zeros, this is called as 10,000 rupees. So you need to learn about the commas, how to put the commas, sir. From backside onwards, from if for every first we need to put the first comma for the 3 zeros, then after for every 2 zeros we need to put the comma. Next 1 lakh, how to write the 1 lakh ma? So 5 zeros means 1 lakh. So from backside 3 zeros and again for 2 zeros. Next we need to write the 10 lakhs. How to write the 10 lakhs ma? For the 10 lakhs we are having the 6 zeros. So 1, 2, 3, 4, 5 and 6. So 3, 2. So like that we need to put the commas. After 10 lakhs we are having the 1 crore, 10 crores, 100 crores like that. So 1s, 100, 1000, 10,000, 1 lakh and 1 crore. 10 lakhs and 1 crore. So why sir, why you are teaching once again? Because some of the students may don't know the numbers also. If you put the commas like this, at that point of time we can eliminate the mistakes in the examination. If you're not putting the commas means instead of 10 lakhs we may take only 10,000, or instead of 10 lakhs we may take 1 lakh, or instead of 1 lakh we may take what 10 lakhs like that. If 1 zero is missing means the total answer will get differ. So as you know already, you have seen the final accounts. In the accounts, what is the main point ma? We need to tally the balance sheet. Why the students are not telling the balance sheet? They know all the things, they know all the adjustments. Even though they know all the adjustments, sometimes what will be happen because of these mistakes, if you're not putting the commas means instead of 10 lakhs we may take what 1 lakh. While adding all the things, in order to add the 10 lakhs we have added only how much 1 lakh. At that point of time balance sheet will get tally, yeah, will not get tally. Once again we are going to calculate, we need to calculate from the beginning onwards. So because it may be get a lot of mistakes, so that put the commas and avoid the mistakes in the examination. Okay na guys, so what is our plan? We are planning to cultivate the tomatoes. So for the cultivation of tomatoes we need a land. We have taken a rent for the land. We are paying 1 lakh. We are paying how much? 1 lakh. Next we need a tractor. So imagine we are not having any tractor also, we have taken a rent. So again for tractor of rent, how much we can take ma? We can take 50,000. For land we are paying how much? 1 lakh. For tractor we are paying how much ma? 50,000. Why we need the tractor ma? Because to even the land. The lands will be uneven. In order to cultivate, for the cultivation purpose, we need to get the even land. Okay, now for that purpose we need to take the tractor as a rent. Next we need to take the workers. So we cannot do directly cultivation, we need the help of what ma? Workers, daily labor we can take. So we are paying the labor. What will pay the labor ma? For labor we are going to pay wages. What is the meaning of wages and what is the meaning of salaries? Wages means for daily. If we are paying the daily payment means it is called as wages. We are paying the monthly payments means it is called as salaries. Sometimes we can call it as salaries what ma? Remuneration based on the preferences. For example, if you are paying for example, after completion of your CMA inter, you may go to the articleship. At that point of time, what you are getting, okay now, if you are paying something, for example 10,000, that thing we are going to call it as what? Must try fund. Okay now, there are the different names we are calling. If you pay the monthly means it is called as a salary. If you pay the daily means it is called as what ma? Wages. The salary sometimes we can call it as what? Must try fund. Sometimes we can call it as what ma? Remuneration, like that. So if you see the NPO chapter, we are going to call it as what ma? Honorarium. You can call it as what ma? Honorarium. Same like what ma? Salaries. So for labor we are paying 2 lakhs. For labor we are paying how much ma? 2 lakhs. After cultivation, after waiting for 6 months, what we will get ma? We'll get the tomatoes. After getting the tomatoes, we'll simply put the tomatoes in our home, or otherwise we are going to market for sell. We'll go for the market to sell the tomatoes. After selling the tomatoes, imagine we have got 8 lakh rupees. How much we have got ma? 8 lakhs. So this sales is called as nothing but revenue. The sale is called as nothing but what ma? Revenue. Sales is nothing but revenue. So we have incurred certain expenses. What are the expenses we have incurred? rent, rent for the land, rent for the tractor. Next one what ma? Labor. Next, we can use some fertilizers. For the cultivation, we can use what ma? Some fertilizers also. So what is the total expenses ma we are having? 1 lakh plus 50,000 plus 2 lakhs. Totally how much ma? 3,50,000 rupees. You have incurred what ma? This 3,50,000 rupees, we are going to call it as expenses. We are going to call it as what ma? Expenses. So here we have got the revenue how much? 8 lakhs. So incur the expenses how much? 3,50,000. What is the difference ma? Difference means 8 lakhs. So don't forget to put the commas. Minus 3,50,000. How much amount we are getting? How much ma? 4 lakh. 4,50,000. This 4,50,000 is called as profit. Is called as what ma? Profit. 3,50,000 is called as expenses. 8 lakh rupees is called as revenue, and 4,50,000 rupees is called as a profit. In which situation we will get the profit? Revenue, nothing but revenue is also called as what ma? Income. Revenue is also called as what ma? Income. So if the income is more, if you see here, income is more, expenses is more amma. Income is more. The situation of income is more than expenses, we will get what ma? Profit. In the situation of income is less than expenses, what will get ma? Loss. So I will explain you here clearly. Income is more. I think you know this symbol. So this is called as less than or greater than amma. This is called as less than. So will be in which form? L form. Like L, the symbol is called as less than. This is called as what ma? Greater than. Here the income is greater than expenses. Income is greater than what ma? Expenses. In this situation, what we will get? Profit or loss? We'll get the profit. It is a general meaning. Okay, now even though if you don't know the accounts, you know this meaning. Yes or no ma? We have, after selling the market, we have got the 8 lakhs. For that we have incurred the expenses how much ma? 3,50,000 rupees. What is the difference? 4,50,000. We are getting a profit or loss? We are getting a profit. In the same way, if you see here, the income is less than expenses. That is equal to what ma? We'll get a loss. These are the basic rules. Even though if you don't know the accounts also, you know. The same thing we are going to do in the accounting also, but in a different manner. That's all. We are putting these things in a one particular account. Okay now, what are the things we have discussed here? We have taken the expenses. What are the expenses we have taken ma? We are taking expenses like rent, labor, wages, etc. And we have got the sales revenue, nothing but after selling the tomatoes in the market, we have got the income. The same, if you take these expenses and incomes, we are trying to put in one account. I think you know already. Account in which form ma? Account will be in T form, which is a T shape. In the T shape, left hand side we are going to record the debit record. DR means what ma? Debit record. And right hand side we are going to record the credit record. So debit record and credit record. I think already you know the golden rule of nominal account. What is the nominal account rule? Debit all expenses and losses, credit all incomes and gains. The same thing I am following here. What are the expenses we are having ma? We are having the two expenses. What are the two expenses? First one is called as rent. How much rent we have incurred? Incurred the rent of rupees 1,50,000 rupees. Next we have paid the wages. How much wages we have paid ma? We have paid it 2 lakhs. Next Income na. Income which side we need to record ma? We need to record on credit side. I'm going to write the revenue. How much revenue I have earned ma? I have earned 8 lakhs. So here if you total it, how much amount ma? 8 lakhs and the 8 lakhs. Then what is the different amount? 4,50,000. This is the profit. If you show like this is called as accounts. What are the things we already know in future before accounting? We know the incomes are more than expenses means it is called as profit. Our expenses are more than income means it is called as what ma? Loss. We know. We are putting those things in one particular account is called as, this particular account is called as what ma? Generally we can call it as P&L account. Okay na? If even though if you don't know anything also I will learn you, no problem. So this account is showing what ma? P&L account. Okay na? Whatever the information we know in general cases, I think in our fathers, if you take most of the families, we are doing what ma? Cultivation itself. We are putting some expenditure, we are getting some income. So our father also will do the same calculation, different calculation, same calculation, but our fathers will prepare the account, will not prepare the account. Our father will not prepare any account, but they will do the rough work. They will do the rough work. That rough work we are putting one particular account is called as accounts. Is called as what ma? Accounts. Who said to put like this, sir? What is the rule we are following? What is the system we are following? We are following the double entry system. We are following what ma? Double entry system. These are the rules and regulations we need to follow here. That's all. So accounts is a simple topic because the same rules and regulations we need to follow. So as you know already in the CMA foundation itself. Is there any doubts regarding to this? What is our plan? We are planning to cultivate the tomatoes like that. So is there any business idea you are having? What is your name ma? Akash. Is there any business idea? There is no business idea of, okay na. After completing of CMA, what we will do? What we will do? We will do only CMA audits, that's all. That's all. There is no planning to do business. Is there any plans to keep institute? Okay. Are you planning to start the institute? Okay. We are planning to start the institute. Which institute? So shall I take this building? This building is sufficient for you. Okay. I am taking this building. Okay. Imagine you are taking a rent. Initially you will take what ma? You will take the rent, building rent. How much amount shall I take? By way of seeing this building, I think around 2 lakhs. Okay na? Rent for a building 2 lakhs. Okay. After that, what do you need? This building is sufficient. Okay. What are the expenditure you need? Okay. Furniture. Furniture. We are okay. Okay. You are purchasing the furniture. Okay. It will take around 5 lakhs. Okay, furniture means including benches, fans, lights, air conditioners, tables, laptops, recording systems. All this will come under the furniture itself. Okay, next. We need to pay the salaries to the staff. Okay, we are paying the salaries. How much amount shall I take? Okay, we are planning to start the foundation initially. Okay, in the foundation, how many subjects we are having? 4 subjects. 4 subjects, each faculty batch wise we are paying. Let us take the 1 lakh. So how much amount we need to pay? 4 lakhs. Okay, 4 lakhs amounts regarding to the faculty salaries. That's all. We need to give the advertisement. Okay, now we need to give the advertisement. Without the advertisement, we cannot bring the students to the classes. So imagine for a advertisement, we are paying 1 lakh. We are paying how much more? 1 lakh. Okay, then after That's all. You need to pay the electricity bills. You need to pay the electricity bills. So for electricity, we may incur 1 lakh. We may incur how much, ma? 1 lakh. Okay, next. Building rent completed. That's all. Okay. Next, after selling the foundation classes, imagine we have started the foundation classes. So we are having the luck. Okay, na? Totally, you have started the batch with 100 students. With how many students we have started the batch, ma? 100 students. How much amount of fee we can collect? Okay, let us put 10,000. 10,000 total foundation. How much? 10,000. So 10,000 into 100 rupees. That is equal to how much? 10 lakhs. 10 lakh rupees we are going to collect from in the form of fees. Can I call this as income? This is called as income. We have incurred certain expenditure, but here the furniture will not come into the picture of expenses. Okay, now except furniture, remaining all we can concluding it as what, ma? Expenses. So how much expenditure we have incurred? 2 lakhs plus 4 lakhs plus 1 lakh. How much, ma? Up to here 7 lakhs plus 1 lakh, 8 lakhs. Totally we have collected total income is equal to how much, ma? 10 lakhs. Total expenses is equal to how much, ma? 8 lakhs. So in this situation also, again, incomes are more, expenses are more. Incomes are more. That means 10 lakhs minus 8 lakhs. That is equal to how much? 2 lakhs. This 2 lakh is called as again profit or loss, ma? Again it is called as a profit. Okay, now. So generally we will find out the profit in which account, ma? In P&L account we will find out the profit. These expenses we can record on which side? Debit side. Incomes we can record on which side? Credit side. Because as per which rule? Nominal account rule. You know already. So this is the simple in the simple way we are going to follow all the types of accounts in each and every chapter. The same rules and regulations we are going to follow. That's all. So next, so what we need to do, sir? So we are having the assets and we are having the liabilities. So what is the meaning of assets, sir? Asset means we are purchasing any product for user for resale, for use. We are going to use that particular product. That's all. With an objective of resale means that product is called as a good. For imagine we are running one organization. We are running one electrical shop like what, ma? Like we are having the Sony camera shop. Okay, na? In that Sony camera shop, the cameras are called as what, ma? Goods. Because we are purchasing the products for with an objective of what, ma? Reseller for user for resale. Imagine if you are using one camera for your own purpose, that camera is called as what, ma? Asset. So anything we are utilizing the product in order to generate the future revenue. In order to generate the future revenue. For example, if you take the camera, we are using that camera. With the help of that camera, we are recording the classes. Okay, now after recording the classes, what we will do, ma? We will sell the classes. After selling the classes, we can generate the revenue. So anything we are using with the help of that particular product, we need to generate the future profits, means it is called as asset. So these assets and liabilities. What is the meaning of liability, ma? Liability means anything what we need to repay in future. Anything what we need to repay in. For example, for starting, imagine we are not interested to take the building as a rent. We are in a thought process of we need to purchase the rent. We need to purchase the building. In order to purchase the building, we are having funds. We may not have funds. That situation, what we will do, ma? We will take a loan. We will take a loan. Okay, now taking a loan. After taking the loan, you need to repay na, you don't need to repay na, you need to repay. So the taking a loan is called as what ma, liabilities. With the help of this with the help of that assets and liabilities, we can find out the financial position. What is the meaning of financial position, sir? Means uh, we are uh, we are in a capability of doing the business, we are in a not capable of doing the business, that means we can concluding it as what ma, solvency position, insolvency position, whether we are in a good position or bad position. You can decide by on the basis of what ma, assets and liabilities. Based on incomes and expenses, what you can decide, you can decide the profits or losses. If the income is more, we will get the profit. If the income is less, we will get the losses. Assets and liabilities are useful to find out the positions, whether we are in a good position or bad position. Good position means it is called as a solvent position. Okay, now good position means what ma, we need to have more assets or more liabilities, we need to have more assets. If the assets are more means we are in a good position, the liabilities are more means we are in a bad position. Okay, now you can concluding it like that. We know the positions from the preparation of which account, which ma, balance sheet. By way of the preparation of balance sheet, we can identify the positions, whether in a good position or bad. Okay, na, don't think yeah, this is a first class, I am saying so, I am saying so much. So these are the basics, these are the simple topics. From next class onwards, I will discuss about the journal. Okay, na, at the starting of the class I have told you, we are learning the journal entries in a different approach. We are not going to use the 3 golden rules, but we are going to use some another approach, easiest approach. I will teach you that approach in the next class. So in this class, I'm going to conclude this class. This class, what are the main things you have to remember, ma? You need to remember these things. Sir, you need to attend the regular classes. If you attend the classes, you can listen the classes. Otherwise, you can listen. Otherwise, you cannot listen. Even though if we are going to provide you the backup classes also, if you regularly attending, and you need to study the cumulative revisions. You need to do what ma, cumulative. What is the meaning of cumulative revisions, sir? Cumulative means, so once today's topics was completed, you need to revise the yesterday's topic also. If you revise the cumulative revision, then whole the concept you can study in one day. Otherwise you cannot study in one day. You need to prepare the summary notes. Okay na, if you see our book, in our book you will get what ma, concept book, at least around 80 pages it will be there. Again workbook around 120 pages. Total how many pages ma, 200 pages content you can study in one day na. You cannot study in one day. So what we need to do ma, from the starting the onwards, you need to revise. You need to revise. How you need to revise? Cumulative revision and normal revision. Cumulative. First you need to study the 2 days topics, and then again you need to revise the yesterday's topics. Like that, if you continue means you will get a good marks. Okay na guys. Next, you need to attempt the weekend examination which are conducted by the institute. Okay na. So you need to write the weekend exam. If you write the weekend examinations, then I can understand, are you are getting my my way of explanation, or you are trying to put on the paper. So while practicing the accounts also, you should not see the account. Okay now, you need to try to practice. If you practice more number of times, then only you can solve the question in a less time. Okay now guys, so imagine the 7-mark question we need to solve in only 10 minutes. Okay now, so if you practice, then only you can solve in 10 minutes. Otherwise it will take so much time. Okay nama, so remember, you should not forget to put the commas. Okay nama, if you forgot to put the commas means end up we are getting what ma, wrong answer. Okay na. So next one, you need to develop the positive thinking every day. Okay, I will be pass, I will get clear the examinations. Okay na. So don't listen to anybody's words. Okay na. If you are coming the classes regularly, you are revising the syllabus and you are writing the examinations means you are getting the concept or not getting the concept, you will get the concept. So don't mug up the subjects, try to learn the concept. If you learn the concept, then only we can write in the examinations. Because what ma, as this is a competitive exams, the questions, if you take how many questions we need to write ma, 5 questions. In these 5 questions, one question we may get from out of the book. At that point of time, how you can solve? If you know the concept, you can solve it. Otherwise you can solve it, no, we cannot solve. Okay na, because these are professional exams or degree exams. These are the professional exams. You may get questions from outside, we may not get, we may get questions from the outside also. So please, what you need to do, you need to learn the concept and you need to try to come the classes regularly. Okay, if you are having any health issues means, that's fine, no problem. So next, every day you need to revise and you need to write the weekend examinations. After completion of every weekend examination, I will provide you the guidance. Okay now, in this way, okay, you are doing this type of mistakes, I will conclude you, I will tell you, no problem. First, you have to trust the college and you have to trust the faculty, then only we can achieve the more and more. Okay now, our materials is sufficient. Okay now, whatever the content is there in the CMA material, those content we have incorporated. Not only the content in the CMA material, we also added the previous examination questions. We also added the MQPs and MTP questions. All the questions will be covered in our book itself. You no need to study any other book regarding CMA Institute or some other faculty books. You no need to refer. Okay, Nama. These books are sufficient. Next, develop the positive thinking. Next, you need to aim for the rank. So from today onwards, okay, we are going to get the rank. Okay, now what is your aim? We are getting the rank. Our aim to clear the subjects. Our aim to get the rank. If you follow these 3 steps, you can get easily what rank in the future. So try to write the both the subjects. So don't write the group 1 in December attempt. So my preference, my suggestion, my personal suggestion is you have to write the both the subjects in June 2026 examinations. Or if you want, you can write. Okay, now you can write in December attempt what group 1. Group 1 will be completed in 3 months. Okay, now then after you will get what 1 month preparation. In that 1 month, we are going to provide you the revision exams. And next revision once again we are going to provide you the revision classes. The whole concept which we have discussed in 3 months, the 3 months concept we are trying to discuss in 8 hours or 10 hours. Okay, now in that 10 hours we are going to revise all the topics. That revision will also be going to help you. We are going to conduct the revision exams. With that help of that revision exams, you can write what group 1 in December attempt. But my personal suggestion is you need to write the both groups at a time, then only what will get ranks. If you get the rank, you will get a great package in the campus placement. Okay, Nama. So even though if you are not getting the rank, you will select in the campus placement. But if you get the rank means it will be a more package when compared to the other people in CMA. So after clearing the CMA, we're having the so many opportunities. So don't think or don't underestimate the CMAs than the CA. So we are having the equal importance with the CAs and CSS. Okay, now. So you have joined the best course. So trust on you. So believe in yourself. So please develop the positive thinking. Okay, now. So this is my conclusion. In today's class, I have completely discussed about the papers, ABC analysis. So what is the main objective? We need to get how much? 80 plus marks in the financial accounting. Easily we can get a difficult easily we can get. What is the principles are here? The topics which are there in CMA foundation, those topics, from those topics we are getting how many marks? 50 marks in the CMA inter once again, and remaining 50 marks we are going to learn the new topics. How many topics we are having? Only 6 topics of new topics, that's all. Those topics also easy. So once again I will start with the basics but in a different approach. Okay, now guys, so this is the overall information. Is there any doubts? No, no? Okay, sir. Thank you. Have a nice day. Bye bye. Okay. The previous class we have detailedly discussed about the question paper pattern. So we are having how many sections? 2 sections. In the section A we are having the MCQs, and in section B we are having the descriptive questions. Totally they will use 7 questions. We need to answer 5 questions. So each and every question they will ask for 14 marks. So 5 into 14, 70 plus MCQs. 30 marks. So we are not going to have any negative marking. So each MCQ is carrying 2 marks. So we no need to write any explanation also. Directly we can bubble. That's is sufficient. Same like foundation. What you have done, they will give the OMR sheet. And in the same manner, here also they will give OMR sheet in front of the booklet. Okay, now in front of the booklet they will give the OMR sheet. You need to bubble it. You should not write the ABCD like that in the in our answer sheet. You need to bubble. So please remember, if you write the ABCD like that, they are not going to value anything. You know? So in this class we have started the discussion of terminologies of accounting. So we are having the principles. So generally in accounting in India we are having the principles of generally accepted accounting principles. In this, one of the main principle is called as separate entity concept. What is the concept? Separate entity concept. As per this concept, what this concept is saying means owner is a different person and a business is a different person. Imagine, for example, as per this concept, owner is a different person and business is a different person. What is the meaning of this one, sir? So I will take one example. With the help of that, we can understand. Imagine he is a owner of the business. He is trying to start the business of so he trying to start the business. So he is a owner. This is a business. In order to start the business, what we need? We need an investment. So owner gives the investment to the business. Owner gives the investment to the business. Imagine the investment value at the rate of 10 lakhs. How much investment he is making? 10 lakhs. This 10 lakhs we are going to call it as what, ma? So as per accounting, this 10 lakh is called as nothing but this investment, this total investment we are going to call it as capital. The total investment is going to call it as what, ma? Capital. Not only in the form of cash, owner can bring in the form of goods or in the form of assets. I think you know what is the meaning of good. Good means what, ma? Any object or commodity which an objective of resale, whether we are purchase or whether we manufacture. For example, some of the businesses having the manufacturing businesses. For example, if we take the Reebok company, what they will do, ma? They will manufacture the bat and they will sell. So what is the ultimate objective of Reebok company? In order to resell the product or in order to use the product, in order to resell. Imagine we are having a electrical business. So we are having the laptops, cameras like that. So what is our objective? Our objective is to resell the cameras or to resell the laptops. So that here the laptops and cameras are called as goods. But if you take any manufacturing companies of cars, example Kia Motors, Indian company. So what the Kia Motors is doing, ma? They will manufacture the car and they will sell the car. So here the ultimate objective is to resell or use. Ultimate objective is to resell. For example, we have started the business of Kia Motors. We have manufactured the car and we are using that car. We are using that particular car and then we are selling it. and then we are selling. Whether this is called as good or asset ma, in that situation that car is called as an asset. Because why? We have directly resold, we have used and reselling, we have used and reselling. At that situation, we are not going to call it as good. That one is called as what ma, asset. Okay, I will say the examples, no problem. At this point of time, this is called what ma, capital. What is the meaning of capital ma? Anything, okay na, anything bring into the business by the owner is called as what ma, capital. Anything means what ma, he can bring in the form of cash, he can bring in the form of goods, so or he can bring in the form of any other assets other than cash. So, other assets, here cash is also called as what ma, asset only. Cash is also called as what, asset. If you bring any other asset also into the business, you are going to call it as what ma, capital itself. So here we need to repay the capital to the owner. We need to repay means each and every situation in the accounting point of view, we means business. We need to think in the every situation of accounting from the point of view of business. So why we need to think from the point of view of business ma? Because of which concept? Separate legal entity concept. What the separate entity concept is saying, owner is a different person and business is a different person. Accounting will be done from point of view of business, but not the point of view of owner. Okay now imagine we are doing the accounts means, so we means what ma, we means business or we means owner, we means business. Always we means what ma, business. So the owner given, imagine owner given cash of rupees how much, 10 lakhs. That means owner given, owner means what ma, he is a separate person, we are the separate person. Okay na, that means anything, for example you have given 10 lakhs to me, I need to repay na, no need to repay na, I need to repay because you are a separate person, I am a separate person. Here I am taking my example. I means what ma, business, you means what ma, owner. You are given how much amount, 10 lakhs amount to me, so I need to repay na, no need to repay na, I need to repay. So in future the capital need to repay, in future the capital need to repay to the owner. So business need to repay capital. So anything we need to repay means that situation, that point is called as what ma, liability. Where the capital is called as asset or liability, capital is called as liability. What is the meaning of liability? Anything what we need to repay. We means what ma, obligation to repay. We means what here? We means business. Anything business need to repay, obligation to repay in future is called as a liability. What is the meaning of asset, sir? The asset means, okay, we can discuss some other point of time. So here we have started the discussion with what ma, gap. Gap means what ma, generally accepted accounting principles. These principles we are following, we will follow only in India ma. Okay na, okay na. In America we are not going to follow the generally accepted accounting principles. Here only in India we are following what ma, generally accepted accounting principles. So in that principle, one of the principle is called as what ma, separate entity concept. What the separate entity concept is saying, owner is a different person, business is a different person. For that we need to think always from whose point of view, business point of view. So anything owner given means it is called as what ma, capital. It is called as what ma, capital. So owner can give cash, goods or any other assets. Okay na. So capital we need to repay, so that the capital is called as asset or liability. Capital is called as a liability. So what is the meaning of business, sir? Okay, you are saying the business. We understand the concept of what ma, owner. Owner means nothing but proprietor. We can call it as what ma, proprietor. If any person who has started the business is called as owner. For example, next one. So we are going to discuss about what ma, meaning of business. What is the meaning of business, ma? So can you say what is the meaning of business? Meaning of business. It is an economic activity to earn the profit. In a simple understanding, okay, na, in my class, a place where goods are exchanged and services are rendered. A place where goods are exchanged and services are rendered. So this is a called as business. For example, if you take the shikharatutorials, here what we are doing, we are providing the services, we are providing the goods, we are providing the service. So this place is called as a business or not? This place is called as a business. So here we need to understand the two meanings. What is the meaning of goods and what is the meaning of services? What is the meaning of good, ma? Okay, now an object or commodity, an object or commodity purchased or manufactured with an objective of with an objective of resale or use, resale, an objective of resale. So here the object or commodity, nothing but what, ma? If you take the example of electrical items, so recently only I have taken example, what, ma? What we are doing, we are purchasing the cameras and we are reselling the cameras. At that point of time, the camera is called as asset or liability. It is an asset or good, ma? Good. Okay. Next, I am taking certain examples. You need to decide whether it is a good or not. Okay, na? Example. We have started mobile business. Okay, now in this, goods are called as what, ma? Nothing but mobiles. Mobiles are called the goods. Here what we are doing, ma? Here mobile can be purchased and resale. So purchased means what, ma? Anything we have purchases means that is nothing but purchases. So we have purchased and resale. Next, this mobile can be, what we can do? We can manufacture and resell. We can manufacture and resell, or we can purchase and resell. These are the two objectives. But what we should not do, ma? After using we can sell the, no, after using we cannot sell the particular item. After using we are selling means it is called as asset. Okay, na? So we should not do what we should not do, ma? Use and resell. We should not do the use and resell. Okay, imagine in the mobile shop we are having the second hand mobiles. Second hand mobile means what, ma? We are purchasing the second hand mobile, so some other person. For example, here we are having the shop. We are not purchasing the new products. We are purchasing the used product from some other person. Imagine Mr. X. Okay, na? Mr. X is selling used phone to the shop or business, and then what we are doing, we are selling to some other person, Mr. Y. We are selling to some other person whom Mr. Y. In this situation, this mobile is called as second hand mobile or fresh mobile amma. Second hand mobile. Are you understanding the concept? Already Mr. X used the phone. X used the phone and then selling to us. And again what we are doing, we are not using that phone directly. What we are doing we are selling to some other person. In this situation, the second hand mobile is called as good. Okay now, but what we should not do after purchasing the mobile from that particular person, which person? Mr. X. Okay now, and then we are reselling to Mr. Y. After using that, we are reselling means that particular thing is called as an asset. Or understanding the total concept. In some situations, we are having the second hand goods also. So even though any good you have to purchase and you have to resell directly, you should not use in middle of the situation. If you use that particular item, so that particular item is called as asset. Okay, now what is the meaning of asset, sir? Asset means, so with the help of asset, we can generate the future economic benefits. Okay, nama. So we are using the camera. What we can generate with the by using the camera, we can record the classes. Okay, now after recording the classes, what we can do? We can sell in the market. After selling in the market of recording classes, what we will get? We'll get the revenue. So we are using the camera for the purpose of generation of future revenue is called future revenue or income is called as an asset. Okay, nama. So this is how we have completed the discussion of meaning of good. So what is the meaning of good, ma? An object or commodity purchased or manufactured with an objective of resale. So we have started the mobile business. Here the mobiles are called the goods. So we can purchase and we can resell, or either we can manufacture and resell. But what we should not do, we should not do the use and resell. In some of the situations, we may get what second hand mobiles. Even though if you sell the second hand mobiles also is called as a good. But that particular second hand mobile we should use or we should not use, we should not use in any situation. We should not use in any situation. So next we are going to discuss about the services. So we are having the some services oriented organization. What are, can you say any examples, ma? We're having some for example, education institute. If you take the Shikara, you are providing the services or goods, you are providing the services. Okay, now if you sell the materials means goods. Okay, now if you take logistic businesses, if you take bus services, Morning Star, okay, now these are all called as what, they are providing the services, they are providing the goods, they are providing the services. Nowadays what we can do, we are having certain apps like what, if you we want a plumber service means we can book in the app. Okay, na easy. So they are providing the services, they are providing the no broker. Yes, no broker app. In that no broker app, what we can do, we can if you want plumber services means we can book the plumber services. So carpenter services, like that. They are providing the services, they are providing the goods, they are providing the services. So a place where goods are exchanged and services are rendered is called as a business. So till now we have discussed the concept of capital. So capital means what, ma? Anything investment made by the owner into the business. Anything means cash, goods or assets. So we need to repay, na? We no need to repay, na? We need to repay in future. We are having a obligation to repay, so that anything obligation to repay for the business means it is called as liability. Okay, na guys? So up to here we have discussed the concept of liability, the concept of capital, the concept of owner, business, goods, etc. Next I am going to discuss about drawings. I am going to discuss about the concept of drawings. What is the meaning of drawings? You already know. An amount withdrawn, and not only the amount. Okay, now he can take over the goods, he can take over the assets from the business. So anything taken over by the owner from the business is called as a drawings. So anything taken over by the owner from the business is called drawings. Okay, now let me take an example. So he is a person. We need to start the business. So which business we have started, ma? Imagine the mobile business we have started. Imagine we have started the mobile business. So here what we are going to do, we are purchasing the mobiles and we are selling it, or either we can manufacture the mobile and we can sell. So in order to start the business, so we are making investment of how much? 10 lakh rupees. This 10 lakhs is called as capital. We already discussed. So that means how much amount we need to repay to the owner? We need to repay to the owner 10 lakhs. Now, so imagine we are in a February 14. What is the date, ma? Today's date? April something. We are in a situation of what, ma? Imagine today's date is 14th February. What is on this day? What is the occasion? We are having the Valentine's Day. So we are doing the mobile business. So what the owner is doing, ma? Owner is having one girlfriend. So he need to give gift to the girlfriend. He need to give gift to the girlfriend. So okay, just a second, ma. So he has invested the 10 lakhs. So he has taken away the goods. He has taken over the goods. Mobile costing mobile cost of rupees 1 lakh. Okay, na iPhone. So which thing he has taken over, ma? iPhone. So that means we need to collect amount from owner. So this is called as, he has taken away the mobile costing how much? 1 lakh. This is called as drawings. This is called as capital. This is called as drawings. Here the owner taken away the goods, cash, goods. Even though if we take the goods, or even though if we take the cash, even though if we take any asset from the business, it is called as drawings. So netly, net effort. What is here the net effort having? So he has invested 10 lakhs and he has taken over the 1 lakh worth rupees of good. That means how much amount we need to repay now? Now we need to repay only 9 lakhs. So how did we get the 9 lakhs, ma? 10 lakhs minus 1 lakh. Yes or no, ma? If you do like this, how much amount we are getting? 9 lakhs. So what you are doing here, from the capital, you are reducing the drawings or increasing the drawing sum? You are reducing the drawings. Then this capital is called as, we are going to call it as opening capital. This capital is called as what, ma? Opening capital. Nothing but initial capital we can call. Then what? Then 9 lakhs rupees is called as closing capital. We are going to call it as, the 9 lakhs is called as closing capital. 10 lakh is called as opening capitals. So we are having some other adjustments. I will discuss one by one. Okay, now. So till now we have discussed the meanings of capital, drawings, goods, services, business, assets, and liabilities. Okay, now meanings we are learning. So in the next class we can discuss about what, ma? Types of assets, types of liabilities, like that. Okay, next I'm going to discuss some other concept called as interest on drawings, interest on capital. Okay, now guys. Okay. Before that, I will discuss one example. After that, you can understand about the interest on capital and interest on drawings. Okay, now. So imagine business. Here is the business, and we are having HDFC Bank. We have taken a loan from the bank. What we have done, ma? We have taken a loan at the rate of rupees 1 lakh. Okay, na? So this loan we need to repay, na? No need to repay, na, ma? We need to repay. We are having obligation to repay. So the loan is called as asset or liability. Liability. Okay, na? On this loan, what we need to pay, ma? We need to pay the interest. Okay, na? Every year we need to pay what? Interest. So we need to pay the interest to the bank. Imagine interest at the rate of 12%. Imagine interest at the rate of 12%. So 1 lakh into 12% means how much? 12,000. This 12,000 we need to repay, na? Or bank will repay to us. We need to repay or we will pay. Every year we are going to pay. So this 12 lakh is called as nothing but what, ma? Interest. This interest is an expenses towards the income. It is an expenses or income. It is an expenses because we are paying, a bank is paying to us. We are paying to the bank. This is called as expenses. Nothing but this interest is nothing but interest on loan. Interest on loan. Okay, now we have taken the loan. We need to pay to the bank is called as interest on loan. It is a expenses income. It is an expenses. So now the same concept is applicable for interest on capital also. The same concept is applicable for what, ma? Interest on capital. Now imagine here the owner or here business only. Imagine here the business and we are having the owner. Now owner is making investment to us. Yes or no, ma? He is giving a capital. He is giving a capital. Here the capital is asset or liability, ma? Liability. On this liability we need to pay what? Interest. This interest is called as interest on capital. Okay, na? This interest is called as what, ma? Interest on capital. So for us the interest on capital is an expenses or income, ma? Expenses. Expenses, ma? It is not an income. Interest on capital is a expenses. Okay, na? Because we need to repay, na? Owner need to repay, na? We need to repay. We need to repay to the owner. We need to repay to the owner. So that interest on capital is called as expenses. Interest on capital is an expenses. Even though it is an expense, we are not going to repay to the owner. We are going to repay, we are not going to repay, amma. We are not going to repay to the owner, but just we will add back to the capital. Just what we will do, ma? We will add back to the capital. In future we will repay. Okay, now when we will repay the capital, ma? At the time of winding up of business. Okay, now without the capital we can do the business, we cannot do the business. We cannot do the business. If we want, okay, now he is not going to get any salary. For example, he is working means what we will pay? We will pay the salary. But he is working, he has made the investment. He has made the investment for his daily needs. Okay, na? What he will take, ma? He will take the drawings. Okay, na? Drawings means nothing but what, ma? Whatever the uses he is having, he will use from by way of taking the cash from the business. Or if you want goods means you have started the grocery shop. What we will do? We will take from our shop or we will purchase from outside. We will take from our shop. Okay, now uses can be for use we can give the money. Okay, now directly we are going to repay the capital. So without the capital we cannot run the business. Without the capital we cannot run the business. So that what we will do? Okay, we need to repay to the owner. It is an expenditure. Okay, I can understand. But in the accounting point of view, what we will do the adjustment, ma? For the capital we are going to add back the interest on capital. Okay, now because we need to repay to the owner, owner need to repay to us. We need to repay to the owner. Okay, now capital is also we need to repay, na? Owner need to repay, na? We need to repay. Interest on capital also we need to repay, so that we can add, we can less. we can add okay na. Drawings we need to reduce, we need to increase, we need to reduce, okay na. Capital minus drawings plus interest on capital, okay na guys. So next, in the same way, if you take the interest on drawings, minus a plus a minus, because why ma, interest on drawings also who need to repay, owner need to repay to us, owner need to repay to business. So okay na. So here what is the statement we will get, sir? The statement of capital. So you need to remember the statement of capital. What is the statement of capital, sir? Particulars. And amount rupees. So we are starting the capital. That capital is called as nothing but what ma? Opening capital or closing capital? Opening capital. So opening capital so we are not taking any example. So opening capital. For this opening capital, what we need to do? We need to reduce the drawings. So minus drawings. Next, what we need to do ma? Interest on capital. What we need to add? So we need to do add interest on capital. So in bracket you can write expenses or income amma. Expenses. Next, minus interest on drawings. Interest on drawings, income or expenses amma. Income. Who will repay to us? Owner need to repay the drawings and owner need to repay the interest on drawings. For that reason, what we are doing? We are reducing the capital. So we need to reduce it. For example, okay, in the middle of the business, we are not having any sufficient capital. What we will do? We will bring again the capital. That capital is called as additional capital. Okay, now again the additional capital. We need to repay now. Owner need to repay us. We need to repay. So we need to add or we need to less. We need to add. So we need to add additional capital. Need to add additional capital. Then we will get the ultimate result. That result is nothing but what ma? Closing capital. So in this class, we have discussed the complete discussion about capital. First of all, what is the meaning of capital? Anything which is brought by the owner into the business. So whatever the things he can brought he can bring the cash, he can bring the goods, or he can bring the any other assets. Okay now, so we need to repay to the owner, so that we are having obligation to repay. So capital is called as a liability. Next, what is the meaning of drawings? So anything taken away by the owner from the business is called as a drawings. Okay now, drawings means we need to repay na, owner need to repay na, we need to repay. So that we need to reduce or we need to increase, we need to reduce from the capital, because we are not going to repay directly. So instead of, we need to repay to the owner 10 lakhs. So he has taken away the goods worth rupees of how much 1 lakh. That means we can reduce the drawings from the capital. Then after, interest on capital means again we need to repay to the owner, so that we are adding it. And interest on drawings, so we are going to collect from the owner, so we need to reduce. Anything we are going to collect means reduce, we are going to pay means add. Okay now, next, additional capital. We are going to add or we are going to less sum, we are going to add. Then we will get the closing capital. Okay now guys. So next, Next, okay, you know how to write the journal entries. Okay, now you know how to write the journal entries. You have used the approach called as traditional approach. Which approach, Amma? Traditional approach. So now we are going to discuss some other approach. Okay, now. So we are having only 10 minutes time. Okay, I will try to say, but if we are having only 10 minutes left. Okay, now I will try to say. If you are not getting anything, means I will explain tomorrow. No problem. Okay, now. So is there any doubts up to here? No, no, Gada. So already you know all the things from the previous foundation itself, but once we are revising all the things, that's all. Okay, now. So generally account is having which shape, Amma? T shape. Account is having which shape? T shape. You know, left hand side is called as debit side. Okay, now what we will write, ma? DR. What is the meaning of DR? Debit record. And the right hand side is called as credit record. So do you know the dealer spelling? Dealer spelling. Dealer spelling. What is the spelling of dealer? Spell D E A L I not L E R. Okay, now guys, I am writing DEA on debit side, LER on credit side. This is a shortcut. Okay, now this is a shortcut for which approach? Modern approach. Okay, now for which approach, Amma? Modern approach. This is another way of accounting. Another way of accounting. This is a shortcut. Okay, now. So here I am going to say D for drawings. D for drawings. E for expenses. A for asset. A for apple. Asset. A for asset. L for liabilities. E for equity. Equity can also be called as capital. Next, R for revenue. Revenue is nothing but income. We can call it as, okay, revenue is nothing but sales only. We can conclude it as what, ma? Income. So this DEA is presented on which side? Debit side. Is presented on which side, ma? Debit side. So that I am taking these three balances. These three are going to have the debit balance. These three things are going to have which balance? Debit balance. And these three things are going to have which balance? Credit balance. Okay, now we can understand what is the meaning of debit balance and what is the meaning of credit balance. So D for drawings, E for expenses, A for assets, L for liability, C for equity or capital, so R for revenue or income. That means drawings, expenses and asset are having which balance? Debit balance. Liability, equity, revenue and incomes are having which balance? Credit balance. So please remember these balances. So if you see the drawings, again it is an asset. Next one, if you see the capital, it is a liability. Okay, na? It is a liability. To conclude, so in accounting we are having only four items. What are the four items? Expenses, incomes, assets and liabilities. In these assets and expenses will have the debit balance, and next liabilities and incomes will have the credit balance. We are having only four items. What are the four items? Assets, expenses, incomes and liabilities. Remember like this: assets, expenses, incomes and liabilities. Assets and expenses will have debit balance. Incomes and liabilities will have credit balance. So what is the meaning of debit balance? Okay, imagine we are taking a ledger. We are taking one particular ledger. Okay, now debit record and credit record. In the debit side, we are having a amount of 10,000. The debit side, we are having amount of 10,000, On credit side, we are having an amount of 8,000. Okay, now we have recorded something, but how much amount we are having in the debit side? 10,000. How much amount we are having in the credit side? 8,000. Okay, now which side is more? Debit side is more than credit side. That means this particular account is showing which balance? Debit balance. Debit balance means in a particular account, debit side is more than credit side. It is called as debit balance. So what is the meaning of debit balance, Amma? Debit balance means any account in any account debit side is more than credit side. Debit side is more than credit side. Then that is called as which balance, Amma? Debit balance or credit balance? Debit balance. Then what is the meaning of credit balance? Credit side is more than. So what is the examples are here? Imagine this is an account. So debit record and credit record. Now we are having 8,000 on the debit side and 10,000 on the credit side. Which side is more? Credit side is more. What is the meaning of credit balance? So any account, credit side is more or debit side is more, Amma? Credit side is more than debit side. Then that account is showing which balance? Credit balance. So remember, what are the 4 items we are having? Expenses, assets, incomes and liabilities. Expenses and assets will have debit balance. Incomes and liabilities will have credit balance. So what is the meaning of debit balance? If the debit side is more than credit side, is called as a debit balance. If the credit side is more than which side, it is called as a credit balance. So this is how we have discussed. In the next class, we can continue this discussion. Okay, now modern approach was not completed. Just we have learned about the balances. So here the assets and expenses will have which balance? Debit balance. Incomes and liabilities will have which balance? Credit balance. So now what the modern approach is saying means, if the debit balance increases, the debit balance increases, what we need to do, ma? We need to do debit. We need to do what, ma? Debit. If the debit balance decreases, what we need to do? Credit. Okay, guys, we are not understanding about the increases, decreases, sir. For example, asset. If you purchase the asset, okay, na, asset value increases or decreases, sir? Increases. Okay, na. If you purchase the asset for cash, means we are having the 2 outcomes, asset and cash. Here the cash balance decreases. Cash balance decreases, asset balance increases. So what we are going to do? Both are assets. Both are assets means what, ma? Both are having which balances? Debit balances. But cash is decreasing. What we need to do? Credit. Okay, now building value. For example, we purchase the building. Building value increases. What we need to do? Debit. What is the entry we will write? Building account debited to cash account, like that. Okay, now I will explain you, no problem. Next, what is the meaning of credit balance? Credit side is more than debit side. If the credit balance increases, what we need to do? The credit balance increases, we are going to do credit. And if the credit balance decreases, what we need to do, Amma? Debit. So this is the modern approach. So how we can understand whether it is increasing or decreasing? Whether always remember, most of the 90% expenses and incomes will always what increases, will always what ma increases. Expenses will increase and incomes also increases. In some of the situations, incomes and expenses are will be decreases. I will say that situations also, no problem. So what the modern approach is saying ma, so expenses and assets will have the debit balance. If the debit balance increases, what we need to do? Debit. If the debit balance decreases, what we need to do? Credit. And liabilities and incomes are having which balance? Credit balance. If the credit balance increases, we will do credit. If the credit balance decreases, we will do debit. So this is which approach? Modern approach. And we have discussed the concept of capital. For the capital, we are going to add what ma? We are going to add interest on capital and additional capital. We are going to reduce the drawings and interest on drawings. Then we will get what ma? Closing capital. So this is how I am ending the section. Further discussion will be continued in the next class. Thank you. Have a nice day. Bye bye. Thanks. Hi, hello. Good morning, everyone. So this is the third class regarding financial accounting, paper number 6. In the first class, we have discussed about what is the paper pattern, how many questions you will get, and how many marks we are having the choice, and all the things. In the previous class, we have started the discussion with the basics. So first, we have discussed about what ma? First, we have discussed about the gap. What is the meaning of gap? Generally accepted accounting principles. So these are the rules will be followed only in India, outside India. These rules will be followed only in India. So in that principles, we are having one of the principle is called as separate legal entity. Separate entity concept. As per this concept, owner is a different person and business is a different person. So as per this concept, if the owner invests anything in the business is called as capital. He may invest what ma? He may invest the cash, he may invest the goods, or he may invest what ma? Any other asset. If owner given the cash to us or any assets to us, then we need to repay na? We no need to repay na? We need to repay because owner is a different person, business is a different person. We need to think from point of view of whom ma? We need to think only from the point of view of business. So we means business. We means what ma? Business. So next, we have discussed about the meaning of business. What is the meaning of business ma? A place where goods are exchanged and services are rendered. So what is the meaning of good? Good means any object or commodity which is purchased or manufactured with an objective of what ma? We need to resell. So we have taken certain examples. For example, we have started what ma? Mobile business. In that mobile business, what we will purchase and we will resell. We will purchase the mobiles and we will resell the mobiles. Not only purchase and resell, either we can what we can do ma? We can do the manufacturing and resell. So if you purchase and resell or if you manufacture or resell, the both are comes under the goods category. So next, what we should not do? Okay now, we should not do what ma? We should not do the use and resell. So after using any particular commodity, we are selling means that thing is called as what ma? That thing is called as an asset. For example, we are having the mobile business. So we are using one iPhone. After using it, we are selling. That means that mobile is called as asset or good. Asset. Okay now, what we need to do ma? In order to call it as asset or good, we need to purchase and we need to resell, or either we can manufacture and we can resell. So We both the in these conditions only we can concluding it as what ma good. So we use and we resell means we are conclude it as what ma asset. So next one, we have discussed about the drawings. What is the meaning of drawings? Anything taken over by the owner from the business is called as a drawings. Anything means what ma? He can take over the cash, asset or goods. So they can take the cash, asset or goods from the business. So in this situation, who need to pay to us? Owner taken away na. So owner taken away from the business, so that we need to receive from the owner. Okay na guys. So in the previous case, capital we need to pay to the owner. So anything we need to pay in future is called as, anything we need to repay, our obligation to repay is called as what ma? Liability. Here we need to receive or we need to repay nama? We need to receive. So the drawings is called as an asset. Drawings is called as what ma? Asset. Next we have discussed the statement regarding to the what ma? Capital. So we need to start with the opening capital and then we need to reduce the drawings. Okay na guys. So for example, we are having the business and here is the owner. Anything we need to pay to the owner means we need to add. Okay na guys. Anything we need to pay to the owner means what we need to do ma? We need to add. Anything okay na owner need to pay to us means we need to reduce. Okay na. Opening capital means we have started the business with 10 lakhs. We have started the business with how much ma? 10 lakhs. So after that he made the drawings. Drawings who need to pay ma? Owner need to repay to us. So owner need to repay. For that reason what we need to do ma? We need to reduce. So next, interest on capital. What is the meaning of interest on capital ma? It is an expense. Okay na. We need to repay to the owner need to repay to us. We need to repay to the owner. For that reason we need to add or we need to less. We need to add. Next one, interest on drawings. Who need to pay to us? Owner need to pay to us, so that we need to reduce or we need to increase. We need to reduce. Are you getting the point? Okay, simply we are starting with the opening capital and then we are reducing the drawings and then we have added the interest on capital and then we have reduced the interest on drawings. So interest on capital is an expense because here we are going to pay. Interest on drawings is called as income because we are receiving the interest on drawings from the owner. Next one, additional capital. What is the meaning of additional capital ma? So in between the business we need a funds. Okay na. Again the owner introduced the amount into the business. This is called as a additional capital. Okay na. Next we will get what ma? Closing capital. Okay na. In between we may get the profits or we may get the losses. Okay now, profits. In the case of profits, we need to pay to owner or owner will again give to us. Imagine we are doing the business, we have got the profits. Okay now, profits we need to pay to the owner will give to us. We need to pay to the owner. Anything we need to pay to the owner means what we need to do ma? Add. What we need to do? Add. So at last we are going to add one more thing. What is that one ma? So net profit. We are going to add. Net loss means who will give to us ma? Net loss means owner will give to us, so that we need to do less. So this is the ultimate statement. Are you getting the point? So if you remember the final accounts, what we will do in the final accounts, if you see the balance sheet, okay now we are having the liability. In the liability side, first we are going to write what ma? Capital. For that capital we will add the profit. Yes or no? Here also the same thing. Why we are adding the profit for that capital ma? The profit belongs to owner. Anything belongs to owner means we should add. Okay now anything belongs to business means we need to reduce. So here see, opening capital belongs to whom? Owner. Okay now drawings belongs to whom? Business. For that reason what we are doing ma? We are reducing. So interest on capital belongs to whom? Owner. For that purpose we are going to add. Interest on drawings belongs to whom? Belongs to us. So that for that reason what we are doing? We are going to reduce. Next, additional capital belongs to whom? Owner. Belongs to owner means we need to repay to owner. Okay now belongs to business means owner need to repay to us. Okay now at last In the case of net profit, we will give to owner, so that we are adding it. Okay, in the case of net loss, owner need to give to us, yes or no ma? So losses means what ma? He need to give to us in the form of additional capital. In the form of additional capital, he will give to us. So this is the ultimate statement regarding to the capital. We have completely discussed about the capital, drawings, interest on drawings, interest on capital, and that thing. What is the profit ma? How will you get the profit? In the first day we have discussed, we are having the expenses, we are having the incomes. So income is more than expenses means it is called as a profit. Our expenses are more than income means it is called as a loss. So we have already discussed this thing, even though you know. Okay, now once again we are discussing, because of we are going to follow same approach or different approach ama? Different approach. What is the approach name? Modern approach. In this approach, we have divided the account into how many parts ma? Two parts. We know left hand side is called as what? Debit record. Right hand side is called as what ma? Credit record. So next one, we have taken a shortcut. What is that shortcut name? Dealer. What is the dealer name ma? D E A L E R. We have divided the dealer spelling into the two parts. DEA we have recorded on which side amma? Debit side. Earlier we have recorded on which side amma? Credit side. So then after what we have recorded? So D for drawings, E for expenses, A for asset. Next then after what ma? L for liabilities, E for equity or capital. Equity will be called in a company situation. In remaining situation we are going to call it as what ma? Capital. So next one, R for revenue or incomes. Revenue, what is the general meaning of revenue? Sales. Or we can call it as turnover. We can call it as what ma? Turnover. But we are considering it as what ma? Revenue is equal to income. Okay na guys? Only revenue means sales. Only revenue means what ma? Sales. Income means sales plus other incomes. For example, interest received, commission received. So these all things is called as other incomes. Are you getting the point? So D for drawings. So here the drawings, expenses, drawings, expenses and assets is available on which side amma? Debit side. For that reason what we are doing, we are concluding it as which balance ma? Debit balance. And next, liabilities, equity or capital, revenue or income will be available on which side? Credit side. For that reason this balances will going to have which balance? Credit balance. Okay na guys? Debit balance and credit balance. Again drawings is called as what ma? Asset. And capital is called as what ma? Liability. So to conclude, how many categories we are having? Only 4 categories. Only how many categories we are having? Categories we are having, 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 categories we are having. Credit balance. Okay now. What is the meaning of debit balance? We have discussed. Okay, what is the meaning of debit balance ma? In this particular account, we have taken an example of 10,000 in the debit side, 8,000 in the credit side. Which side is more? Debit side. So debit balance means in any account, debit side is more than credit side. Then that balance is called as what ma? Debit balance. That balance is called as what ma? Debit balance. Then after we have discussed about the credit balance. What is the meaning of credit balance? Opposite. Okay now, in this example we have recorded 8,000 in the debit side, 10,000 in the credit side. Here in this particular account, which side is more? Credit side is more than the debit side. So that this particular account is showing which balance? Credit balance. Which balance amma? Credit. So what is the meaning of credit balance? Any account credit side is more than debit side is called as credit balance. Okay na guys? Okay, approach completed is still remaining is still remaining the approach. Just we have discussed about what ma? What is the meaning of debit balance and what is the meaning of credit balance. Then after, so debit balance means expenses and assets. Okay na. Credit balance means what ma? Incomes and liabilities. Incomes and liabilities. Okay na. Here asset, their liability. Here expenses, their income. Okay na. So expenses and assets are having which balance? Debit balance. Okay na. Liabilities and incomes are having which balance? Credit balance. Okay na. Then after, if the debit balance increases, we need to do debit. The debit balance increases, we need to do debit. If the debit balance decreases, we need to do credit. In the same way, if the credit balance increases, what we need to do, ma? Credit. And if the credit balance decreases, what we need to do? Debit. So these are the rules. Okay, now in traditional approach, we are having how many rules? 3 rules. What are the 3 rules? Personal account rule, real account rule, nominal account rule, like that. So in the modern approach, what is the rules we are having? Debit balance increases, debit. Debit balance decreases, credit. If the credit balance increases, credit. If the credit balance decreases, only 2 rules. Only how many rules? 2 rules. What are the 2 rules once again? If the debit balance increases, we will do debit. If the debit balance decreases, we will do credit. If the credit balance increases, we will do credit. If the credit balance decreases, we will do debit. These are the rules we need to remember. Next, what is the meaning of debit balance? We know. Yes or no, ma? What is the meaning of debit balance? Debit side is more than credit side. What is the meaning of credit balance? Credit side is more than credit. So then after, we are going to learn another rule. Okay, now. What is the rules are? Simple. So this account is showing which balance? Debit balance, you know. So debit balance means while balancing, first we need to record the total column. Yes or no, ma? In the total column, highest amount we will record the lowest amount. Highest amount. Okay, which is highest? 10,000 is highest, 8,000 is highest. 10,000. So here we are going to record 10,000. Here also how much we will record, ma? 10,000. What is the balance? 2,000. What is the balance, amma? 2,000. We are going to record on which side? Lowest side. We are going to record on which side, amma? Lowest side. Here what we will record? 2 or by? Debit side we are going to record the 2. And credit side we are going to record the by. Okay, now this is a closing balance or opening balance? Closing. Closing means C by D. Okay, now here C, there C. Okay, now closing means C by D. Okay, now opening means P by D. Opening means we can take the, instead of opening, we can take the beginning. Okay, now closing and beginning. Closing means C by D. Okay, now beginning means B by D. Closing means C by D, beginning means B by D. Okay, na? So while writing anything in the credit side, first we need to put the word called as what, ma? To a by. By. So this balance is called it as by balance C by D. Why we are calling as C by D? Closing balance. Okay, na? Generally we can call it as carried on. What is the general meaning? Closing or beginning? Closing. Okay, na? This balance is called as closing balance. Next, then after this balance we are going to forward to next year. We are going to forward to next year or next month. How we can transfer? Same amount will be transferred to the next year or next month, a different amount. Same balance we are going to transfer to next month. So here 2,000. Here also how much amount we will record? 2,000. This is the beginning balance or closing balance? Beginning balance. That means what? How to write? To balance brought down. To balance brought down. Okay, now by balance carried down, to balance brought down. That means in the debit balance, if any account is showing debit balance, means opening balance will be on the which side? Debit side. Okay, now what I am saying, sir? If any account is showing the debit balance, means opening balance will be on which side? Debit side. Closing balance will be on which side? Credit side. Okay, once again I am repeating what I am saying, ma. So in the previous class we have learned what, ma? If the debit balance increases, debit. If the debit balance decreases, credit. Okay, now if the credit balance increases, we will do credit. If the credit balance decreases, we will do debit. That one is completed. In today's class, what we are going to discuss? For the debit balance account, for the which account? For the debit balance account, opening balance will be on debit side. Opening balance will be on debit side. Automatically closing balance will be on credit side. Okay, link this concept to credit balance. For the credit balance, opening balance will be on credit side. Closing balance will be on debit side. How, sir? Can you show now? Okay, we'll discuss here. Here, how much amount we need to record more? Once again, 10,000, because 10,000 is more, 8,000 is more, amma. 10,000 is more. What is the balance here? 2,000. This balance is called as closing or beginning, amma? Closing. So, to balance carried on or brought down? Carried on. Here the same amount will be recorded. Yes or no, ma? So, for this what we need to write? By balance brought down. So brought down means opening, carried down means closing. So here this account is showing which balance? Credit balance. This account is showing which balance, amma? Credit balance. For the credit balance, opening balance will be on which side? Credit side. Opening balance will be on which side, amma? Credit side. Here this is a credit balance where it is opening balance presented on which side, amma? Credit side. Here it is a credit balance. Closing balance will be presented on which side, amma? Debit side. So another rule we are learning. Okay na? So shall we write? Okay na? Now please write this one. You can record. This is opening this is debit balance or credit balance. This is a debit balance. So which approach we are following? Modern approach. Which approach we are following, amma? Modern approach. Okay na guys? Okay, slowly we can discuss, no problem. Okay na? Next, in today we are going to discuss what, ma? Debit balance we know and credit balance we know. We are discussing about the opening balances and closing balances. So next, put the heading opening and closing balances. Opening and closing balances. For the opening balance, what we need to write, ma? For the opening balance, we can write balance brought down. We can use the word called, ma, balance brought down. For the closing balance, what we can use? We can use the balance carried on. So balance brought down means opening balance. Balance carried on means closing balance. Completed, huh? So next, we are discussing from which point of view? First, we are going to discuss with the debit balance point of view. So for the debit balance, which balance, amma? For the debit balance. For debit balance, how many cases we are having? Two cases. What are the two cases? Opening balance and closing balance. Okay, increase decrease completed. Okay now, if the debit balance increases, what we will do? Debit. Okay now, if the debit balance decreases, what we will do? Credit. If the credit balance increases, what we credit? Decreases means debit. Completed. That one is completed. Now we are going to discuss about the opening and closing balances. Opening balance means balance brought down. Closing balance means balance carried on. So for the debit balance, we are having again what, ma? Opening balance and the closing balance. Okay now, for the debit balance, opening balance will be on which side? Now only discussion now. For the debit balance, opening balance will be on which side? Debit side. Opening balance will be on debit side and closing balance will be on credit side. So debit side means what we need to write, ma? 2 or by a 2. Opening balance means balance brought down or carried down? Brought down. So 2 balance brought down. Credit side, what we need to write, ma? 2 or by a? By. So by. Closing balance means carried on or brought down? Carried on. Okay, now did you get the point? Okay, now then after we can discuss the journal entries, you may get the all the points, no problem. Next, we are going to discuss the same situation from which balance, ma? Credit balance. What is the meaning of credit balance? Credit side is more than debit side. Okay. For this also, for the credit balance, again we are having how many parts? Two parts. What are the two parts, ma? Opening balance and closing balance. Okay. For the credit balance, opening balance will be on which side? For the credit balance, opening balance will be on which side? Credit side. For the closing balance, for the debit balance, closing balance will be on debit side. Debit side. Credit side, what we need to write? To or by amma? By. Opening means by balance brought down. Debit side, what we need to record ma? To balance carried on. By balance brought down, to balance carried on. Okay, these are the rules. Is sufficient. Okay na? So which approach? Modern approach. Okay na? So in the modern approach, how many categories we have divided ma? Initially 6 categories. Then after we have concluded to how many categories? Only 4 categories. So expenses and assets will have which balance? Debit balance. Incomes and liabilities will have which balance? Credit balance. What is the meaning of debit balance? Debit side is more than credit side. What is the meaning of credit balance? Credit side is more than debit side. If the debit balance increases, what we need to do? Debit. If the debit balance decreases, what we need to do? Credit. In the same way, if the credit balance increases, we will do credit. If the credit balance decreases, we will do debit. Then after, what is the meaning of opening balance? Opening balance means balance brought down. Closing balance means what ma? Balance carried on. For the debit balance, opening balance will be on the debit side. So we can write how to record ma? To balance brought down. For the closing balance, credit side. So by balance carried on. For the credit balance, opening balance will be on the credit side. What we need to write? By balance brought down. By balance brought down amma. By balance brought down. Opening means brought down. Closing means carried on. Closing balance will be on the which side? Debit side. What we need to write? To balance carried on. Is there any doubts up to here? Okay. You know what is the meaning of asset. You know what is the meaning of liability. You know what is the meaning of goods. Then after, what is the meaning of business? What is the meaning of capital? So once we are revising, so we are in the discussion of what ma terminologies. So first we have discussed about the business. What is the meaning of business? A place where goods are exchanged and services are rendered. Okay now. So where the goods can be exchanged and services are rendered is called as a business. Goods means what ma? A mobile shop, electrical shop. Okay now. When we take anything, market, vegetable market, fruits market, these are the called what ma? Goods or services are goods. Services means education service, bus transportation, morning travels. Okay now. Next hotels, hospitals, these are all called as what ma? Service. No broker app. Okay now. In the previous class we have discussed, no broker means what ma? If you want the plumber service, we can book in the app. He will do the service and he will go. Okay now. We are booking the service, we are booking the goods, we are booking the service. In the same, if you take the Flipkart, okay now, in the Flipkart we will book the goods. Okay now. They are in the dealing with the goods or services, goods. Okay now. In middleman of Flipkart doing the service. Okay now. The merchant who was registered in the Flipkart, they are doing the goods. They are doing the goods. They are providing the goods. But what is the Flipkart is doing? Flipkart is doing the service. Okay now. They are providing the e-commerce service. A service, and what we are going to call ma e-commerce. E-commerce means mobilize of goods through the electronic means mobility of goods through the electronic. There is a platform called as what ma? Electronica or normala. Electronic platforms. Amazon, Flipkart. If you take anything, they are doing the e-commerce. E-commerce means what ma? They are doing the business with the help of technology. Okay na? This is called as e-commerce. Next, proprietor. What is the meaning of proprietor? A person who initiate to start the business. For example, we are starting the Shikara means, so we are the owners. Or we are starting some other institute. We are the owners or proprietor. We can call it as what ma? Proprietor. Generally, we can calling it as what ma? Owner. In the accounting point of view, we can call it as what ma? Proprietor. If you see the organization names, okay na, any board, any cutout, okay na, they will give what ma? First they will give the organization name. Then after contact details. So here I will show you once again. If you see any visiting card related to organization, any organization, not only the Shikara or not only anything, first they will give the organization name. Okay na, they will give organization name here. Okay, name of the organization. Then after they will give what ma, proprietor, like that. Okay na, so here the proprietor means nothing but what ma, proprietor name they will give. Next, then after they will give the contact details. Okay na, there they are going to write what ma, proprietor. Proprietor means owner or a worker ma, owner of the business. That's all. Next one, capital. What is the meaning of capital? Resources such as either cash or kind being brings in by the proprietor to start or run the business. To start or run the business. In future, if you want to run the business means, again we need to bring what ma, additional capital. Again we need to bring what ma, the capital we can bring in the form of cash or in the form of kind. We have taken examples of what ma, goods, and kind means asset or goods. Kind means what ma, asset or goods. Next, what is the meaning of drawings? Drawings means resources such as either cash or kind taken over by the proprietor for his personal use. Okay, now just taking means it is not calling as drawings. They should take that goods or cash or kind for the personal use. For in our example, he has given to her loved ones. Yes or no? On 14th February, he has taken over the mobile phone and given to his GF. Okay, na. So personal or service ma, that one. That thing is called as a personal. What is the meaning of asset, sir? Now in this class we are going to discuss the detailed meaning of asset. Okay na. What is the meaning of asset? We are going to. Asset means what ma? We can take here camera is an asset, laptop is an asset, tab is an asset. Okay na. Mobile phone is an asset. Okay na. Benches, chairs, these are all called as what ma? Assets, fans. Okay, why we are calling it as assets, sir? Because we are using that objects or resources in order for the purpose of what ma, for the purpose of generation of future revenue. For the purpose of generation of future revenue, we are using all the things what ma, for recording the classes. Okay na, after recording the classes, what we will do, we will sell in the market. That means we are getting a revenue, we are not getting a revenue, we are getting a revenue. Okay, what is the meaning of asset ma? Any resources utilized by the business for the purpose of generation of future revenue. For the purpose of generation of future revenue. So here also saying that thing only. A resources utilized by the entity. Entity means what ma? Business, for generation of revenue. For generation of revenue in future or present. Okay na? Are you getting the point or not? Okay na? Is there any doubts? What is the meaning of asset? Asset means the resource utilized by the business for the purpose of generation of future revenue. Future utilization. What means? What is the meaning of utilization? Nothing but use. Utilization means nothing but what ma? Use. For what purposes we can use that particular asset? For what are the purposes we can use for that particular asset ma? We can use that asset for production purpose. We can use that asset for production purpose. For example, what ma? Plant and machinery. For example, okay na, we can sell any commodity, either we are manufacturing and resell means it is called as good or not? Good only. Or purchase and sell also what ma? Good only. So here some of the businesses, they will manufacture, they are having the manufacturing things. If you take the Kia Motors, they will manufacture the car and they will resell it. Yes or no ma? Here, in order to manufacture a car or in order to manufacture any product, we need what ma? Plant and machineries. Nothing but what ma? Machineries we want. Machineries. Plant and machinery means what ma? Nothing but here the machinery means not the small ones. Okay now, machinery means we are having the big ones. Okay now, if you take if you see the Coca-Cola company, okay now, in the Coca-Cola company, which good they will they will manufacture ma? They will manufacture the liquid, that Coca-Cola liquid. In order to manufacture that Coca-Cola liquid, what we required? We required the big containers. Okay now, so first they will take the liquid, then after they will they will inject the solution. What ma? They are having the formulas. Okay now, so like that they required what ma? Big plants. Okay now, machineries. That big containers are called as a what ma? Plant and machinery. We are using it or we are reselling it. We are using. For what reason we are using ma? For production purpose. For production purpose. After producing that Coca-Cola liquid, we are going to sell or we are not going to sell? We are going to resell. So we are generation. Then we will generate the revenue from that. Are you getting the point? So we can utilize the asset first for which purpose ma? For production purpose. Next, then after we can utilize the asset for administration purpose. For example, while entering into the Shikhara, okay na, Shikhara campus, there is administration staff. Okay na, you will pay the fees. Okay na, you will, they will give the admission form to you. You will fill. Okay na, the department is called as what ma? Admin department. The department is called as what ma? Admin. So if you see, in order to write the applications, we require a table, and we required a chair. We required chair to sit that particular Raju sir. Yes or no ma? If the Raju sir want to sit means we required a chair, and we required some table. This chair and table is called as again asset. We are using for which purpose? Administration purpose. Are you getting the point or not? Okay, now we can use for production purpose. We can use for administration purpose. Next, we can use for rental purpose also. We can use for rental purpose. For example, so first the Shikhara taken one building for he has purchased the building. He has purchased the building. It is an asset. It is an asset. Then after in that building they have constructed 3 floors. How many floors ma? 3 floors. Okay na. 2 floors is sufficient to Shikhara. 2 floors is sufficient to Shikhara. Another floor we are having. What we can do? We can give the rent. By the way of giving the rent, we can collect the rental income. We can collect the what ma? Rental. Okay, we are using the business. Okay na. But we are having what ma? Additional floor. What we are doing? We are providing the we have given the rental purpose. So we can use the rental purpose. Or if you take the what ma? If we take, we are having the manufacturing unit. In that manufacturing unit, we require a lot of workers. For the workers, we will construct what ma? Quarters. Okay na. The quarters belongs to business only. The quarters belongs to whom ma? Business. For example, if we take, we are the faculties. Okay na. Working in where ma? Shikhara. Okay na. They provided they provided the for the purpose of staying the faculties, Shikhara constructed one building. Okay na. Okay na. From that building, they are collecting the rents. They are collecting the rents. That means what ma? They can use for rental. They cannot use for rental. They can use for the rental. Example what ma? Land and buildings. Are you getting the point? Okay na. They have constructed for the purpose of staying the faculties. Okay na. For staying the faculties, we need to pay the rent to the Shikhara. From Shikhara point of view, they are using for the purpose of what ma? Rental purpose. Next one, rendering of a service. In order to render a service, in order to render a services, we required what ma? Equipment. Okay na. These are the things we can use the assets. Okay now, for which purpose we can use ma? We can use the asset for production purpose, administration purpose, rental purpose, and rendering of a services. Okay now, for rendering of a service also we can use any equipment. Okay now, next one, amount such as cash in hand as well as cash at bank, which includes the amount of receivable. Okay now, this thing you will understand in future classes, no problem. Okay now, as of now, what is the meaning of asset ma? Asset means any resource utilized by the entity for the purpose of generation of future revenue or future profits. Okay now, we can utilize for how many purposes? 4 purposes: production purpose, administration purpose, rental purpose, for rendering of a services. Okay now, in order to render a service, for example, we have started the wedding planner business. We have started what ma? Wedding planner. In that we will provide the what ma? We are going to print the cards also, wedding cards. For printing of wedding cards, we require an equipment. Without the equipment, we can provide the service. We cannot provide the service. We cannot provide the service. For these reasons, we can use the anything, but related to business or not related to business. Related to business. Imagine we are having one building. That building in the name of owner, not in the name of business. At that point of time, that building belongs to owner or belongs to business? Belongs to owner. Belongs to owner. That building have a documents. The documents is in the name of whom? Owner or business? Owner. Okay na. In the name of owner means that thing is not belongs to business. Okay na. If anything belongs to business means the document should be with the name of business or with the name of owner? With the name of business. Are you getting the point? Okay na. If for example this building belongs to business means, okay na, the registration must be happened with the name of business, not with the name of owner. If the registration happened with the name of owner means it is an asset belongs to owner. It is not belongs to business. Are you getting the point? Sometimes they will ask this type of questions in the examinations as an MCQ. Okay, guys, is there any doubts up to here? We have completely discussed how many terminologies? 5. Business. Next one, goods, proprietor, capital, drawings, and assets. So next we are going to discuss the types of assets. We're going to discuss what types of assets. So if you see, we are majorly having the two types of assets. How many types of assets? Two types. Fixed assets or non-current assets. Fixed assets are non-current assets. Next one is called as what current asset. Generally, proper classification is called as what non-current asset, current asset. Non-current asset is also called as fixed asset. Okay, now how many types of assets are there? Two types: non-current asset, current asset. Non-current asset, current asset. Okay, non-current asset is also called as fixed asset. Okay, now so what is the meaning of first we are going to discuss about the current asset. We are going to discuss about what current asset. Okay, we can discuss this one only. First we are going to discuss about the non-current asset or fixed asset. What is the meaning of fixed assets, sir? Those which are intended to use more than 1 year. Here the intention is important. Intention to use more than 1 year. For example, we are purchasing the camera. We are having the intention to use more than 1 year or less than 1 year. Intention to use more than 1 year. So for that reason, camera is called as current asset or non-current asset? Current asset. Sorry, non-current asset. Camera is called as what non-current asset. If you take the laptop, we are having intention to use more than 1 year or less than 1 year? More than 1 year. For that reason, laptop is called as non-current asset. We are using the tab. Okay, now with an intention to use more than 1 year or less than 1 year? More than 1 year. So that this is called as non-current asset. That means benefit we are getting more than 1 year means it is called as non-current asset. Benefit we are getting less than 1 year means it is called as current asset. We can concluding as later. Again, the non-current asset is divided into how many types? 3 types: tangible assets, intangible assets. I think you know, you guys are only know this one. Yes or no? What is the meaning of tangible asset? Which we can see and touch. Okay, now, but we cannot feel it. Which we can see and touch. What is the meaning of intangible asset? Which we cannot see and touch, but we can feel it. Okay, now, tangible. Okay, if you take the camera, we are having an intention to use more than 1 year or less than 1 year? More than 1 year. We can see a yes. We can touch a yes. So that this is called as a tangible asset. We can call it as what tangible asset. What is the meaning of intangible assets, sir? Which we cannot see, but the benefit we are getting more than 1 year or less than 1 year? More than 1 year. What is the benefit, sir? For example, if you take the goodwill means it is an asset. Goodwill means what Okay. So what is the meaning of goodwill? Do you know? Manchpera. Our name in the market. Okay, now you can conclude a brand value. We can take it as what brand value in the market is called as a goodwill. Okay, now goodwill. If the goodwill is there, the goodwill is having a good name. For example, if you take the shikharatutorials, Shikhara is having the good name means admissions will be more or less. Admissions will be more. So goodwill is also one kind of asset or liability. Asset, but we're getting a benefit more than 1 year, less than 1 year? More than 1 year. But we can see it, we cannot see it. We cannot see it will be passed from one person to another person. So that this is called as tangible asset or intangible asset? Intangible asset. Next one, vesting assets. Next one, what vesting assets. What is the meaning of vesting assets, sir? Vesting assets means assets arising out of natural resources. Assets arising out of natural resources. If we take what oil well, coal mines. Okay, now imagine we are having the coal mines. Coal mine is an asset, benefit more than 1 year, so that it is called as non-current asset. Non-current, in that non-current asset, separate assets called as what vesting assets. Anything created by the natural resources, it is called as vesting assets. But oil wells after the oil extraction. Oil wells after the oil extraction. coal mines after the coal extraction. Okay, now this is called as vesting assets. Okay, now if you see the kg of film, kg of coal or gold fields. Okay, now here we are having the gold mines. Gold mines it is also called as which asset ma? Vesting asset. Okay, now totally. First we have discussed about the fixed assets or non-current asset. What is the meaning of non-current asset? Benefit more than 1 year. Our intention to use more than 1 year. We are having how many types? Again, 3 types: tangible, intangible, and vesting assets. Tangible means what ma? Which we can see and touch. Intangible means what ma? Which we cannot see and touch, but we can feel it. Examples of the intangible assets: goodwill, patent, copyright, trademark. Okay. Okay, trademark means what ma? We are going to register our name. We are going to register our name. If you see the here, if you see here, this is called as shikara symbol. Yes or no ma? This is called as what ma? Shikara identity. Okay na. So if should not copy anybody regarding to this symbol. I think for example, somebody is copying our symbol. Okay na. If they want, they can copy. But if we register on our name means, okay na, anyone cannot copy. Are you getting the point? What I am saying is, this is called as what ma? Symbol representing the shikharatutorials. If we have registered, we have registered what ma? This symbol belongs to us. Okay na. For that reason, okay na. What I am saying is nothing amma. If others should not copy our symbol means we need to take the trademark. We need to take what ma? Trademark registration. If you register our trademark, this is called as what ma? Trademark. This is called as what ma? Trademark. If how you will identify the apple of Apple? How will identify the iPhone? There will be a trademark of Apple. Okay na. The symbol will be like this. Okay na. Like this means what ma? iPhone. Okay na. Here the of Apple is called as trademark. For like that we are having the trademark what ma? This is our trademark. If this trademark can be used by anyone na? Cannot be used by anyone na? Can use by anyone. Okay na. If this trademark we want should not use by anyone means we need to take the trademark rights. Need to take the trademark rights, and that at that point of time, so no one cannot copy our trademark. If you don't take the trademark rights means others can copy our trademark. Are you getting the point? If we take the trademark rights means others can copy or cannot copy? Cannot copy. If we are not taking any trademark rights means others can copy. This is called as a trademark. This is also a okay now, which we can see, which we can touch. No, so that for that reason this is called as tangible asset, intangible asset. Intangible asset. Next one, vesting assets means what ma? Anything created by natural resources. Next, then after current assets. What is the meaning of current asset ma? Those which are intended to use less than 1 year. Here there is another definition also. So those assets which are easily convertible into cash. Those assets which are easily convertible into cash is called as a current asset. Easily means how many months, sir? Less than a year. Less than a year is called as what ma? Is called as a current asset or non-current asset? Current asset. So again the current asset is divided into how many parts? 3 parts. Liquid assets, non-liquid assets, and fictitious assets. So this thing you will understand in further classes, so that I am not repeating here. I am not going to discuss here. So we are going to understand what ma? Liquid assets and non-liquid assets. So within what ma? Less than 3 months. Within less than 3 months, we can convert it into cash means those kind of assets is called as liquid assets. For example, cash, bank balance. Okay na. Bills receivable. If you take the bills receivable, it is also a liquid asset or non-liquid asset? Liquid asset. Okay na. We can give the credit period maximum of 3 months. That's all. If you give the more credit period, okay na, we are having a disadvantage, because we cannot easily convertible into cash means we cannot purchase the new goods and we cannot sell. So credit period should be less or more? Less. At that point of time, liquid means what ma? Less than 3 months or more than 3 months? Within 3 months, easily convertible into cash means These kind of assets is called as what ma? Liquid assets. That to current asset and non-current asset. Current asset. Again, the current asset is bifurcated into how many parts? 3 parts. Okay, liquid assets, non-liquid assets, and fictitious assets. Now we are going to discuss only two things. What are the two things? Liquid assets and non-liquid assets. Liquid means what ma? Less than 3 months. Non-liquid means more than 3 months, but less than 1 year. More than 3 months, less than 1 year. So these kind of assets is called as a non-liquid assets. So these assets which cannot be easily convertible into cash. Example what ma? Closing stock. Okay, now closing stock can be converted within 3 months or may not be converted less than 3 months also. Okay, now they may take the time of less than 3 months or more than 3 months. So for that reason, we are concluding it as what ma? Closing stock is called as a non-liquid asset. Are you getting the point ma? So to conclude, you can remember only two things. What are the two things ma here? Current assets and non-current assets. Current asset means what ma? Within 1 year convertible into cash. Or for example, our intention to use more than 1 year or less than 1 year? Intention to use less than 1 year. Again, the current asset is concluded into how many types? 3 types. 3 types. Liquid assets, non-liquid assets, and fictitious assets. Okay, now liquid asset means less than 3 months or more than 3 months? Less than 3 months. Non-liquid asset means more than 3 months, less than 1 year. Okay, next, fixed assets are also called as non-current asset. Intention to use more than 1 year or less than 1 year? Benefit more than 1 year is called as non-current asset. Benefit less than 1 year is called as current asset. So again, the non-current asset classified into how many types? 3 types: tangible assets, intangible assets, and vesting assets. Vesting assets means what ma? Created by the natural resources. Example, oil well, coal mines, gold mines, etc. Okay, na? So these are the types of assets. So what is the meaning of asset ma? A resources utilized by the business for the purpose of generation of future revenue. Okay, now so we can use from production purpose, we can use for administration purpose, we can use for rental purpose, we can use for rendering of a services. Next, how many types of assets are there broadly? Broadly, we are having the 2 types. So first one is called as non-current asset and current asset. Non-current asset is also called as fixed asset. So again, the non-current asset is classified into how many types? 3 types: tangible, intangible, vesting assets. So tangible means which we can see and touch. Intangible means which we cannot see and touch. So next one, vesting assets means created by the natural resources. So current assets are again classified into how many types? 3 types: liquid assets, non-liquid assets, and fictitious assets. So fictitious assets means we can discuss in some other class. Okay, liquid assets means what ma? Less than 3 months convertible into cash. Non-liquid means more than 3 months and less than 1 year convertible into cash. So what is the meaning of current asset? Benefit less than 1 year. What is the meaning of non-current asset? Benefit more than 1 year. Or intention to use more than 1 year, or intention to use less than 1 year. So these are the types of assets. So no need to write anything. In our book, all the information will be available. This is a concept book. So totally from the financial accounting point of view, we are going to provide how many books ma? 2 books. We are going to provide the 2 books. No need to write here. So book 1 is called as concept. We are going to provide the concept book and workbook. In this concept book, we are going to add what ma? MCQs also. We are going to add MCQs. So MCQs plus concept is one book, and another book is called as what ma? Workbook. Here we are going to have the practical questions for past 10 years, MCQs, MQPs, and study material questions. Okay, now all the questions we have incorporated in this workbook itself. If you study this book is sufficient. If you study this book is sufficient. You should not prefer any books like what ma? Our board book also. No need. It is sufficient. Okay, na guys. So next we can see certain MCQs. Okay, na MCQs related to the basics. So what is the meaning of good, amma? In an accounting, good refers to a fixed asset purchased for use. No, fixed asset purchased for use means it is called as an asset. Okay, na? So what is the answer ma here? Items brought for resale. Stationery used in office. Asset. Okay, na? Current asset and non-current asset. Current asset. Benefit less than 1 year. For that reason, it is a current asset. Okay, na? So it may be sold in less than 3 months or more than 3 months. Then for that reason, it is called as non-liquid asset. Okay, na? Liquid asset and non-liquid asset. We can sell in 3 months or either we can sell in more than 3 months. Next one, machinery used in production. Which type of asset? Fixed asset or non-current asset. Tangible or intangible? Tangible. Next one, amount invested by the proprietor in the business should be credited to. Okay. We are going to learn one journal entry. Okay, na? One. Based on which approach? Modern approach. Okay, na? Shall I start? Okay, na? So, you can put what journal entries. So in that first entry is called as Mr. Ram, owner of the business, started with rupees 10 lakhs. Okay, now Mr. Ram, he is the owner of the business, started with how much, amma? 10 lakhs. Okay, now. So what are the two outcomes here? The two outcomes you know already. What are the two outcomes here? Cash and capital. Okay, now cash and capital. Capital is called as liability. Okay, now if you see from traditional approach, okay, now personal account, real account and nominal account. This is a personal account. That personal account, how many types are there? 3 types. 3 types. What are the 3 types? Natural person, artificial person, representative personal account. This is called as representative or natural or artificial. Representative. Why the capital is called as representative person? So here normally we need to write the Mr. Ram here. What we need to write here? Mr. Ram. But instead of Ram we are using what capital. So instead of Ram we are using the capital. So that the capital is called as a representative to the Ram. So that it is called as representative personal account. For example, if you take the test matches, what are the test matches are going on? England versus India. Okay, now somebody ask you, so who are playing there? Who are playing means what you say England and India are playing the match. So really India is going to play na, or instead of India 11 members are going to play na. Instead of India 11 members are going. So representing India. So here also same meaning. So capital is representing Ram. Capital is representing what Ram. Okay, na. So capital is called as a representative personal account. Sir, directly we can write Mr. Ram na. So why you are writing the capital, sir? Means so in order to differentiate the outside persons. In order to differentiate the outside. So Mr. Ram means the same name will be available for some other person. Okay, na. Our owner name is also Ram. Okay, na. Some other person name is also what Ram. At that point of time we may get confused. Okay, na. If you are writing the Ram, our owner name in the books of accounts and that fellow name in the books of accounts means which Ram we can understand or we cannot understand. We cannot understand. For that reason we are writing what capital instead of Mr. Ram. Okay. So cash is an asset. Cash is an asset. Capital is a liability. Okay, you know the modern approach. Asset, which balance? Asset expenses and asset having the debit balance, incomes and liabilities having the credit balance. Okay, cash, asset, which balance amma? Debit balance. So here the cash, now only we have started the business. That means previously the cash balance is how much? 0. Previously the cash balance is how much ma? 0. Now in order to start the business, Ram brought how much ma? 10 lakhs. So the balance increased or decreased? Increased from 0 to 10 lakhs. Comes in means increases, goes out means decreases. So cash comes in now. So for that reason, increases or decreases? Decreases. So debit balance increases means what we are going to do? Debit. So this is how we need to conclude the first thing. Are you getting the point? Previously our cash balance is 0. After investment made by the Ram, our cash balance is how much? 10 lakhs. So 0 to 10 lakhs means increases or decreases? Increases. So next liability. Which balance amma? Credit balance. The liability created, we are repaying the liability. Just now liability created. Okay, at the time of creation of liability will be increases. At the time of creation of liability will be increases. At the time of repayment of liability will be decreases. For example, we have taken a loan from the bank. At that point of time, the loan means we are repaying or taking. Creating the liability or repaying the liability? Creating the liability. At that point of time, the liability increases or decreases? Increases. Okay, na liability, or imagine, okay, now only business was started. Previously we are having any liabilities? No. Now only we are having the liability. How much? 10 lakhs. So 0 to 10 lakhs means again liability increases or decreases? Decreases. Okay. When will the liability will be decreases? Liability will be decreases in the case of repayment. In the case of repayment, liability created means increases, liability repaid means decreases. Are you getting the point? Now in this situation, liability created, liability repaying, liability was created. So for that reason, increases or decreases amma? Increases. If the credit balance increases, what we need to do? Credit. What we need to do ma? Credit. So here, as per this question, what is the question they are asking ma? Amount invested by the proprietor. Yes or no ma? Here also amount invested or not invested? Invested. So in the business should be credited annadu. Should be credited. Credited means what ma? Should be credited to which account? Capital account. Should be debited to which account? Cash account. Credited to means capital account. Debited to means cash account. What is the entry we are going to record? We need to record ma? That we should not call it as debtor, we should call it as what ma? Debit. Cash account debited. Cash account debited. Debtor means who? In the case of credit sales, okay na, we are selling the products to the some person, that particular person is called as what ma? Debtor. So debtor means that person, okay na. So we should not tell what ma? Debtor. We should, how to pronounce ma here? Cash account debited. Cash account debited to capital account. So how much amount ma? Investment 10 lakhs, and here also how much ma? 10 lakhs. You know how to write the entry? Yes or no ma? So just simply I am writing. What is the format of journal? Date, particulars, LF, debit amount and credit amount. This is the format. Then after we need to write what ma? Narration. While writing the narration, we need to start with the being amount invested by the owner into the business. This is how we should write the entries. I think you understand the modern approach. Yes or no ma? Cash, asset, which balance amma? Debit balance. The balance increasing or decreasing? We are bringing into the business means the balance increases. Okay na? We are taken away from the business means the balance decreases. Okay na guys? So this is how we are going to conclude the section. Okay na? So what is the entry for this? Cash account debited to capital. Cash account debited to capital account. So is there any doubts in this class? Okay na? We have discussed about the capital, drawings, business, owner and assets. Major discussion is called as what ma? Asset. How many types of assets are there? 2 types. Current assets, non-current assets. Non-current asset is also called as fixed asset. Non-current asset again classified into how many types? 3 types. Okay na? Tangible, intangible, vesting assets. Tangible means which we can see and touch. Intangible means which we cannot see and touch. Vesting means natural resources. Okay now, what is the meaning of non-current asset? Benefit getting more than 1 year, or intention to use more than 1 year. What is the meaning of current asset? benefit getting less than 1 year, our intention to use less than 1 year, or within 1 year easily convertible into cash. So these are the three definitions for the current asset. So next, then after we have discussed certain MCQs. So how many books will be there for the financial accounting? 2 books, concept plus MCQs in 1 book and workbook in separate. Okay, this book is sufficient or not sufficient? Sufficient, because we have incorporated what not only the board book questions, past questions plus MQB's questions also we have incorporated in this book itself. So thank you. Have a nice day. Hello. Very good morning, guys. Okay. First, we can revise all the things which we have discussed in the previous classes. Then after I will discuss the new topics. Sir. So we have started with the terminologies. So before starting of terminologies, we have seen one of the principle called as separate entity concept. So in our India, we are going to follow the GAAP. What is the meaning of GAAP, Amma? Generally accepted accounting principles. Okay, na? All the rules and regulations will be there in the GAAP. Okay, na? From there, we are following some of the rules and regulations related to accounting. Okay, na? What is the separate entity concept is saying? As per separate entity concept, owner is a different person, business is a different person. We need to think from point of view of business. We should not think from point of view of owner. We means in the class business itself. Here, first of all, in order to start a business, owner need to invest cash, need to make the investment in the form of cash or goods or in the form of other assets. Okay, now. Here owner given the money to us means we need to repay na, we no need to repay na, we need to repay. The investment made by the owner into the business is called as capital. We all know, yes or no ma? So that capital is asset or liability for us? Liability. Why? Because we need to, we are having an obligation to repay in future. For that reason, capital is called as liability. Next one, what is the meaning of business? A place where goods are exchanged and services are rendered. What is the meaning of good? Good means an object or commodity with an objective of resale. Okay, either we can purchase and sell or either we can manufacture and sell. But we should not do what ma? We should not do the use and resale. Okay, na? We should not use and resale, but what we can do ma? Either directly we can purchase and we can resell, or directly we can manufacture and we can resell. Next one, what is the meaning of drawings? Anything taken over by the proprietor from the business for the personal use. Okay, anything means what ma? He can take over the cash, okay na, or kind, okay na, goods or any other assets he can take over for personal use or business user. For personal use, it is called as drawings. Drawings means who need to pay to us? Owner need to pay to us. So asset or liability? Asset. Drawings is an asset and the capital is a liability. You know what is the meaning of expenses and what is the meaning of incomes. Okay na? Any amount outflow means for the purpose of business, it is called as what ma? Expenses. Okay na? Expenses, we are having 2 types of expenses. We can discuss all the things. Okay na? Next, what is the accounting treatment for the drawings? We need to reduce from the capital. Yes or no ma? So then after we have seen all the discussion related to capital. First we will start with the opening capital. Then after what we will do ma? Drawings. Drawings, who need to pay ma? Owner need to pay to us. So for that reason we need to reduce. Then after what ma? Interest on capital. It is an expenses to us. So we need to add. Next, reduce the interest on drawings. It is an income to us. We need to less. And additional capital we need to add. And then we will get what ma? Closing capital. For that closing capital, what we will do? Net profit means we are going to add, net loss means we are going to reduce. Are you getting the point or not? Once again, opening capital means what ma? Initial capital brought by the owner into the business. So then after drawings means what we need to do ma? Imagine owner invested 10 lakhs. Owner invested how much? 10 lakhs. Okay na, owner taken away the 1 lakh worth rupees of goods. Okay na, then net amount, how much amount we need to pay? 10 lakhs minus 1 lakh. How much amount we need to pay? 9 lakhs. So we need to reduce from the capital. We need to add back to the capital. We need to reduce from the capital. Next, then after interest on capital. Okay, now who need to pay ma? We need to pay to the owner. For that reason, we are adding, we are reducing, we are adding. And next one, interest on drawings. Who need to pay? Owner need to pay to us. That means we need to reduce, we need to increase, we need to reduce. Then after additional capital, we need to pay. So that for that reason, what we need to do ma? Add. Then we'll get what ma? Closing capital. For that closing capital, what we need to do? Add back net profit or reduce net loss. So both the simultaneously will be there. No, okay na. If net profit is there means there will not be having net loss. If net loss is there means there will not be having net profit. Okay, now from both the points, from both the things, any one will be presented. Okay, now profit means profit, loss means loss. That's all. Then after we have discussed, we have started the discussion of modern approach. How many approaches we are having, sir? Means totally 3 approaches. Totally how many approaches ma? 3. First one is called as traditional approach. Second one is called as modern approach. Third one is called as accounting equation approach. First one is called as what ma? Traditional approach. Traditional approach means we are having the golden rules. What are the golden rules we are having? Personal account, real account and nominal account. And next one. Next modern approach means what ma? We have discussed these things. Next one, accounting equation. Accounting equation we can discuss in further classes. Okay, now you know equation. What is the equations are? Asset equal to equity plus liabilities. Okay, now this is called as accounting equation. We can discuss in further classes, no problem. As of now, you know all the things related to traditional approach, and now we are discussing about the modern approach. Already we have discussed, we have not discussed. Already we have discussed. In this modern approach, what we have done ma? We have taken one account having a which shape ma? T shape. Okay na. Left hand side is called as debit record, right hand side is called as credit record. So take the shortcut of dealer. Okay na. What is the dealer spelling? DEALER. Okay na. DEA we have taken on the left hand side. Earlier we have taken on the right hand side, nothing but debit side and credit side. D for drawings, E for expenses, A for assets, then after L for liabilities, E for equity or capital, R for revenue or incomes. These 3 are presented on which side? Debit side. For that reason, we have considered it as which balance amma? Debit balance. Okay now. These drawings, expenses and assets will have which balance? Debit balance, because they are presented on which side? Debit side. When come to the liabilities, equity or capital and revenue or income, they are presented on which side? Credit side. For that reason, what this showing which balance amma? Credit balance. Are you getting the point? Okay now. These 3 are presented on the debit side, so that it is called as debit balance. These 3 are presented on which side? Credit side, so that this 3 is having which balance? Credit balance. What is the meaning of debit balance? In a particular account, debit side is more than credit side. Here if you see, debit side is having how much? 10,000 and credit side is having how much? 8,000. Which side is more? Debit side is more. Okay now. In a particular account, debit side is more than credit side means it is showing which balance? Debit balance. Okay now. So what is the meaning of debit balance amma? In any account, debit side is more than credit side, then it is called as debit balance. Next, what is the meaning of credit balance? If you see this account, debit side is having 8,000 and credit side is having 10,000. Credit side is more than debit side means it is called as credit balance. Okay na guys. Next, what we need to do ma? If the debit balance increases, we need to do debit. If the debit balance decreases, we need to do credit. In the same way, if the credit balance increases, what we need to do amma? Credit. If the credit balance decreases, we need to do debit. Are you getting the point? Simple. Simple. We are having totally how many categories? Even though if you are having the 6 categories, so we can consider it as how many categories? 4. Why, sir? Because drawings is a asset and capital is liability. So for that reason, how many categories we are having? Only 4 categories. Expenses and assets will have which balance? Debit balance. And next, liabilities and income will have which balance? Credit balance. What is the meaning of debit balance? Debit side is more than credit side. What is the meaning of credit balance? Credit side is more than debit side. If the debit balance increases, what we need to do? Debit. If the debit balance decreases, what we need to do? Credit. Debit increase means debit. Credit increase means credit. Decreases means opposite. Decreases means what, ma? Opposite. Okay, now then after we have discussed the balances. Okay, now if while doing the balance on the total column, how much amount we need to record, ma? 10,000 and 10,000. We have got the balancing figure on 2,000 on the which side? Credit side. Okay, now credit side, while writing anything we need to put the word called as by. On debit side, while writing anything we need to put the word called as to. So this is the closing balance. So for that reason, what we will write, ma? C by D or B by D? C by D. So by balance C by D. Then debit side, what we'll get, ma? To balance brought down. This is the beginning, so that brought down. This is the closing. This is, for that reason we are doing what, ma? Carry down. Closing means carry down, beginning means brought down. If you observe this one, for the debit balance, opening balance will be on which side? Debit side. For the debit balance, opening balance will be on which side? Debit side. For the debit balance, closing balance will be on the which side? Credit side. Okay, no? Don't be confused. The debit balance increases, what we need to do? Debit. If the debit balance decreases, what we need to do? Credit. In the same way, if the credit balance increases, what we need to do? Credit. And the credit balance decreases, what we need to do? Debit. Here, this is another rule. This rule will be helpful in the while doing the ledgers. This rule will be applicable while doing the journal. Okay, na? While passing the journal entries, we will follow this approach. This rule. Okay, na? While writing the opening and closing balances, we will follow which one? This one. Okay, na? This rule will be applicable in the case of ledger preparation. This rule will be applicable in the case of journal. Are you getting the point, amma? Okay, na? Just we are taking that all. Okay, na? If you understand, okay. If you're not getting any point also, okay, it will be repeating. Daily I will repeating 1, 2, 3 times. Okay, na? It will be get for you. Again, once again. For the debit balance, opening balance will be on which side? Debit side. For the debit balance, closing balance will be on which side? Credit side. Next, if you observe this credit balance means what? Credit side is more than debit side. If you see while doing the balancing, debit side 10,000 and credit side also 10,000. What is the balancing figure, ma? 2,000. This is called as what? To balance carry down. This is called as what, ma? By balance brought down. If you see this one, for the credit balance, for which balance, amma? For the credit balance, opening balance will be on which side? Credit side. For the credit balance, closing balance will be on which side? Debit side. Okay, now for the debit balance, opening balance will be on the debit side. For the credit balance, opening balance will be on the credit side. Opening same. Okay, now closing opposite. Increase same. Decrease opposite. Okay, now once again, assets and expenses is showing which balance, amma? Assets and expenses is showing the debit balance. Incomes and revenues, nothing but incomes and liabilities is showing which balance, amma? Credit balance. If the debit balance increases, we will do debit. If the debit balance decreases, we will do credit. If the credit balance increases, we will do credit. If the credit balance decreases, we will do debit. Okay, na? You need to remember only one thing. What is the thing? One, expenses and assets will show which balance? Debit balance. Opposite what, ma? Liabilities and incomes will show which balance? Credit balance. Remember, only 4 categories or only 5 categories? Only 4. Expenses and assets will have which balance? Debit balance. Incomes and liabilities will have which balance? Credit balance. If the debit balance increases, debit. If the credit balance increases, credit. If the credit balance decreases, debit. If the debit balance decreases, credit. Okay, now next. For the debit balance, opening balance will be on debit side. For the debit balance, closing balance will be on credit side. So that thing we have discussed in yesterday's class. Yes or no, ma? Opening and closing balances. For the opening balance, what we need to write ma? Balance brought down. For the closing balance, what we need to write? Carried on. Opening means nothing but beginning. Beginning means brought down. Closing means carried on. Okay na. For the debit balance, opening balance will be on debit side. What we need to write? To balance brought down. To balance brought down. For the debit balance, closing balance will be on credit side. While writing credit, what we need to write ma? By balance carried on. Closing means carried on. Opening means brought down. Closing means carried on. Opening means brought down. Okay now. Once again. For the debit balance, opening balance will be on debit side. So while writing debit, what we need to put? To a by a? To balance brought down. To balance brought down. While writing the closing balance, okay now. For the debit balance, closing balance will be on which side? Credit side. While writing credit, what we need to put? To a by a? By. Closing means C by D, B by D, C by D. So by balance carried on. Are you getting the point? Next one. For the credit balance, for which balance amma? Credit balance. Opening balance will be on the credit side. Opening balance will be on the credit side. So while writing credit, by balance brought down. For the credit balance, closing balance will be on the debit side. So while writing debit, what we need to put? To balance carried on. Okay na guys, this is the rules. What are the rules? Which approach? Modern approach. In the modern approach, we are bifurcated as first 6 categories, and then we are coming to the 4 categories. What are the 4 categories? Expenses and assets will have the debit balance. Incomes and liabilities will have the credit balance. What is the meaning of debit balance? Debit side is more than the credit side. What is the meaning of credit balance? Credit side is more than the debit side. Okay, then after, if the debit balance increases, what we need to do? Debit. If the debit balance decreases, what we need to do? Credit. If the credit balance increases, credit. Credit balance decreases, debit. Then after, opening and closing balances. For the debit balance, opening balance will be on the debit side. What we need to write? To balance brought down. Okay now, for the debit balance, closing balance will be on the credit side. What we need to write? By balance carried on. By balance carried on. Closing means carried on. Opening means brought down. Okay, once again. For the debit balance, opening balance will be on the debit side. What we need to write? To balance brought down. For the debit balance, closing balance will be on the credit side. What we need to write? By balance carried on. Next, then after. For the credit balance, opening balance will be on the credit side. What we need to write? By balance brought down. Credit side kada? So by. Okay na. Debit side means 2. Okay, once again. For the credit balance, opening balance will be on the credit side. While writing the credit, by balance brought down. Brought down. Opening balance brought down. Okay na. Next, for the credit balance, closing balance will be on the debit side. While writing the debit, to balance carried on. To balance carried on. Okay na? Or again, once again na. Okay na? Next, financial books, and we have discussed one entry. Okay na? So here, what is the entry ma here? Mr. Ram, owner of the business, started with the 10,000, 10 lakhs. Okay na? With the amount of 10 lakhs, he has started the business. We know the outcomes. Already we know the outcome. What are the outcomes here? Cash and capital. Cash and capital. You know the outcomes, so you don't know namma. You know na already. But before that, we will use the which account? Cash means asset. We will follow the real account. Debit what comes in, credit what goes out. But now we are following which approach? Modern approach. So cash means asset or liability amma. Asset. So asset which balance? Debit. Asset and expenses will have debit balance. Incomes and liabilities will have credit balance. Here cash comes into the business or goes out? Comes in. Comes in means cash balance increases or decreases? Increases. For that reason, what we need to do? Debit. Next, then after, capital means asset, liability, income, expenses. Liability. Liability which balance? Credit balance. So credit balance. Liability created, liability repaying. Liability created. Just now owner brought into the business, so liability was created. We are not going to repay. So while repaying the liability, liability will be decreases. While repaying the liability, liability will be decreased. For example, we have taken a loan from the bank for rupees 10 lakhs. Liability created, we are repaying created. That means our liability increases or decreases? Increases. While taking the loan, liability will be increases. While repaying the loan, liability will be decreases. Here we have taken, we are repaying. Taken means created. Taken means what ma? Created. So liability created means increases or decreases? Increases. So credit balance increases means what we need to do? Credit. Credit balance increases means credit. Debit balance increases means, okay, did you get the point? What is your name? Teja. Okay na this point? Liability while taking any loan or while taking any capital from the owner, liability value will be increases. Imagine, okay, I will discuss the creditor point and debtor point clearly, you can understand. Okay na? At that point of time you will get when the asset will be increases, when the liability will be decreases, we'll get the clear picture. Okay na? Until then wait. So here point, okay na? Here the liability increases or decreases? Increases. Imagine we are taking a loan, liability created and liability increases. So now only business started. Previously is there. We have started now. Okay now. Previously any liabilities we are having? No. Liability value is how much? 0. Previous this transaction liability value is how much? 0. Now liability created how much? 10 lakhs. 0 to 10 lakhs means liability increases or decreases? Increases. So what is the entry we need to write ma? Cash account debited to capital account. Cash account debited to capital account being amount invested by the owner. Okay na? So debit side 10 lakhs and credit side 10 lakhs. What is the format? Date, particulars, LF, debit amount, credit amount are the columns for the journal. You know already. Okay na guys? Then after we have discussed what ma? Certain MCQs we have discussed. Okay, I will see this. So you know the meaning of business. What is the meaning of business, Amma? A place where exchange of goods and rendering of services is called a business. Proprietor means a person who initiate to start the business. Okay now, if we start any business means we are the proprietors. Next, capital means resources either by way of cash or kind brings by the proprietor to start or run the business. He can bring in the form of cash, he can bring in the form of goods or any other asset. Okay now, we are bringing any good or asset or goods into the business by the proprietor to start or run the business is called as a capital. Next one, drawings. What is the meaning of drawings? Taken away by the proprietor for the personal use is called as a drawings. Capital means liability. Drawings means asset. Then after, what is the meaning of asset? And resources utilized by the entity for generation of revenue. For generation of revenue, we are using one particular thing for the purpose of generation of revenue. It is called as what ma? Asset. We can use for the purpose of production, for the purpose of administration purpose, for the purpose of rental purpose, for the purpose of rendering of a services. You can get a clear definition in AS 10. What is the meaning of AS, sir? Accounting standard. In the AS 10, the clear picture, the clear meaning, once again we are going to discuss at the time of discussion of accounting standards. Once again I will revise, no problem. Okay now, until then you need to understand the meaning of the asset. What is the meaning of asset? Utilizing any resources for the purpose of generation of revenue, it is called as asset. Okay now, we are using the camera for the purpose of what ma? For recording the classes and selling the classes. Okay, we are generating the revenue or not generating the revenue? We are generating the revenue with the help of camera recording setup. Okay na? So these are all called as what ma? Asset or liability? Assets. Assets are how many types? Assets are how many types, Soma? Broadly classified assets into the two types. First one is called as non-current asset. Non-current asset is also called as fixed asset. Non-current asset is also called as fixed asset. Benefit more than 1 year means it is called as fixed asset. Benefit less than 1 year means it is called as current asset. Okay now. So which are those intention to use more than 1 year? It is called as what ma? Non-current asset. Non-current asset again classified into how many types? 3 types. Tangible, intangible, vesting assets. Tangible means what ma? Which we can see and touch. Intangible means which we cannot see and touch. Okay, next vesting assets means what? Created by environment. Created by environment or natural resources. It is called as what ma? Vesting asset. For example, you have taken the camera. Camera benefit more than 1 year, less than 1 year, more than 1 year. We are having intention to use more than 1 year. Okay na. So camera is called as current asset, non-current asset, non-current asset, tangible, intangible, tangible. Okay na. Goodwill, it is intangible. Patent, it is intangible. Copyright, these are intangibles. Next one, current assets means intention to use less than 1 year or more than 1 year, less than 1 year. There is another definition called what ma, within a less time we can convertible into cash. Okay, less time means how many months? 1 year. Within 3 months we are going to convert, means it is called as liquid assets. More than 3 months, less than 1 year means non-liquid assets. Okay na, easy. You can get clearer discussion in further classes, no problem. So just how many types of assets? 2 types, current assets and non-current asset. Non-current asset is also called as fixed asset. Intention to use more than 1 year. Fixed asset is again classified into 3 types. Okay na, tangible, intangible, vesting assets. Tangible means which we can see and touch. Intangible means which we cannot see and touch. Vesting means created by the natural resources. Example, oil wells, bore wells, coal mines, KGF. KGF. In the KGF we are having what ma? Coal mine, gold mines. Next one, current assets means intention to use less than 1 year or within less time we are going to convertible into the cash. Again, current asset is classified into how many types ma? 3 types, liquid assets, non-liquid assets and fictitious assets. Okay, now fictitious assets we can discuss in further classes. So liquid assets means what ma? Less than 3 months convertible into cash. Non-liquid asset means what ma? More than 3 months but less than 1 year. More than 3 months but less than 1 year. It is called as non-liquid asset. Example for the non-liquid asset is what? Closing stock. Example for the liquid asset is called as cash and bank balances. Cash and bank balances. Is there any doubts up to here? Okay, now up to here we have discussed in the previous class. Yes or no ma? Next we are going to discuss the liabilities. In this class we are going to discuss what ma? Liability. What is the meaning of liability? You know already. Liability means an obligation to be paid in future. Okay na, capital is an obligation to repay na, no need to obligation. Yeah, is the obligation to repay. So that it is called as liability or asset. Liability. Okay, liabilities are how many types? 2 types. Okay now, broadly 2 types amma. Internal liability, external liability. Internal liability and external liability. What is the meaning of internal liability, sir? Capital. What is the meaning of internal liability, amma? Capital. Why they have bifurcated, sir? Because capital will be repaid at the time of winding up. Winding means what ma? Closing. Okay na, capital will be repaid only at the time of winding up. If you repay the capital middle of the business means we cannot do the business. Without the capital, without the investment, we can do the business or we cannot do the business, sir. We cannot do the business. Here we are having any time period. There is no time period. Only at the time of closure of the business we will repay. For that reason, it is an internal liability. It is an internal liability. No time limit. Having time limit. No time limit. Okay na. Again, the external liability means what ma? Other than capital. External liability means what? Other than capital. These external liabilities are classified into 2 types. Are you getting the point? How many types? 2 types. First one is called as long-term liability and short-term. Long-term means what? Within short-term. Short-term means what ma? Within 1 year we need to repay. Short-term means within 1 year we need to repay. Long-term means what ma? After 1 year we need to repay. Are you getting the point or not? So this time period we need to check from the at the time of preparation of financial statements or final accounts. The time of preparation of final accounts we need to check this time period. Are you getting the point? So easily liabilities are classified into how many types? 2 types. Internal liabilities, external liability. Internal means capital. Why we have bifurcated as internal liability? Because there is no time period. Here we are having the time periods. Within 1 year means short term. More than 1 year means long term. Okay, you can say, sir, this is also more than 1 year. But this is also more than 1 year. But having time period or not having time period? Not having time period for the capital. Not having time period for the capital. It is an infinity. It is an infinity. Okay, now only at the time of winding up only we are going to repay the capital. For that reason, they have separated the capital as an internal liability. Remaining other creditors, bills payable, okay na, another outstanding liabilities. These are all called as what ma? external liabilities. External liabilities are classified into two types: long term, short term. Long term means more than 1 year we need to repay. Within 1 year we need to repay means short term liabilities. Are you getting the point? These are the types of liabilities. Sir, imagine how many types of years are there we are having. Two types of years: calendar year and financial year. Now we are going to discuss about the financial year. Sir, year means how many months? Amma, year means how many months, Amma? 12 months. In a year means we are having the 12 months. Here in the financial year will be started in financial year will be start from April 1st. Will be start from April 1st. Will be end on 31st March. Why, sir? From April, count the 12 months. April, May, June, July, August, September, October, November, December, January, February, March. Okay, na? 12 months. We have got or not? Got. But here the years are different. January means December completed means again while entering into the January, year will be changed, same year. Year will be changed. So if you start 2024, if you start with the 2024, it will be end with the 2025. Okay, na? This is how we are going to concluding it as what, ma? Financial year. Financial year means they can represent in the form of 24, 25 or 25, 26 or 20, 26, 27 like that. Calendar year means only 25, only 26, only 27. Calendar year will be start from 1st January. It will be end on 31st December. Okay, na? So same year, different years, same years, but the financial year is different year. So on this date, we need to prepare what, ma? At the end of every year, we need to prepare the financial statements. We need to prepare the financial statement. As of now, I am putting it as what, ma? Final accounts. On this date, we need to check. Okay, na? Here on this date, we are having one loan. We are having one loan. On this loan, we need to repay after 12 months. From which date onwards? From the date of 31st March. The due date here is 1 year after, na? That means we can take what, ma? September 2026. September 2026 means here, from here to here, we are having the time period more than 1 year, less than 1 year, more than 1 year. That means it is called as long term or short term. Long term liability. Are you getting the point or not? From here, within 1 year we need to repay means it is called as short term liability. Okay, na? But capital is called as internal liability. Capital is called as what, ma? That one is a separate thing. Okay, now for that reason we are having the what is the equation, what is the accounting equation? Asset is equal to liabilities, asset equal to equity plus liabilities, asset equal to equity plus liabilities. Are you getting the point? For that reason the equation was framed like asset equal to equity plus liabilities. They are not going to call it as what, ma? Asset equal to liabilities. Okay, now because capital equity is called as internal liability, other liabilities are called as external liability. External liability, they are concluding it as what, ma? Liabilities. Capital is equal to equity. Capital is equal to equity. Are you getting the point? This is how we have completed what, ma? Types of liabilities. How many types of liabilities? Two types: internal liability, external liability. Internal liability means capital, because we are going to repay only at the time of winding up. We are not having any time period. It is an infinite. It is a infinite. Next one, external liability means other than internal liability. External liability means what, ma? Other than, and that means what? Loan amount, other outstanding, creditors, bills payable, trade payables, etc. Okay, next one, long term liability and short term. External liabilities are classified into two types. Long term means within more than 1 year we need to repay. Short term means what, ma? Within 1 year we need to repay. Next we are going to discuss about the revenue. Revenue means what? Revenue means Inflow na outflow na? Inflow. Gross inflow of cash or receivables from sale of goods or rendering of services is called as a revenue. Okay, now we are selling the goods and we are taking the money. The money is called as, here the money is called as what? Revenue. Nothing but income. Nothing but gross inflow of cash or receivables by sale of goods or rendering of services. Next, what are the examples? Sales, interest received, rent received, etc. What is the meaning of expenditure? Amount spent for running the business organization. Amount spent for running the business organization is called as expenses. For up to here, we have discussed the terminologies of, the business, the capital, the drawings, proprietor, assets and liabilities, next revenue and expenses. Okay, now these two are going to helpful to find out the profit or loss. Okay, now what are the two things will be helpful to find out the profit or loss? Revenue and expenses are helpful to find out the profit or loss. Then assets and liabilities are useful to find out financial position. Used to find out what financial position. So that's why we are going to prepare the two statements. What are the two statements? Trading and P&L account and balance sheet in the final accounts. The final account. Trading and P&L account, we can find out the profit or loss. In order to find out the profit or loss, which are the required? What are the requirements? Incomes and expenses. To find out the financial position, uh, assets and liabilities. We are having the two types of positions we can discuss. Okay, now up to here, is there any doubts? So we have started the discussion with which approach? Modern approach. In the modern approach, how many categories we are having? Initially 6, and then we are concluding it as 4. In that, expenses and assets will have which balance? Debit balance. Okay, now liabilities and incomes will have which balance? Credit balance. What is the meaning of debit balance? Debit side is more than credit side. What is the meaning of credit balance? Credit side is more than debit side. Then after, debit balance increases means debit. So debit balance decreases means credit. Credit balance increases, credit. Credit balance decreases, debit. Then after, further debit balance, opening balance will be on the debit side. What we need to write? To balance brought down. Further debit balance, closing balance will be on the credit side. What we need to write? By balance carried on. Further credit balance, opening balance will be on the credit side. What we need to write? By balance brought down, to balance carried on. Okay now guys, these are the basic rules. Okay now, opening balance, closing balance will be helpful at the time of ledger. Okay now, increase and decrease will be helpful at the time of journal. Okay now we are going, is there further discussion? I can discuss in further class. We are going to discuss some of the journal entries. Then we can understand the modern approach in some more way. Okay na? Okay, shall I start? In yesterday, we have completed one journal entry. What is the journal entry, ma? Owner investment. Okay, now next, second one. So please put the second one. I think you have taken the notes up to here. Yes or no, ma? Completed, journal entry record చేయలేదా? Then record. The newcomers, please leave the space. Okay, na? Leave the 2 to 3 pages. And then start. Okay, na? Keep the journal entries. Read, huh? Okay, Nama. So second one. What is the second one means? Goods purchased for rupees 10 lakhs. Goods purchased for rupees 10 lakhs. The same transaction they can ask in the form of what ma? Goods purchased from Mr. Raju. Goods purchased from Mr. Raju for cash of rupees 10 lakhs. Or they can ask goods purchased for cash of rupees 10 lakhs. In how many ways they can ask the same transaction ma? In 3 ways. Goods purchased for rupees 10 lakhs or goods purchased from Mr. Raju for cash of rupees 10 lakhs or what ma? Goods purchased for cash of rupees 10 lakhs. Okay na? If they can ask the question in 3 ways. But same answer, different answer. Same answer. What is the outcome here? Purchases and cash, not the goods. We need to take the outcome as purchases. Purchases and cash. Here the person name is mentioned, but even though we are taking it as cash, for what is the reason ma here? They have mentioned what ma again for cash. Okay now after the person name. So that means this is a cash transaction, a credit transaction. Cash transaction. What are the outcomes? Purchase and cash. Here the purchase means income or expenses, asset or liability. Expenses. So purchase is an expenses. So previous which balance amma? Debit balance. Purchase means expenses. We are having which balance? Debit balance. Sir, previously we are having any purchase. Previously we are not having any purchase. Previously what is the purchase value? 0. Now what is the purchase value? 10 lakhs. That means expenses increases or decreases? Increases. Okay now maximum 90% expenses and incomes will increases. 90% cases what will be happen ma? Expenses and incomes will be increases. Not all the times. Maximum how much percentage? 90% or 99.99% expenses and incomes will always increases. In some of the situations incomes and expenses will be decreases. I will discuss those concepts also. Okay guys. So previously we are not having any purchase. Now only we are having what ma? Purchase. That means previously value of purchase is how much? 0. Now value of purchase is how much? 10 lakhs. So that means increases or decreases? Increases. So which balance is increasing? Debit balance increases means what we need to do? We need to do debit. Need to get the point. Okay guys. Or if you follow the traditional approach means purchase, expenses, nominal account, debit all expenses and losses, credit all incomes, and at that point of time also purchase is an expenses, debit. Okay na? Next one, cash is an asset. Will have which balance? Debit balance. Increases or decreases? Why it is decreases? Going out or comes in? Going out. Going out means cash balance will be decreases. So decreases means what we need to write? So debit balance decreases means credit. So what is the journal entry we need to record ma? Purchase account debited to cash account. Okay na guys? Okay, write this thing. Okay, guys. Okay, what is the format, Amma? Date, particulars, LF, debit amount and credit amount. So, which thing was debited? So, purchase is debited. So, purchases account debited to cash account. How much, Amma? 10 lakhs on the debit side, 10 lakhs on the credit side. So, narration being goods purchased for cash. So this is how we need to write the journal entries. Did you get the point? Okay, na guys. Further discussion we can discuss in the next class. Okay, na guys. Previous class we have discussed one entry. Now we have discussed only one entry. That means only one journal entry we have learned. We have discussed about the types of liabilities, what is the meaning of incomes and what is the meaning of expenses also we have discussed. Okay, na? Slowly we can go, no problem. Okay, first of all you need to learn about the which approach? Modern approach. That is only my target. Okay, na? Okay, bye. Is there any doubts? Thank you. Have a nice day. Bye bye. Hello. Okay guys, very good morning. Okay, we have started with the discussion of terminologies of accounting. So first we have discussed about the generally accepted accounting principles. What is the meaning of generally accepted accounting principles? These are the principles will be applicable for the India. Only in India, these are the concepts will be applicable. In this, we are having the so many principles. One of the principle is called as separate legal entity. What is the meaning of separate legal entity? Owner is a different person and business is a different person. We have to think from the point of view of business owner. We have to think from the point of view of business. So here, anything investment made by the owner into the business is called as a capital. So we need to repay capital to the owner or proprietor, we can call it as. So anything obligation to repay from the point of view of business means it is called as liability. For that reason, capital is called as liability. So owner can invest in the form of cash or in the form of goods or in the form of any other asset. For example, owner is having one building. Okay, now in that building, in the first floor, owner will stay with the family. In the second floor, okay, now we are running the business. We need to pay rent to the owner for that reason. Okay, now this is the asset belongs to whom? Asset belongs to owner initially. For example, the total building was registered with the name of business means. With the name of business means that particular asset belongs to business. Okay, now the registered in the name of owner means that property belongs to owner. The registration is happening with the name of business means the particular asset will be belongs to the business. Okay, now owner can bring the cash, goods or any other asset. Next, what is the first basic meaning amma? Business. Business is a place where goods are exchanged and services are rendered. What is the meaning of goods? An object or commodity, okay, now, which are purchased and resale or manufactured and resold. But we should not do what ma? We should not do use and resale. So if we are using that particular commodity or good, it is called as what ma? It is called an asset. Okay, now it is not called as good. Next one. What is the meaning of drawings? Anything taken over by the owner from the business for the personal user or business user. Personal use is called as a drawings. So here are drawings. Owner taken away the cash of rupees 10 lakhs. So owner need to pay to us or business need to pay owner. Owner need to pay the business. Are you understanding the concept? Sir, here in this situation, okay, now who has taken over ma? Owner taken over the good. So imagine we are having which business? Mobile business. On the date of February 14th, okay, now he has taken over the asset, one of the good from the business. Example what ma? Mobile. Okay, now that particular mobile given to some other person for personal use or business user. Personal use. So in that situation, we have to recover amount from the owner. Okay, now the situation is called as drawings. Who will give money to us? Owner need to give money to us on that mobile phone. Okay, now if you sell that mobile phone means we are going to collect amount from the customer, but we are selling that particular product. Owner taken away na? Owner taken away. In this situation, we need to collect amount from whom? Owner. But we should not write the owner name in the books of accounts. So instead of owner, we need to put the word called as what ma? Drawings. In the case of investment, instead of owner, we need to put the word called as capital. So if the drawings is an asset, drawings is an asset, capital is an liability, because we have to receivable. Okay, now we have to receivable from the owner. Anything the receivable is called as asset. Anything repayable is called as liability. So what is the accounting adjustment, sir? From the capital, imagine we have invested in the form of how much ma? 10 lakhs. So owner have taken away the 1 lakh from the business. So net amount, how much amount we need to pay? 9 lakhs to the owner. Okay, now instead of we need to repay 10 lakhs and he need to repay 1 lakh. Instead of what we will do ma? We will set off that 1 lakh from the 10 lakhs and totally how much amount we need to repay? We need to repay 9 lakhs to the owner. This is the accounting adjustment. So drawings we need to reduce or we need to decrease. We need to reduce or we need to increase. We need to reduce. Why we need to reduce? Drawings means, okay, now owner need to repay. Drawings means what ma? Owner need to repay. Capital means what ma? Business need to repay to the owner. Okay, now here the 10 lakhs we need to repay. How much amount we need to collect from the owner? 1 lakh. By way of setting off, how much amount totally we need to repay now? Only 9 lakhs. If you pay means it is sufficient. So for that reason we are reducing the drawings from the capital. The behavior of capital is called as liability. The behavior of drawings is called as asset. Are you getting the point up to now? Okay, Namma. Next one. We are discussing the total discussion about the capital. First we will start with the what ma? Opening capital or closing capital? Opening capital. Then after we are going to reduce the drawings. We need to reduce the drawings. Next, interest on capital. What is the meaning of interest on capital? Here the capital is called as liability. On that liability we need to pay the interest. Okay, now we need to pay the interest means from whom we are going to pay? We will pay to the owner. Anything paid to the owner means we are going to add back. We are going to add back. Anything we have to receive from the owner means we need to reduce. So here drawings we are going to collect from the owner. For that reason we are reducing. Interest on capital we need to pay to the owner. For that reason we are adding. Next, interest on drawings. Who need to pay? Owner need to pay us. Okay, now drawings and interest on drawings owner will pay to us. Okay, now capital and interest on capital we will pay to the owner. So here this amount is the more ma. Imagine this amount will be more always. Okay, now 10 lakhs. Okay, now this drawings amount will be less. For that reason what we are doing? We are reducing. Are you getting the point? And the interest on capital we need to add, we need to reduce, we need to add, because this capital we need to repay and this one also we need to repay. So repay means we need to repay means we are going to add. Okay, now we are receiving means we are going to reduce. So next one, additional capital. What is the meaning of additional capital? In the for running the business, we have required to get the more money from the owner. In that situation, again he will invest into the business. That again investment, once again the owner invested into the business, that capital is called as additional capital. Okay, at the starting of the business he has brought now, that capital is called as opening capital. Generally opening capital means previous year closing capital will be the current year opening balance. Okay, now in the middle of the year again the owner invested into the business means that one is called as additional capital. What is the meaning of closing capital? Year ending closing. Okay, now current year closing balance is nothing but current year closing. Again this will be the opening for the next year. At last what we will do, we are going to adjust the profit. In case of profit means we have to give to the owner, for that reason we need to add. In the case of loss means we need to reduce the from the capital. Why we need to reduce from the capital? Because owner need to give to us. Anything we are going to receive from the owner means we need to reduce. Anything we need to repay to the owner means we need to add. Okay na guys, is there any doubts? So what is the first point? Opening capital minus drawings plus interest on capital minus plus interest on capital minus interest on drawings plus additional capital. Then net profit we need to adjust at last. What nama? Net profit means add, net loss means reduce. Next one, what is the accounting equation we are having? Asset equal to equity plus liabilities. Why we are bifurcating the liabilities into two types? We have discussed in the previous class. How many types of liabilities are there? Two types: internal liabilities, external liabilities. Internal liability is called as a capital. Internal liability is called as capital. Why we are bifurcating it as internal capital? Because okay, now we have to repay the capital, but at which point of time we are going to repay? Only at the time of winding up we are going to repay. That means having a sufficient time, have infinite time period. So always it will be more than 1 year or less than 1 year? More than 1 year only. But even though it is more than 1 year, but we are at the time of disclosing in the balance sheet. At the time of disclosing in the balance sheet, first we need to disclose the capital, and then we need to disclose the non-current assets, and then current assets, like okay now. Next, long-term liabilities, short-term liabilities. What is the meaning of long-term liabilities? Repayable more than 1 year. What is the meaning of short-term liabilities? Less than 1 year. First we need to disclose what? Capital. Then after long-term liabilities. Then after short-term liabilities. When come to the assets, first we need to disclose the non-current assets. Okay, now fixed asset we need to disclose, and then we need to disclose the current assets. Okay, now this is the way of disclosure. In the liability, first we need to disclose what? Capital. Then after long-term liabilities. Then after short-term liability. In the assets, first we need to disclose fixed assets are non-current assets. Then after current assets. Next we are going to discuss about the modern approach. Okay, now while going to discuss the modern approach, so even though we are having how many categories? 6 categories. We have bifurcated. At last we have come to the conclusion that how many categories we are having? Only 4 categories. Assets and expenses will have expenses and assets will have the debit balance. Next one, liabilities and incomes will have the credit balance. We have taken a shortcut of what? Dealer. DEA LER. D for drawings, E for expenses, A for asset. Okay, now these 3 are presented on which side? Debit side. For that reason we are concluding it as which balance? Debit balance. This liability, equity or capital, revenue or income is presented on which side? Credit side. For that reason we are taking it as which balance? Credit balance. What is the meaning of debit balance? Debit side is more than credit side, it is called as a debit balance. What is the meaning of credit balance? Credit side is more than debit side, it is called as a credit balance. Okay, now if the debit balance increases, we need to do debit. If the debit balance decreases, we need to do credit. If the credit balance increases, we need to do credit, and decreases, we need to do debit. So once again, the debit balance increases means debit. Okay, now debit balance decreases means credit. Opposite, debit increase, debit. Credit increase, credit. In the case of debit decrease, credit. Credit decrease, debit. Okay, now so how Okay, at which point of time it will be increases, at which point of time it will those are decreases, we can discuss in the further classes, no problem. Okay, at now what is the conclusion? Drawing is an asset, and the next capital is a liability. Okay, so to conclude, expenses and assets will have which balance? Debit balance. Expenses and assets will have the debit balance, and liabilities and incomes will have the credit balance. Okay, if the what is the meaning of credit balance? Credit side is more than debit side. Next we have discussed. Okay, here this is the example. Debit side we are having the 10,000, and credit side we are having the 8,000. Which side is more? Debit side. This particular account is showing which balance? Debit balance. Okay, next what is the situation here, ma? Debit side 10,000, credit side 10,000, debit side 10,000, 8,000. Sorry, credit side 10,000, debit side 8,000. Which side is more? Credit side is more. So because this particular account is showing which balance? Credit balance. So if you observe this scenario, for the debit balance, opening balance will be on the which side? Debit side. For the debit balance, closing balance will be on the which side? Credit side. Okay, we need to write the opening balance means balance brought down, closing balance means balance carried on. For the debit balance, opening balance will be on the debit side. For the debit balance, closing balance will be on the credit side. The same scenario we have to apply for the credit balance. The credit balance, opening balance will be on the credit side, and closing balance will be on the debit side. Okay, this is the points we have discussed. Opening and closing balances. Opening balance means brought down, closing balance means carried on. Next, for the debit balance, opening balance will be on the debit side. What we need to write, ma? To balance brought down. To balance brought down. For the debit balance, closing balance will be on which side? Credit side. What we need to write, ma? By balance carried on. By balance carried on. For the credit balance, opening balance will be on the credit side. We need to write by balance brought down. For the credit balance, closing balance will be on which side? Debit side. We need to write what, ma? To balance carried on. To balance carried on. So these are the principle we need to remember. Okay, next we have discussed about the terminologies. So if you see the scenario, so totally we are having the two parts, right? So section A, they will give the MCQs, 15 MCQs, each one carries 2 marks. How many marks? 30 marks. Section B, they will give how many questions, ma? Totally 7 main questions. In that 7 questions, we are having the sub questions also. We are having what, ma? Sub questions. Totally each question carries how many marks? 14 marks. Okay, 7 questions, each question carries how much, ma? 14. So but in that 7 questions, how many questions we need to attempt? We need to attempt only 5. That means 2 questions we are having the choice. If you observe this scenario, 2A compulsory, we can get question from depreciation or BRS, and 2B will get question from rectification of errors and capital and revenue. From these topics only we are getting how many marks, ma? 14 marks. These are all the 4 topics we have already discussed. You already learned in the foundation itself. So that means once again you are not going to discuss, sir. I will discuss once again, because in the foundation you have learned only MCQs point of view. Here we are going to see the problematic point of view. Okay, guys. Next, consignment and bills of exchange. From both the topics we are getting how many marks, ma? 7 marks. We are getting how many marks? 7 marks. Again, these topics we have learned in foundation itself. In the foundation we are having the bills of exchange, consignment, joint venture. So in that scenario, from these 2 topics we are getting how many marks, ma? 7 marks. Next, leases and hire purchase, a small topic. Okay, easily we can get 7 out of 7 marks. Okay, so again 14 plus 7, how much, ma? 21 marks. We are getting from which syllabus? 21. Okay, why నువ్వేమో తొందరగా ఉంటావు, కన్ఫ్యూజ్ అవుతావు, నన్ను కన్ఫ్యూజ్ చేస్తావు. Okay, 14 plus 7, 7 3s are and how much? 21. Totally 21 marks we are getting from foundation. Not only those 21, single entry is similar to final accounts. Single entry is similar to final accounts. How many marks we are getting? 14 marks. So 21 plus 14, 35 marks. 35. Then after we are having a concept called as NPO and provision for bad debts. Provision, PBD, I think you have known. Okay, Again, this topic for how many marks? 5 marks. Totally how many marks? 40 marks we are getting from which syllabus? Foundation syllabus. Okay, na? That means 40 marks are easier or not easier? Easy. Easily we can get the 40 marks from the, even without revising another topics. Totally how many questions you need to write? 5. In that already 2 completed, 3 completed and 4 completed. Then how many questions you need to attempt? Only remaining 2 questions you need to attempt. Okay, na? From the 2 questions, accounting standards will play a major role. If you learn the accounting standard, 1, 2 and nearly 3 questions we can answer. Okay, na? And extra you need to learn only what, ma? Accounting standard. If you learn the accounting standards perfectly, then easily you can get how many marks? 80 plus. Easily you can get how many marks? 80 plus. What are the remaining topics we are having, sir? Remaining topics just partnership, insurance claims. That's all. Partnership, insurance claims, standards. Partnership, insurance claims, standards, hire purchase, leases. These are the 5 additional topics are there in the CMA Inter paper number 6. So easily we can get 80 plus marks. Don't worry about it. Okay, now we are going to start with the basics, because I think you have learned the traditional approach, like what? Personal account rule, real account rule, nominal account. Now from today onwards, I am not going to repeat once again what ma personal account, real account, nominal account. But some of the situations I will refer those also. But mainly we need to learn about which approach? Modern approach. In the modern approach, totally we are having how many categories? 4 categories. Even though 6 categories, we have finally divided into how many categories? 4. Asset and expenses will have the debit balance. If the debit balance increases, it will be debit. If the debit balance decreases, it will be credit. Next, incomes and liabilities are having which balance? Credit balance. Okay, now if the credit balance increases, it will be credit. Credit balance decreases, it will be debit. Okay, now when will the liability will be increases? At which point of time liability will be increases? Liability created. Liability created. Okay, now in the situation of liability created, liability value will be increases. What is the meaning of created, sir? For example, we have taken a loan. That means liability created, liability repaying, liability created. Just now we are taking loan. Just now we have purchased the goods on credit. Okay, na? In this point of time, liability will be increases or decreases, Amma? Increases. Just now we have taken a capital from the owner. Okay, na? Additional capital from the owner. In these situations, liability will be increases or decreases? Increases. Why? Creation of liability. Creation of liability means taking cash or taking goods from the proprietor or purchasing the goods from the creditor. So these are all the situations liability is creating or repaying the liability. Liability is creating. In this situation, liability will be increases. At which point of time liability will be decreases? Repayment of liability, repaying the loan. Okay, na? Next, then after repaying the capital, then after we are repaying cash to the creditor. Okay, na? In these situations, what we need to do? Liability will be decreases. Outstanding salaries. Now only outstanding was happened. Okay, na? In this situation, liability will be increases. Okay, na? At the time of payment of outstanding salaries, liability will be decreases. In the same way, asset. Asset comes in means asset increases. Asset goes out means asset decreases. Always expenses and incomes are increases. In some of the point of situations only, incomes and expenses will be decreases. I will explain in that situation. Okay, na? Until then, always incomes and expenses are increases or decreases? Increases. When will the liability will be increases? Liability will be increases in the situation of creation. In the situation of creation. Liability will be decreases in the case of repayment. In the case of repayment. Asset will be increases in the case of comes in. Asset will be decreases in the case of goes out. You know, when the comes in, when the goes out. For example, we are purchasing the building for cash. We are purchasing the building for cash. Here, both are assets. Both are assets. Both are having which balance, ma? Debit balance. Okay, na? Building and cash. Okay, na? What are the two outcomes? Building and cash. Both are the assets. Both are having which balance? Debit balance. But the building value will be increases, cash balance will be decreases. Common sense. We are purchasing the building means cash we are paying. Cash comes in or goes out? Goes out. Goes out means cash balance will be decreases or increases? Decreases. Building value will be increases. So building account debited to cash account is the journal entry. Are you getting the point? We can discuss in a slower manner only. Okay now. So what are the extra topics we are having ma? Hire purchase, leasing, insurance claims, standards, partnership. Okay na. And extra we are having the branch and departmental. That's all. Okay na. So the syllabus, if you see the syllabus will be the vast when compared to the foundation. Why? We are having the extra topics. Okay na. From the foundation, how many marks we are going to get? Nearly 40 from the descriptive point of view only. Nearly 40 marks from the descriptive point of view. We can get at least 5 MCQs from the foundation. Whatever the MCQs we have referred in the foundation, those MCQs only will be repeated once again in this situation. So how many marks? Nearly 10 marks from the MCQs point of view. That means totally how many marks? The same syllabus we are repeating in the CMA 50 marks. Minimum to minimum 50 marks you are going to get from the foundation syllabus itself. For that reason, I need to explain again what? Basics onwards. Okay, now this is the main reason I am starting the basics. Otherwise, no need, amma. Otherwise, will be there or will not be there. Need is no need. Then I can directly start the higher purchase, those topics. But why I am not starting the higher purchase, those topics? Because we are having 50 marks. We will get minimum to minimum 50 marks the foundation syllabus. The foundation syllabus is the easy syllabus when compared to the intermediate syllabus. Yes or no ma? So already you know all the concepts. Just what you need to do, that concept we need to apply on problems. That's all. Okay na? That thing I will take care. Okay na guys? So you can be in a cool manner. Please listen the classes. Very cool. Then after what you need to revise cumulative revision. And in the first class I have already told you what is the meaning of cumulative revision. Cumulative revision means we need to study the 2 days topics and as well as we need to revise the yesterday's, day before yesterday's. So do the cumulative revisions. Okay now please understand the concept and then try to write the journal entry. Don't mug up. What is the salary entry? Salary account debited to cash. What is the rent entry? Rent account debited to cash. If you mug up the in this stage means you cannot go through the further stages. For example, if you see here, totally accounting. Here we are having 100 marks in the paper number 6 and again we are having the accounts in 50 marks in the paper 10. CA, corporate accounts and audit. In that audit is 50 marks, accounts is 50 marks. But we will get nearly 20 extra marks in the paper. Nearly 70 marks you can get in the corporate accounts also. How many marks you can get? 70 marks you can get in the corporate account. That means how many marks totally? 170 marks in CMA inter. And again in the CMA final, the same topics will be there. Some extra topics, that's all. 100 marks paper, CFR. If you clear that CFR, the total group will be completed. Group 4 will be there. In the CMA final, which group, amma? Here group 1, group 2, there group 3, group 4. 1, 2, 3, 4. In the last group, again the first paper is called as CFR. Okay now, that CFR paper will be the difficult from the student point of view. Why? They don't know the basics. They have mugged up at the situation of foundation and enter. They have learned the entries in a batti antaru kada. Atla chesaru. In that at that point of time, the difficulty will be there or easily will be there. Difficulty will be there. Okay na guys. So please learn the concept. Not only the accounting, even though if you take the costing, DT or law, learn the concept manner. Law means what ma? You need to study the theory means from top to bottom you need to study the theory topic. No, you need to understand the concept. They will give the practical questions. You need to attempt the practical questions. At which point of time you will attempt the practical questions? Only you understand the concept, then only you can attempt. If you take the accounts, totally how many questions we are having? 7. Okay, now 7 to the 14 questions they will give. Imagine how many questions they will give. Nearly 14 questions. From that 14 questions, 8 questions we may get from the book. Remaining questions we will get outside. At that point of time, you need to attempt that question. You will leave. You need to attempt. Okay, now when you do the practice, when you solve the new questions, then only you can able to solve. You can able to write the exam with a perfection. While writing the examination, you may get doubt. Okay, yes, I am doing the right thing or not. Okay, na. Always remember one thing. I am doing the right. My answer only correct. What you need to think, ma? We are doing the correct. My answer only will be the correct. In that manner only you should be there. Otherwise, if you getting a doubt means you will end up with the negative result. Okay, now what is the positive thing you need to think, ma? Like always I will get the rank. Always I will study. Daily I will come to the class. First principle is called as what, ma? You need to come to the class daily without any absent. That is the first one. Second one is what? Only coming to the class is sufficient. No, you need to revise and you need to give the weekend examinations. Okay, na? Then only more and more number of time if you practice with the pen. Okay, now you should not audit. I think you know the audit. Audit means what, ma? Verification. Here, if you take the example of final accounts in the trading account, opening stock, here 10,000. Okay, sir also done the correct only. There also 10,000. The next purchase, debit side. There also debit side. Okay, here 1 lakh. There also 1 lakh. If you do like that, okay, na, while writing in the examination, only for the single entry you will take 1 hour. Only for the single entry, how many hours you will take, ma? 1 hour. The exam, total exam for how many hours? 3 hours. Then you are trying to attempt the partnership. Okay, na? It will take 1 hour. 2 hours completed. How many questions you have attempted? Only 2 questions. 14 plus 14, how much? 28 marks you have written. How many marks you will get? 35 marks you will get. Okay, MCQs you have written. Okay, na? 35 marks you will get. Okay, na? The main reason is you need to select the questions. The easy questions you need to select. Within a less time they need to complete. What is the main target, ma? We need to select the questions less time, within a less time we need to complete a more time, less time. Okay, na? The less time it will take for these topics. Which are the topics it will take less time? BRS, rectification of errors. What is the meaning of rectification of error? We need to pass one entry, that's all. They will give 5 transactions. We need to pass 5 journal entries. It is a less time, or taking a trading account, P&L account, balance sheet, it is a less time. Okay, na? Writing entries is the less time. That means we have to target the chapters. Which chapters we need to target? Within a less time we need to get the more marks. Within a less time we need to get the more marks. We should not select like that. We should not select the topics which are more marks, more time. Okay, na? While writing examination, first you should not write the single entry. First you should not write the partnership. Okay, now the last preference we have to give the single entry. Last preference we have to give the partnership. First you need to write the small questions like depreciation, BRS, rectification of errors, hire purchase, insurance claim. These are the small topics we have to learn. Must and should we have to learn these topics. Then only we will get a good marks exemption in this paper. Okay, now only reading of single entry, only reading of practicing of partnership. Okay, now okay. We are not going to leave these topics also. We will learn, but the most important we have to give to the which topics? Small topics will get a more marks. Okay, now if you neglect these topics while going to the examination, okay, if you leave this one, that means totally you will leave the second question and third question. Remaining 5 questions you need to write. Remaining how many questions you need to write? 5 questions. For this, minimum to minimum 45 minutes. For partnership, minimum to minimum 45 minutes. Okay, now minimum. Or a student will take extra 15 minutes. That means totally 2 hours will be completed only for the single entry and partnership. A remaining question when we will write? Are you getting my point? Okay, now. So for that reason you should not neglect the question number 2 and question number 3. If you are neglecting the question number 2 and 3 only because of not having any basics knowledge. If you know the basics, you have to target these 2 questions. If you write these 2 questions, the remaining paper will be very easy. Nearly we are getting how many marks my year? 14 plus 14, how many? 28 marks. Completed 30 marks. 10 MCQs pass. 5 MCQs 10 marks. Pass era leda? Easily we can pass. If you write the second question and third question. Okay, now. If you leaving the second question and third question while going to the examination means definitely will fail. Even though you know the partnership, even though you know the single entry, even though you know the standards perfectly also, you will get with end up negative result only. Why ma? Because just you have leave the question number 2 and question number 3. Because these 2 questions within 45 minutes we can write. 2 questions, that means 28 marks we can write within 45 minutes. 2 questions within 45 minutes is the best option. 2 questions within 2 hours is the best option. 2 questions within 45 minutes is the best option. Okay, now why I am saying is, the outside perception will be how it will be means, they will not discuss the basics. They will directly start with the single entry. They will directly start with the hire purchase. Okay, now they will not teach the basics. Why ma? Because these are the topics are already repeated in foundation. But in the foundation level, you have learned the objectives, but you did not solve the question. Okay, now here they will give the MCQs, questions. Definitely, in the financial accounting, everyone must teach what ma? Basics. Then only the student will get 70, 80 plus. Otherwise, the student will not pass in this paper. This is my perception. Okay, na? So I am giving a clear explanation to you why I am discussing the basics. Okay, na? You may not get why once again the sir is discussing the basics. We don't know the business. We don't know what is the meaning of goods. We know the meaning of asset. Why again the sir is discussing? The meaning of asset will be again repeated in AS10. Without journal entries, you cannot pass the subsidiary books. You cannot do the subsidiary books. Without subsidiary books, we cannot do the rectification of errors. There is a link between 1 and 2. Okay, now. And again, without basics, you cannot go to solve the single entry. Without accounts, if you know the accounts of asset account, debtors account, creditor account, next bills receivable, bills payable, income account, expenses account, then only you can solve the single entry, then only you can solve the NPO. Otherwise you cannot solve the single entry, otherwise you cannot solve the NPO. So we need to learn the accounts. Which are the accounts we need to learn ma? Asset account. In asset account, how many transactions will be there? Next, in the debtor account, how many transactions will be there? Next, creditor account, income account, expenditure account, all the things you need to learn in a conceptual manner or in a mug-up manner. In a conceptual manner only you should learn. So that's why only I am starting with the which approach, modern approach. For that reason, modern approach will be a very conceptual when compared to the traditional approach. Traditional approach means personal account, real account and nominal account. Okay na guys? Next we have discussed all the things. Asset means what ma? A resources utilized by the business in order to generation of future revenues. You can utilize the asset for production purpose, administration purpose, rental purpose and rendering of a services purpose. Here these premises we can use for rendering a service. Yes or no? We are providing the education. You are utilizing the building. Even in this situation we have taken a rent of building. Imagine this building is our own. We are running an organization called as shikharatutorials. At this point of time, building is called as asset. We can render the services, we cannot render the services. We can. In the same building there is admin staff. Okay, now we are using for administration purpose. Imagine the same building we are producing the books. That means the same building we are using for production purpose. Next one, production rent. In the same building, staff will be stayed in the one room. What are the faculties are going to teach you? One floor they are staying for the house. Okay, now. From the faculties we are going to collect the rent. That means we are using for rental purpose, not rental purpose. That means the same building we can use for production purpose, rental purpose, administration purpose and rendering of a services. This is the main perception of the asset. What is the meaning of asset? Asset can be utilized for any purpose in order for generation of future revenues. Next one. What is the next concept, amma? Different types of assets. Mainly the assets are classified into how many types? 2 types. First type is called as what ma? Fixed asset is also called as non-current asset. Benefit will be more than 1 year, less than 1 year. Benefit will be more than 1 year. Intention to use more than 1 year. It is called as a non-current asset. Again, the non-current asset is classified into how many types? 3 types: tangible asset, intangible asset and vesting assets. So tangible asset means which we can see and touch. Building is a tangible asset. Goodwill is a intangible asset. Okay, now with an intention to use more than 1 year. What is the meaning of vesting asset? Created by the natural resources, it is called as a vesting asset. Example, oil wells, coal mines, etc. For that also we are getting a benefit more than 1 year or less than 1 year? Benefit more than 1 year, but created by the natural resources. This is called as vesting assets. Next one, current assets, nothing but with an intention to use less than 1 year, are easily convertible into cash. Okay, na? Within a less time easily convertible into cash is called as current asset. Within a 3 months convertible into cash means liquid assets. More than 3 months, less than 1 year means non-liquid asset. Another asset is called as fictitious asset. It will be discussed in further classes. Now in this situation you may not understand this meaning. Okay, na guys? So these are the types of assets. What are the types of assets, ma? Current assets and non-current assets. Non-current asset again classified into how many types? 3 types. So tangible assets, intangible assets, and vesting assets. Tangible means which we can see and touch. Intangible means which we cannot see and touch. Vesting means created by natural resources. Intention to use more than 1 year. Okay, na? Next, easily convertible into cash. It will take time. It will take time. Easily convertible into cash means current asset, less than 3 months. Liquid assets, more than 3 months, less than 1 year. Non-liquid assets. Okay, non-liquid asset example is called as closing stock. What is the meaning of closing stock? The goods which are purchased with an intention to resale, those goods are left for left, we are not sold. Okay, now left at the end of the year is called as a closing stock. Imagine we have purchased 1000 units. How many units, ma? 1000 units. In these 1000 units, 900 goods were sold in the current year. How many goods were sold? 900. Still how many goods are left? 100 units. This 100 units is called as closing stock. It will be sold in the next year. Within 3 months we can sold, or within 1 year we can sold. That means it is a liquid asset or non-liquid asset. Non-liquid asset. Liquid asset means must and should less than 3 months. Next one, what is the meaning of liability? Obligation to repay. How many types of liabilities are there? What are the liabilities? Internal liabilities, external liabilities. Internal liability means capital, because capital will be repaid only at the time of winding up. Here, amount payable by the proprietor. So please rectify this one. Amount payable to the proprietor. Amount payable to the proprietor at the time of winding up of an organization. It is called as what, ma? Capital as well as profits. Next one, external means other than capital is called as external liabilities. We can call it as outside liabilities. We can call it as what, ma? Outside liabilities. Other than capital is called as outside. Outside liabilities are classified into how many types? 2 types. Long-term liabilities, short-term liabilities. Long-term means more than 1 year we need to repay. Short-term means less than 1 year we need to repay. Next, what is the meaning of revenue? Income. What is the meaning of revenue, ma? Income. Nothing but general definition of revenue is called as sales, turnover. Next, what is the meaning of expenses? Amount spent to run the business is called as an expenses. Okay, na? Example, rent, salaries, electricity, advertisement. Okay, na? There are so many. Next, what, ma? Maintenance expenses. Okay, na? All the things is called as what, ma? Expenses. We are incurring for the purpose of business. Only for the purpose of. Okay, na? Owner is paying the school fee for their children. It is also expenses, It is not an expense. Okay, na? That expense incurring for the purpose of personal purpose, not for the purpose of business. We need to incur the expenses for the purpose of business. Easy, then only we can call it as what, ma? Expenses. Otherwise we are not going to call it as expenses. So here, the amount can be spent. Amount can be spent either for the production purpose, administration purpose, selling and distribution purpose, and financial purpose. What is the meaning of production purpose, sir? In order to produce a particular product, we need a raw material. For example, imagine we have started the tea shop. Okay, na? For the tea shop or coffee shop or cafe, imagine we have taken a Kumbakonam coffee shop franchises. You know the Kumbakonam coffee shop? Is there any idea? No, no. Okay. We are having the tea branches like, what are the three tea branches we are having? Tea types. Okay. We have taken a franchise of tea type. Okay. In order to start a tea, what we need, what are the requirements we need, ma? We need to purchase the raw material requirement for the tea. First one is called as milk, water, tea powder, etc. Okay, na? These are the things we are purchasing for production and then resale. Okay, na? And then user resale, amma, resale. So this type of expenses is called as production purpose expenses. Okay, na? This is an expenses, income expenses, purchase of raw material. What is the first one, ma? Purchase of raw material. Wages we are paying. For the production, we need a labor. For them, we will pay the daily wages. Okay, na? Next, royalty on the basis of production. Okay, na? Sometimes we will take the royalty. Royalty means what? We have taken what? Franchise of tea types. We need to pay what, ma? Royalty. Okay, na? Without paying the royalty, they will give the franchise. They will not give the franchise. This type of expenses we are paying what, ma? For production purpose. Next one, administration purpose. Administration means come to here. Come to here. Administration. Okay, na? We are doing what, ma? We are providing the education service. In order to provide education service, we need to pay what? Salaries, rent, rates and taxes. Municipal taxes we will pay, na? So that thing is called as what, ma? Rates and taxes. Next, selling and distribution. In order to sell a particular product, what we need to give, ma? Advertisement. Next, carriage outward. Carriage outward means from factory to outside. Carriage inward means from purchase place to factory. Next, financial purpose means we have taken a loan. In order to start a business, we have taken a loan. On that loan, what we need to do? We need to pay the interest. Here the interest is called as a financial expenses. Dividend is also called as financial expenses. What is the meaning of dividend? Okay, in the company point of view, if you are getting a profits, means we need to distribute the dividend to the owners. Okay, na? That thing is also called as financial purpose or what, ma? Financial purpose. We are taking amount from the shareholders and then we are giving return in the form of dividends. Okay, na? Next, these are all called as what, ma? What is the meaning of expenses? Expenses can be used for production purpose, administration purpose, selling and distribution purpose, and financial purpose. Are you getting the point? Administration purpose means raw material. Next one, wages, royalty, etc. Administration means rent, salary, etc. Next, selling and distribution means advertisement, carriage outward, etc. Financial purpose means interest and dividend. So these all the meaning is called as what, ma? Expenses. Why we are learning all the meanings? We learn the asset meaning, we have learned the liability meaning, then next, then after income and expenses. Here the income and expenses will be helpful for to find out the profit or loss. Okay, now without income and expenses we can find out the profit or loss, or we cannot find out the profit or loss. We cannot find out the profit or loss. In the financial accounting or accounting point of view, what, ma? If you take the basic objectives of accounts, the basic objectives. There are two basic objectives. First objective is called as why we need to prepare the accounts, sir. Even though without preparation of accounts we can find out the profit, we cannot find out. We can find out. Okay, now at the initial stage we have discussed. We have taken example of what, ma? We are in a cultivation of tomatoes. After cultivating the tomatoes, we are sold in the market. We can easily identify. But why we need to prepare this one, sir? In the case of large number of transactions, more and more number of transactions, it is difficult to remembering all the things. Okay, now if there is only 4 type of transactions, means we can remember and we can solve the and we can estimate the profit or loss. But imagine we are having a n number of transactions, n number of business transactions, n number of incomes, expenses, purchase of assets, sale of assets. At that point of time, we can remember or we cannot remember. We cannot remember, but we should note down it. What we need to do, ma? We need to note down. Okay, now we are note downing in a systematic manner. That system is called as double entry system. The system is called as double entry. Okay, keep it aside. Objectives of accounts. The basic two objectives. Objectives of accounts means what, ma? Why we need to create the accounts? Why we need to follow this accounting subject? Means to find out financial result. To find out the financial result. Next one is called as what, ma? To find out financial position. What is the first basic objective? To find out the financial result. Financial result means what, ma? Either profit or loss. Okay, na? In order to find out the profit or loss, what are the requirements? Incomes and expenses. In order to find out the profit or loss, what are the two basic requirements? Incomes and expenses. Are you getting the point? What is the meaning of objective of accounts? Why we need to learn accounts. మనం అకౌంట్స్ ఎందుకు నేర్చుకోవాలి? వై వీ నీడ్ టు లర్న్ అకౌంట్స్ మీన్స్ టు ఫైండ్ అవుట్ ద ఫినాన్షియల్ రిజల్ట్ అండ్ టు ఫైండ్ అవుట్ ద ఫినాన్షియల్ పొజిషన్. Okay, financial position we can discuss in some other class. What is the meaning of financial result, amma? To identify profit or loss. To identify the profit or loss from the business. In order to identify the profit or loss, what are the requirements? To identify profit or loss, we need incomes and expenses. What are the two basic objectives? First objective is called as to find out the financial result. Next, to find out the financial position. What is the meaning of financial position, sir? We are having the two types of financial position, whether we are able to repay the liabilities or whether we are not able to repay the liabilities. Okay, na? This is called as financial position. What is the meaning of financial position, ma? We are in a capacity of the repayment of liabilities, or we are in a not in a capacity of repayment of liabilities. This is called as this thing we can know with the help of balance sheet. Okay, na? This profit or loss we can know. We can identify with the help of identify profit or loss by way of preparation of which account, amma? Trading and profit or loss account. By way of preparation of trading and profit or loss account. This is the basic objective to find out the financial result. What is the meaning of financial result? To find out the profit or loss. We can find out the profit or loss with the help of incomes and expenses. Okay, na? Next one, to find out the financial position means we are in a capability of repayment, we are in a not capability of repayment of liabilities. This means we are having the two types of situations, two types of positions we can call it as. How many types of positions, ma? Two types. Solvent position, insolvent position. What is the meaning of solvent? Solvent means good or bad, amma? Solvent means good position. Insolvent means bad. When will be the good, amma? We are in a capability of repayment, we are in a not capability of repayment. Okay, how we will repay, ma? How we will repay? By way of selling the assets in the market. By way of selling the assets in the market. Imagine we are having the assets, book value will be different and realizable value will be different. What is the meaning of realizable value? Market value. Okay, na? In the books we can show 10 lakhs, 20 lakhs like that. Why will show, ma? Because we will revalue the assets. We will revalue. Sometimes we can show the book value the less. Because what, ma? We may get income tax problems like that. Okay, na? Sometimes we will show more, sometimes we will show less. The book value is totally different. We should not compare with the book value. We should compare with the realizable value. Okay, na? The realizable value of assets should be more than liabilities. Should be more than liabilities. The situation is called as solvent or insolvent. Solvent. What is the meaning of insolvent? The realizable value of assets less than liabilities is called as insolvent position. We can identify the solvent or insolvent position by way of preparation of balance sheet. By way of preparation of balance sheet. What is the meaning of solvent, ma? Solvent means good or bad? Good. So how we can say it is solvent, ma? The realizable value of assets, the realizable value of assets should be more or should be lesser? Should be more. More means more than symbol. Should be more than liabilities. Realizable value of assets should be more than liabilities. What is the meaning of situation, ma? Here bad means same opposite. Opposite. Opposite means should be more than or less than. Should be more than or less than, amma? Should be less than liabilities. Okay, guys, are you getting the point? The realizable value of assets is more than liabilities means solvent or insolvent? Solvent. The realizable value of assets is less than liabilities means insolvent. Okay, now good. Here we can identify this position with the help of. We can identify these situations with the help of preparation of preparation of balance sheet. So these are the basic two objectives. Okay, now up to today's class we have discussed about the terminologies. What are the terminologies we have discussed? Business, next then after goods, services, next then after capital, drawings, next then after assets, types of assets, liabilities, types of liabilities. Then we have discussed about the objectives of accounting. What are the two basic objectives, ma? First we need to identify to find out the financial result, to find out the financial position. Financial result means either profit or loss. We can identify the profit or loss by way of preparation of trading or P&L account. We can identify the financial position by way of preparation of balance sheet. In order to identify the financial position, what are the requirements? Assets and liabilities. So how many positions are there? Two positions. Solvent position, insolvent position. Solvent means good, insolvent means bad. The realizable value of assets are more than liabilities means it is called as solvent position. The realizable value of assets are less than liabilities means it is called as insolvent position. Realizable value means what, ma? Market value. Realizable value means what, ma? Market value. So this is how we have completed the main discussion of what are the objectives of accounting, and I have also discussed the topic of what, in which question which chapters will be covered, how many marks we can get from the foundation. 50 marks. Okay, now minimum to minimum how many? 50 marks. So don't don't fear, easily we can get how many marks 80 marks in the examination. The only thing you need to follow what regular attendance, cumulative revision, writing the weekend exams, sufficient. If you follow these 3 steps, you can get a rank also. You can get what rank in CMA inter. So thank you, have a nice day, bye bye. Hello. You guys, a very good morning. Okay. In the previous class, what we have discussed, just a second. Okay, we have discussed we have discussed about the objectives of accounts. What is the meaning of objective of accounts? Why we need to prepare the accounting? So we need to prepare the accounts to find out the financial result. What is the meaning of financial result? Whether profit or loss. We can identify the profit or loss with the help of losses, with the help of incomes and expenses. So we need to, in order to identify the profit, we need to prepare the profit and loss account. Next we will prepare the trading account and profit and loss account. Next, in order to find out the financial position, we are having how many types of financial positions? 2 types. First one is called as solvent position and second one is called as insolvent. Solvent position means good or bad? Good. Okay, now we are in a good situation. What is the meaning of good situation? The realizable value of assets, okay, now is sufficient to fulfill the liabilities. That means what the realizable value of assets are greater than liabilities. Next, what is the bad situation? Solvent or insolvent? Insolvent. What is the meaning of insolvent situation? The realizable value of assets are less than liabilities. So in order to identify these situations or positions, we need to prepare the balance sheet. So for this purpose, in the final accounts, we'll prepare trading account, P&L account and balance sheet. If in case having a manufacturing concerns means, we need to prepare the manufacturing account, trading account, next P&L account and balance sheet. Okay, now in NPO point of view, what are the statements we'll prepare We'll prepare the income and expenditure account and next we'll prepare the balance sheet. So these are the types of finance. So for that reason, the trading and P&L account and balance sheet, we are going to call it as financial statements. We're going to call it as what financial statements. So till now we have discussed about the terminologies related to, first we have started the discussion of business. What is the meaning of business? A place where goods are exchanged and services are rendered. Then after we have discussed about the meaning of goods and then proprietor. Next, capital drawings. After that, assets, types of assets, liabilities and types of liabilities. Okay, now next we have started the discussion with the which approach, modern approach or traditional approach? Modern approach. In the modern approach, ultimately we have divided into how many categories 4 categories. Assets and expenditure will have the debit balance. If the debit balance increases, we will do debit. If the debit balance decreases, we will do credit. Next, incomes and liabilities are credit balances. If the credit balance increases, we will do credit. If the credit balance decreases, we will do debit. What is the meaning of debit balance? Debit side is more than credit side. What is the meaning of credit balance? Credit side is more than debit side. Then after we have discussed about the opening balances and closing balances. What is the meaning of opening balance? Okay, now the opening balance means previous year closing balance will be the current year opening balance. Closing balance means what ma? Current year closing balance. Again, it will be the opening balance for the next year. For the debit balance, opening balance will be on which side? Debit side. So what we need to record? To balance brought down. For the debit balance, closing balance will be on which side? Credit side. So what we need to record? By balance carried on. Next, then after we have discussed about the credit balance. For the credit balance, opening balance will be on the credit side. So what we need to record? By balance brought down. So next, for the credit balance, opening balance will be on which side? Debit side. So what we need to record? To balance carried on. Closing means carried on, opening means brought down. Debit side to, credit side by. So these are the main principles we need to remember. Next, we have started the discussion of journal entries. In that, first, what is the first journal entry ma? Capital. Okay na? So what are the two outcomes here? Cash and capital are the two outcomes. So cash is an asset or liability ma? It is an asset. So asset means which balance ma? Debit balance. So asset means debit balance. Increases or decreases? Asset will be increases if it is comes in. If it is goes out, asset value will be decreases. So comes in or goes out amma? Comes in, increases. So if the debit balance increases, what we need to do? Debit. Then after capital, what is the meaning of capital ma? Asset or liability, income or expenses? Liability. So liability means which balance? Credit balance. So when will the liability will be increases? If the liability created, liability value will be increases. If the liability we are going to repay means liability value will be decreases. For example, if we take the loan from the bank, the liability will be increases. We are going to repay the loan. In that situation, the liability will be decreases. Now we are repaying, we are taking the capital from the owner. That means just now we have taken. That means what my liability increases or decreases? Increases. So liability, credit balance increases. What we will do ma? If the credit balance increases, we are going to do credit. So what is the journal entry we need to record ma? What is the format of the journal entry? Date, particulars, LF, debit amount and credit amount. So what is the journal entry? Cash account debited to capital account. So we need to write the narration. So being amount invested by the owner into the business. Next, what is the second journal entry ma? Goods purchased for rupees 10 lakhs. The same transaction they can ask in the manner of goods purchased from Mr. Raju for cash. That means again this is a cash transaction, a credit transaction, cash transaction. Or they can ask goods purchased for cash of rupees 10 lakhs. They can ask what ma? Goods purchased from 10 lakhs or goods purchased from Mr. Raju for cash for rupees 10 lakhs or goods purchased for cash of rupees 10 lakhs. These three are same transactions or different transactions? Same transactions. The same outcomes will come into the picture. What are the two outcomes will come into the picture? Purchases and cash. So purchases is an expenses. Okay, now previously we are having any purchases. Now only we are having the purchases. That means expenses increases or decreases? Increases. So purchases, expenses, debit balance increases. What we need to do ma? Debit. Next, cash, asset. Which balance again? Debit balance. Cash comes in or goes out? Goes out. That means cash balance will be increases or decreases? Decreases. So previously we are having how much ma? 10 lakhs. What is the amount of cash available with us? 10 lakhs. Now we are repaying the 10 lakhs or we are not repaying? We are utilizing the total 10 lakhs for the purchase. Now the cash balance will be how much? 0. That means the cash value from the 10 lakhs to the 0. That means increases or decreases? Decreases. So cash, asset, which balance amma? Debit balance decreases. What we need to do? Credit. What is the entry? Purchase account debited to cash account. We should not call the debtor. We should, what is the pronunciation? Debited. Okay, now debtor is a person called as whom? For whom we are going to sell the goods on credit basis. It is called as he or she is called as what ma? Credit. debtor. Okay now, here we should not pronounce like a debtor. What is the pronunciation? Debited. Okay now, purchase account debited to cash account of rupees how much? 10 lakhs and 10 lakhs, being goods purchased for cash. Are you getting the point? Okay, then after we are going to see some more journal entries in today's class. Okay na, what is the sequence ma? The third one na? So goods sold for rupees 10 lakhs. Goods sold for rupees 10 lakhs. The same transaction they can ask. Goods sold for cash of rupees 10 lakhs. Or they can ask goods sold to Mr. Ram for cash of rupees 10 lakhs. These three transactions are similar or different? Similar. Okay na. Here even though person name is presented here, okay na, we have taken a person name, but also what is the word behind this ma? The word behind this is called as for cash. So these three transactions are cash transactions or credit transactions are cash transactions. So that means here we are selling the goods, we are selling the asset, we are selling the goods. For that reason, the what is the outcome will come into the picture? Sales. If in case we are selling the asset means what is the outcome will come into the picture? Asset. Okay now, we are selling the asset means imagine we are selling the building. What is the outcome? Sales or building? Building. If we are selling the camera na sales camera. We are selling the goods means sales. We are purchasing the goods means purchases. If in case we are purchasing the asset means asset. Are you getting the point? For goods, for only for the purpose of goods, we should take what ma? Sales or purchases. If we are selling or purchasing the asset means we need to take the outcome of what ma? Asset. So what are the two outcomes here? The two outcomes are sales and cash. So what is the meaning of sales? It is an income, expenses, asset or liability. It is an income. So we need to, next, income is having which balance? Credit balance. Sir, previously we are having any sales? No, now only we are having the sales. That means previously the sales value is how much? 0. Now the sales value is how much? 10 lakhs. That means income increases or decreases? So income is going to increase. So what we need to do ma? If the credit balance increases means we need to do credit. Next, then after cash. Cash means asset or liability? Asset. Asset will have which balance? Debit balance. We are selling the goods means cash will come into the business or goes out? Come in. Comes in means increases or decreases? Increases. So increases. What we need to do ma? Debit. So the debit balance increases, we need to do debit. If the debit balance decreases, we need to do credit. So what is the entry we need to record? Cash account debited to sales account. So what is the format? Date, particulars, LF, debit amount and credit amount. So what is the entry amma? Cash account debited to sales account. How much? 10 lakhs. And 10 lakhs. So what is the narration we need to write ma? Being sold goods for cash. Okay now, please note down. And then we can discuss the total discussion about the debtor. Then after we can discuss what ma? Total discussion about the debtor. Keep the journal entries. I think we have completed the 2 journal entries. This is the third one. Okay, next we are going to discuss about the discounts. Discounts concept. What is the meaning of discount? Offer. So what is the general meaning of discount? Reducing the value of selling price or purchase price. Yes or no, ma? If you imagine we are going to a malls, or imagine we are going to the some of the organizations like Reliance Mart, Geo Mart, D Mart. Okay, now they will give discounts now. Okay, now they will give discounts what, 20% discount, 30% discount, like that. What is the meaning of discount? Reducing the value of selling price or purchase price. It is called as a general meaning of discounts. These discounts are classified into two types. How many types of discounts are there, ma? Two types. First one is called as trade discount, and second one is called as cash discount. Trade discount and cash discount. What is the meaning of trade discount, sir? This discount they will give before fixing of selling price or before fixing of purchase price. That means this discount will be appear in the only in the invoice. This discount will be appeared only in the invoice. Imagine we have gone to the DMart, okay na? And DMart we have purchased the 10 products, okay na? Each one costing 100 rupees. How many products we have purchased, ma? 10 products, each one costing how much? 100. That is equal to how much? The total bill value is 1000 rupees. And they have given, sir, we are offering a 50% discount, sir, due to the Ashadam sale, or we are offering 50% discount due to the inauguration of DMart, like that. Due to the anniversary of DMart, we are offering what, ma? 50%. Sometimes we will get in the Flipkart Big Billion Day, Great Indian Sale. Okay, na? At that point of time, we can purchase the products at a lesser cost or more cost, lesser cost. That means they are offering the discount at the time of purchase or at the time of sale only. At the time of purchase and at the time of sale. So what is the total bill value normally? 1000 rupees. But they are offering how much, amma? They are offering a discount at the rate of 50%. That is equal to how much, amma? 500. Then so now we need to pay only 500 or we need to pay 1000 rupees. We need to pay only 500. That means directly we can record this amount or directly what we need to write? 1000 rupees minus trade discount and 500 rupees we should write like that. So directly we can record how much, ma? 500 rupees in our books of accounts. Are you getting the point? Because ultimately how much amount we have paid? Ultimately we have paid only 500 rupees at the time of transaction. So for that reason, this type of discounts is called as what, ma? Trade discounts. This type of discounts is called as what, ma? Trade. What are the examples? Big Billion Day, okay na? Ashadam offer, okay na? Inauguration offer, anniversary offers, like that it will be. For imagine, okay na? Imagine if you take the Shikhara as an example, as an inauguration offer, normally group cost is how much? 30,000, but we are offering it a 25,000. That means how much ultimately you are paying to us? 25,000. That means what you will say in the homes, okay now, what is the value of group means how much you will say? 25,000 or 30,000 minus 5,000 and 25,000 you will say like that. Ultimately we will say what, ma? The group cost is 25,000. That means directly we need to record how much amount? 25,000 30,000 minus 5,000, like that. Directly we can record how much, ma? 25,000 in our books of accounts. So for that reason, what is the meaning of trade discount? The discount will be provided at the time of purchase or sale, or we can say like that, at the time before the purchase or before the sale of goods also. Okay, now what is the meaning of trade discount? Discount on or before sales or purchases. Discounts on or before sale or purchases. This discount only will be available in this discount will be presented in invoices, will be presented in books of accounts, will be presented in invoices. Okay now. So this discount will be recorded or will not be recorded? Will not be recorded in books of accounts. So what is the shortcut of books of accounts, sir? BOAS. Okay, na? What is the shortcut of books of accounts? BOAS. We can write like that. Okay, na? So what is the ultimate conclusion of trade discount? We are going to record the trade discount. We are not going to record the trade discount. We are not going to record the trade discount. What is the reason, sir? Because at the time of sale or at the time of purchase of goods only, we know we are getting a discount. We know we are getting a discount. So for that reason, there is there is not required to record the trade discount in the books of accounts. Are you getting the point, ma? Is there any doubt? Okay, now this discount will be given at the time of purchase or at the time of sale. What is the meaning of cash discount, sir? This discount will be given after the sale and after the purchase. Okay, now this is what, ma, on or before the sale or on or before the purchase of goods. What is the meaning of cash discount? This discount will be provided after the sale or after the purchase of goods. Okay, now the only reason is that one. Okay, now what is the meaning of cash discount, amma? This type of discount will be given after the sale or purchase, after the sale or purchase of goods. Okay, now for that reason we need to record, we no need to record. We need to record. Why, sir? Simple, amma. So imagine, I will discuss some other time. Just give me 1 minute, I will discuss. So this discount will be recorded in books of accounts. This type of discount will be recorded or will not be recorded, amma? Will be recorded in the books of accounts. Okay, now which discount we are not going to record in the books of accounts? Trade discount we are not going to record in the books of accounts. And which discount we are going to record in the books of accounts? Cash discount. Why, sir? I will explain you, no problem. Again, this cash discount is divided into two parts. How many types of cash discounts are there, ma? Two types. What are the two types, sir? Discount allowed and a discount received. Discount allowed and discount received. If you understand the discount allowed or discount received, you can get to know why we need to record. Okay, na, sir? Why we need to record the cash discount means you need to understand which to what is the meaning of discount allowed and what is the meaning of discount received. Are you getting the point? Okay. So till now, what is the meaning of discount, ma? Basically, discount means reduction in value of selling price or purchase price. So how many types of discounts are there? Two types. Trade discount means on or before purchase or sale of goods. What is the meaning of cash discount? After the sale of goods or purchases of goods. Okay, now trade discount we are not going to record in the books of accounts. Cash discount we need to record in the books of account. Why we need to record means you need to understand the two meanings. What are the two meanings, ma? Discount allowed and discount received. Okay, now first I will discuss about the discount allowed. Then after I will discuss what, ma? Discount heading is called as what, ma? Discount allowed. Imagine this is a business. Imagine what ma, this is a business. And see how the guy was nice, na? Okay, this guy is a debtor. This guy is what ma? Debtor or creditor? Okay, debtor. Debtor means we need to, what we need to do? We need to do credit sales. We need to do credit purchase. For debtor, we need to do the credit sales. So we are making the credit sale. We are making the credit sale of goods at the rate of 10,000 rupees. Imagine how much credit sales ma? 10,000 rupees. Sir, now initially at the time of credit sales, we need to record the entry. Yes or no ma? This is a transaction or not? This is a transaction. Monetary transaction or non-monetary transaction? Monetary transaction. What is the meaning of transaction, sir? Generally, what is the meaning of transaction? To do any activity is called as a transaction. To do any activity is called as what ma? Transaction. These type of transactions are two types. How many types of transactions are there? Two types. Okay, now I will explain later. Okay, now this is a transaction. This is a monetary transaction. Okay, now we need to record in the books of accounts. Okay, now that means how much sales we have recorded in the books of accounts? 10,000 rupees. How much sales we need to record ma? 10,000. This is a credit sale, or normally we are going to call it as what ma? Sales. That means how much income we have recorded? 10,000. How much income we have recorded? 10,000. At the time of making the repayment, debtor need to repay how much? Debtor need to repay how much amma? 10,000. But here we have given the credit period of 3 months. Imagine we have given credit period of how much amma? 3 months. But debtor is repaying within 2 months. Debtor is repaying within how many months? 2 months. For that reason, what we are saying is, sir, debtor, you give only 9,500 rupees, it is sufficient. Okay, now normally how much amount he need to pay? 10,000. But he need to repay after the 3 months or before 3 months? After the 3 months. But he is repaying within the 3 months. That means within a less time he is repaying a more time, less time. That means within a less time he is repaying means with this amount what we can do ma? We can purchase the goods and again we can sell the goods. For that reason, okay, now for that reason we are getting a benefit or not? We are getting a benefit. For that benefit, what we are saying ma? What we are saying to debtor, how much amount you pay? Only you pay the 9,500, it is sufficient. Even though he need to pay how much? 10,000. That means we are getting a loss or gain? Loss of how much? 500 rupees. This 500 rupees is called as discount. This 500 rupees is called as what ma? Discount. We have given or debtor has given we has given to the debtor. That means allowed. That means what ma? Allowed. This is called as discount allowed. Okay, now you need to decide whether we need to record the discount allowed or no need to record. No need to record. Already we have recorded how much as an income? 10,000 rupees as an income we have recorded. But actually we are receiving 10,000. Actually we are receiving only how much? 9,500. That means we are getting a loss or gain? Loss. This loss we need to record or no need to record? If you not record in the books of account, this loss means, that means we are showing income as how much? 10,000. What is the actual income? 9,500. If you record means it will show the actual income as 9,500. Otherwise, how much income will be presented? 10,000. So what is the right one? We need to show the discount allowed. We no need to show the discount allowed. We need to show the discount allowed. Then only we can get the correct profit. Otherwise, we are not going to get the correct profit. Imagine you know the P&L account, right? You know the trading and P&L account. Okay, so this is a trading and profit or loss account. Okay, now sale is an income. You know the nominal account rule. What is the nominal account rule? Debit all expenses and losses, credit all incomes and gains. In any particular account, we are find outing the profit or loss means what I am saying, ma. In any particular account, we are going to find out the profit or loss means that account is called as nominal account. That account is called as nominal account. Nominal account means we need to follow which rule? Nominal account rule. So debit side we record expenses and credit side we record incomes. In this particular account, we are going to identify the profit or loss. That means trading and P&L account is a which type of account? Nominal. Which type of account, amma? Nominal. Now, how much income we have recorded initially? 10,000 rupees. How much income we have recorded initially, amma? 10,000 rupees. Now we need to record the discount allowed. No need to record. What you are saying, ma? No need to record. If you not recording the discount allowed in the books of accounts means you will get a profit of how much? You will get a profit of how much, ma? 10,000. So you will show as a net profit. Yes or no? But what is the correct amount of profit? 9,500. That means in order to show the 9,500, you need to record the 500. No need to record the 500. You need to record the 500. That one is called as expenses again. Loss. Loss will be recorded on which side? Debit side. So now you will get the correct profit. How much amount profit, amma? 9,500. For that reason, we need to record the cash discount in the books of account and no need to record the trade discount in the books of account. Are you getting the point or not? Okay, na? So what I am saying, ma, previously we have recorded the sale of rupees how much? 10,000. That means we are showing the income of 10,000 in the previous case. Then after, while going to receive the amount from the debtor, how much amount we have received? Only 9,500. Because why we have given the discount, ma? He is repaying within a time period. The less than a credit period allowed. Okay, na? So for that reason, we are allowing the discount of rupees 500. That's discount of rupees 500. We need to record the, we no need to record the. We need to record, then only we will get the correct profit or loss. Otherwise, we will get the correct profit or loss. No. So this is the main concept. So for this reason, what we need to do, ma? We need to record the discount allowed in the books of accounts. What is the journal entry? We can discuss some other time. Okay, na? So did you get the concept? Okay, na? What is the meaning of trade discount, sir? We are not getting that point. Okay, na? Imagine what is the selling price we have discussed? 1,000 rupees. And how much percentage of discount we have get? 500. Ultimately, how much we have paid, ma? 500. Now directly in the income side, directly in the credit side, how much amount we will record? Directly we are going to record 500 here. That's all. Okay, na? Then how much profit you will get? 500. Okay, now this is the trade discount. This is the trade discount. Okay, now what is the meaning of cash discount? At the time of sale or purchase, we are recording one amount. After that, while collecting from debtor and while paying to the creditor, we are paying another amount. Okay, now we need to record the discount allowed and we need to record the discount received. So discount allowed means gain or loss, amma? Loss. This discount will be given to whom? So business will be given to debtor, not the creditor. Discount will be, business will be given to the debtor. Are you getting the point? So this is a loss again, loss. We need to record or no need to record. If you not recorded in the books of accounts means we are not going to identify the correct profit or loss. Are you getting the point? If you recorded means we can identify the correct profit or loss. Now what is the actual income? 10,000 or 9,500 or 500? The actual income is 9,500. If you record the 500, then only we will get the 9,500. Otherwise, how much amount of income will be presented in our books of accounts? 10,000. Are you getting the point? Now we are going to discuss about the which concept? Discount received. Now discount received means Imagine this is the business. Okay, na? This small boy is called as creditor. Okay, na? When, in which situation we need to call it as creditor, ma? Purchase or sale? Purchase. Which type of purchase? Credit purchase. Now what we are doing, we are purchasing the goods on credit basis. Goods purchased on credit at the rate of rupees 10,000. Okay, now what is the actual expenditure to us? 10,000. What is the actual expenditure to us? 10,000. Or we can take different amount. You may confuse. So how much amount? 20,000. What is the actual expenses now? 20,000. Similarly, the creditor also provided how many months of credit, ma? 3 months. But within how many months debtor is paying, ma? 2 months. Then I can repay within how many months? 2 months to the creditor also. So for that reason, I am also repaying what, ma? Within how many months? 2 months. Now, as like we provided a discount allowed to the debtor, creditor also what he will provide, ma? He will provide the discount. That discount we are going to receive, we are going to allow. We are going to receive from the creditor. The discount is called as a discount received. That one is called as a gain. That one is called as what, ma? Gain. So imagine he is asking to us to pay the 19,500 only. How much amount he is asking us to pay? Only 19,500. Now what is the actual expenses? 20,000 or 19,500? 19,500 is the actual expenses. Okay, na? Initially 20,000 we have recorded. Ultimately how much amount we have paid? 19,500. Now what is the final expenses we need to record? 19,500. So in order to show the 19,500 as an expenses, we need to record this 500. What is the meaning of this 500, amma? Discount allowed. We need to record the, we no need to record the. We need to record. Otherwise, how much expenditure will be shown in the books of accounts? 20,000. If you record this 500 means how much expenditure we can show in the books of accounts? 19,500. How, sir? How, sir means same, ma. Imagine once again, this is a P&L account. So how much expenses we will be, expenditure will be recorded on which side? Debit side. What is the nominal account rule? Debit all expenses and losses, credit all incomes and gains. How much expenditure initially we have incurred? 20,000. That means in the debit side, how much amount we will book? 20,000. Okay, na. Discount received is a gain or loss? Gain. Okay, na. How much amount we have received? 500. In this situation, we are getting a loss. Okay, na. Imagine we are getting a loss. What is the actual ultimate expenses, ma? 19,500. If you not recorded this 500 in the books of accounts, means what is the actual expenditure to us? 20,000. So for that reason, we need to record the, we no need to record the. We need to record the discount allowed and we need to record the discount received. These both are will come into the picture of cash discount or trade discount, cash discount. For that reason, we need to record the cash discount and we no need to record the trade discount. Are you getting the point, ma? So what is the meaning of your discount received? Gain or loss, amma? Gain. Who will give to us? Creditor will give to business. So is there any confusion? I think you have got the clear picture. Trade discount we are not going to record in the books of accounts, but cash discount we are going to record in the books of accounts in order to show the correct profit or loss. Are you getting the point? Here why we no need to record the discount, trade discount, ma? Because ultimately after reducing the discount price only we are directly recording the books of accounts. After reducing the discount price, we are directly recording the books of accounts. For that reason, the trade discount we should not record in the books of accounts. So this is how we have completed the discussion of what, mark? Discounts. How many types of discounts are there? 2 types: trade discount and cash discount. What is the meaning of cash discount? After or before? After. Trade discount means on or before the purchase or sale of goods. The trade discount no need to record in the books of accounts, but the cash discount we need to record in order to identify the correct profit or loss. Are you getting the point? This is how we have completed the discussion of discount allowed and discount received. Okay, na guys. In this class, we have completely discussed about which topics, ma? Third journal entry. What is the third journal entry? goods sold for cash, or goods sold for rupees 10 lakhs, or goods sold to Mr. Ram for cash. These three transactions are similar. What are the two outcomes? Sales and cash. Sales is an income or expenses? Income. Which balance? Credit balance. Always incomes and expenses are increases. Okay now. So increases means what we need to do? Credit. Then after cash, asset, credit, debit balance increases or decreases? Sum decreases. Okay now, goes out. Sorry, comes in. Sorry, increases. Cash, asset, which balance? Amma? Debit balance increases. What we need to do? Debit. So what is the journal entry we need to record? Cash account debited to sales account, being sold goods for cash. Then after we have discussed about the discounts. What are the two types of discounts? Trade discount and cash discount. Cash discounts are how many types? Two types. Discount allowed, discount received. Discount allowed is a loss. Discount received is a gain. We need to record both the things. Only one. We need to record both the cash discount and in the cash discount, discount allowed and discount received. We no need to record the trade discount because after reducing the discount, we have recorded in the books of account. What is the reason, ma? After reducing the discount, we have recorded in the books of accounts because at the time of purchase or at the time of sale only we know. But cash discount, at which point of time we are going to know, ma? After the purchase and after the sale. That means already we have recorded some amount of expenses or some amount of income. After that, with the help of discount allowed and discount received, expenses or incomes are increases or decreases? Decreases. For that reason, we need to record the cash discount in the books of accounts. Is there any doubts? So here we have given the further discussion. What is the meaning of profit, amma? Excess of incomes, excess of expenses, excess of revenue over expenses for generation of revenue. What is the meaning of loss? Excess of expenses over revenue. Next, what is the meaning of discount? Concession provided by one to another person. Nothing but what? Reduction in value of selling or purchase by. How many types of discounts are there? Cash discount and trade discount. The discounts which were provided for immediate or prompt payment, it should be recorded in the books of accounts. Discount received is revenue and discount allowed is a loss or expenses. What is the meaning of trade discount? Discount which were provided at the time of purchase or sale. It is disclosed only in the invoice but not recorded in the books of accounts. Already we have discussed all the things, but once again I am showing. The next one, who is the debtor? A person who has obligation to pay to the entity for purchase of goods. Not only for the purchases of goods, okay now, we may sell the asset on the credit basis. At that point of time, the person become what, ma? Debtor. Next one, creditor. A person who supply the goods on a credit basis. So next we need to discuss about the transaction. General meaning of a transaction is called as an activity. Okay na? In the normal English, we know verb. What is the meaning of verb, ma? Noun, pronoun, verb. Noun means for the names we will use the name noun that like that. What is the verb principle? An activity. Okay na? An action is called as a verb. The same verb is called as transaction. The same verb is called as what, ma? Transaction means any activity which are performed by one person is called as a transaction. Any activity which are performed by one activity is called as what, ma? Transaction. For example, you are coming to the class. This is one type of transaction. Okay na? Next one, you are listening the classes. You are opening the books. Okay na? You are sleeping. Okay na? You are brushing. These all the things are called as what, ma? Activities. An activity is called as a transaction. An activity is called as transaction. Are you getting the point? But in these transactions are how many types, ma? Two types. Okay, now all the transactions we need to record in the books of accounts are only related to business. Only related to business transactions only we need to record. For example, imagine we have started the business. We have started a mobile phone business. Okay, now or you can take the ultimate example. We are starting a wine shop. We are starting what, ma? One wine shop. At the time of opening of wine shop, what we will do? First we will open the shutter. Okay, or first we will open the locks. Okay, now next we will open the shutter, and then after what we will do, ma? We will clean the shop. Then after we will do puja. Okay, now after that we will give Arthi. Okay, now after that what we will do ma? We will give prasadam. Then after we have started the then after I am sitting in the counter. Then after I am selling the what ma? Wine, beer bottles, etc. In this transaction, all the transactions related to business, only one transaction only related to business. Only one transaction. What is the transaction? Selling the goods. Selling the goods. Which transaction we need to record? Business transactions only we need to record. We should not record the personal transactions. What are the personal transactions? Opening the locks, opening the shutter, doing the puja, giving the prasadam is called as what ma? These are also called as what ma? Transactions only. But personal transaction of business accounts. Or imagine the owner is purchasing a car. Owner is purchasing a car out of his savings. Out of his savings, not the business money. Not with the business money. Owner is purchasing the car out of his savings amount. That means whether this transaction related to business or personal. Personal. Imagine the owner is purchasing the car with the help of business money. The transaction will be recorded, will not be recorded. Will be recorded. What is the meaning of that one? Drawings. Okay, now by way of taking the cash from the business, okay, now he is utilizing that particular cash for the personal user, business user. Personal use. He is purchasing the car for his personal needs. Or imagine the owner is purchasing the car for the business need with his personal money. At that point of time also, we will record. We are not going to record. We will record. Related to business means we will record. Otherwise, we are not going to record in the books of accounts. Okay, now. So, what is the meaning of business transaction, ma? An activity which were performed for running the business organization. Okay, now for running the business organization means what are the examples? Purchase of goods, sale of goods, purchase of asset, sale of asset. Next one what ma? Repayment to creditors, receiving amount received from the debtor. These are all the transaction, paying the rent, paying the salaries, paying advertisement expenses. These are all called as what ma? Business transactions. We can record in the books of accounts. But what is the meaning of personal transaction? Related to owner is called as a personal transaction. These type of transactions we are going to record. We are not going to record. We are not going to record. What here saying ma? Activities performed by the proprietor for his own purpose, not for the running of organization. For example, what ma? Car purchased by the proprietor out of savings for residential purpose. Okay, na? He is purchasing the car out of his savings for business purpose or residential purpose. Here, whether in this situation business involvement is there or not there? There is no business involvement. For that we are not going to record. We are going to record in the books of accounts. We are not going to record in the books of accounts. Note, these transactions not recorded in the books of accounts. BOA means what ma? Books of accounts. Are you getting the point? Next, again in this business transaction, they are classified into two types. What are the two types, sir? Monetary transactions and non-monetary transactions. What is the meaning of monetary? Means involvement of money. What is the meaning of monetary ma? Involvement of money is called as a monetary transaction. What is the meaning of non-monetary transaction? Non-involvement of money is called as a non-monetary transaction. For example, okay na, we are a big fan of Rajamouli. Okay na, we are a big fan of Rajamouli. We are providing the advertisement service. We are providing which service of advertisement. Okay now, in order to big fan of Rajamouli means Rajamouli came to us and he is asking to promote the cinema, to promote his cinemas. Okay now, but he is saying how much consideration we will charge. But what we said ma, we are a big fan of Rajamouli, so that what we are saying, no need sir, no need of any consideration. But even though we are going to provide you the service, whether this transaction is a business transaction or personal transaction, first of all, business transaction. We are providing the service to the Rajamouli. Providing the service related to business or not related to business? Related, which service you are providing? Advertisement service only we are providing. But we are charging consideration. We are not charging consideration. We are providing the service at a free of cost. Involvement of money is there or not there? Not there. So this type of transactions is called as non-monetary transactions. Should not be recorded in the books of accounts. Okay now, business transaction plus monetary means we will record in the books of accounts. Business transaction plus non-monetary means we are not going to record in the books of accounts. Guys, are you getting the point or not? What I am saying? First, what is the meaning of transaction? An activity. What is the meaning of a transaction? An activity. Okay, now how many types of transactions are there? Two types: business transactions, personal transaction. We are going to record business transactions which are related to monetary. We are not going to record the transactions. Which type of transaction we are not going to record? Personal transactions we should not record. And what is the second category? Business plus non-monetary we are not going to record in the books of accounts. Are you getting the point? So next one. And again, these monetary transactions are classified into how many types? Two types: cash transactions and credit transaction. We will record the cash transaction and we will record the credit transactions also. So this is the ultimate objective. So involvement of money means monetary, no involvement of money means non-monetary. So what is the transaction meaning, Amma? An activity performed by a person is called as a transaction. How many types of transactions are there? Broadly, two types: business transaction, personal transaction. We are not going to record the personal transaction in the books of accounts. All the business transactions we will record. No, business transactions which are related to monetary only we will record in the books of accounts. The business transactions which are not related to non-monetary we are not going to record in the books of accounts. So this is how we have completed the discussion of terminologies related to transaction, related to debtor, creditor, discounts. All this we have discussed, and we have discussed one journal entry called as which entry? Sales. Okay, now. So we have discussed the capital entry, purchase entry, and sales entry, and we have completed the how many terminologies we have completed? 14 terminologies totally we have discussed. Which type of discount we are going to record in the books of accounts? Cash discount. Why? If you not recording the cash discount means we are not going to get correct profit or loss. Okay, now how many types of cash discounts are there? Two types: discount allowed, discount received. Discount allowed is a loss, discount received is a gain. Discount allowed means business is going to give discount to the debtor. Discount received means we are receiving from the creditor. So these are the main points. The further discussion we can discuss in the next class. Thank you. Is there any doubts? Thank you. Have a nice day. Voice function, sir. What time, sir? Okay, guys. Good afternoon. Okay, we have started the discussion with the regarding the terminologies of accounts. Okay, now. So in that, first we have discussed about the gap. What is the meaning of gap? Generally accepted accounting principles. So in that, what is the first principle? Separate entity concept. As per this concept, owner is a different person, business is a different person. So here we have to think from point of view of business. Okay, na? So if anything investment made by the owner is called as capital. Can anything taken away by the owner from the business for the personal use is called as drawings. So capital is a liability, drawings is an asset. Okay, na? Because capital we need to repay to the owner, drawings owner need to repay to us. Next we have discussed about the terminologies. First one is called as business. So what is the meaning of business? A place where exchange of goods and services are rendered. So what is the meaning of good? An object or commodity purchased or manufactured, an object of resale. With an object of resale, either that particular good we can manufacture or we can purchase outside. But we should not use and we should not resell. Okay, Nama. Without using, we should sell. Either we can manufacture or either we can purchase from outside. So next, then after, Drawings we have discussed, you know already. Next one, statement of capital. So we'll start with the opening capital, nothing but initial capital. Then after we are going to reduce the drawings. Then after interest on capital, we need to add we need to reduce some. We need to add. So it is an expenses to the business because we need to pay to the owner. Next, we need to reduce the interest on drawings. It is an income to the business because we are going to receive from the owner. Next, then after additional capital, we need to add. Then we'll get the closing capital. For that closing capital, net profit. In the case of net profit, we are going to add. In the case of net loss, we are going to reduce. Next, we know the accounting equation. What is the accounting equation? Asset equal to equity plus liabilities. Now, in the accounting, totally how many approaches we are going to have? 3 approaches. First one is called as traditional approach. Second one is called as modern approach. And third one is called as accounting equation approach. But we are going to discuss from which point of view? Modern approach. So in order to remember the modern approach, we have taken a one shortcut. Okay, na? So imagine what is the shortcut we have kept, ma? So dealer, D for drawings, E for expenses, A for asset, L for liabilities, E for equity or capital, R for revenue or incomes. This drawings, expenses and assets are presented on the debit side, so that these items are having which balance? Debit balance. Liabilities, equity or capital, revenue or incomes, these are the items are presented on the credit side. So for these items we are going to have the credit balance. What is the meaning of debit balance? Debit side is more than credit side. What is the meaning of credit balance? Credit side is more than debit side. If the debit balance increases, we need to do debit. If the debit balance decreases, we need to do credit. If the credit balance increases, credit, decreases, debit. So when we see the asset point of view, at which point of time asset will be increases? Purchase. Comes in means increases, goes out means decreases. When we see from the liabilities point of view, liability created means liability will be increases. When we are repaying the liability means liability will be decreases. Always expenses and incomes are going to increase or reduce. Always expenses or incomes are going to increase. In certain situations, expenses and incomes will be decreases. We can discuss at that point of time. As of now, always expenses and incomes are increases or decreases? Increases. Did you get the point? Is there any doubts? What is the meaning of debit balance? Debit side is more than credit side. So we all know that. Next, then after opening balances and closing balances. Opening balance means brought down or carried down? Brought down. Closing balance means carried down. Okay, now for the debit balance, opening balance will be on the debit side. For the closing balance will be on the credit side. So we need to write to balance brought down, by balance carried down. This formula will be applicable in the case of ledgers. Okay, now in the case of journal, which formula we need to remember? Increases means debit, increases means debit, credit increases means credit. That formula we need to remember at the time of journal. This formula we need to remember at the time of ledger. So for the credit balance, opening balance will be on the credit side. So by balance brought down, to balance carried down. So these are the things we already discussed, so that I am discussing in a faster manner. What are the two main objectives of the accounting? To find out the financial result and to find out the financial position. Result means what? Either profit or loss. We can identify the profit or loss by way of preparation of trading or P&L account. This one is also called as income statement. The statement is also called as income statement. Balance sheet is also called as position statement. Balance sheet is also called as position statement. P&L account is also called as income statement. We can discuss at the time of final accounts once again. Okay, na? So in order to find out the profit or loss, we required what? Incomes and expenses. Without incomes and expenses, we cannot identify the profit or loss. If the expenses are more, loss. If the incomes are more, profits. Next, what are the positions? How many types of positions are there? 2 types. Solvent position, insolvent position. Solvent means good, insolvent means bad. Good means what? The realizable value of assets are more than liabilities. Bad means what? The realizable value of assets are less than liabilities. So we can identify the situation based on which statement? Balance sheet. Balance sheet is also called as position statement. Okay, now P&L account is also called as income statement. Next one, We have started with the discussion of journal entries. So what is the first journal entry? Mr. Ram, owner of the business, started with 10 lakhs. So cash and capital are the two outcomes. Cash is an asset. Asset means which balance? Debit balance. Cash comes in or goes out? Comes in. So increases or decreases? Increases. So debit. Like that we have discussed with the journal entry. What is the journal entry here? Cash account debited to capital account. Next one. Goods purchased for rupees 10 lakhs. So goods purchased from Mr. Raju for cash of rupees 10 lakhs. Goods purchased for cash of rupees 10 lakhs. These three transactions are similar or different? Similar. What are the two outcomes? Purchase and cash. Purchases and expenses will have which balance? Debit balance. Always increases debit. Cash is an asset, debit balance. Cash comes in or goes out? Goes out. Goes out means decreases. Is called which balance? Credit balance. So what is the entry? Purchase account debited to cash account. Next is sale. When come to the sales, goods sales are asset sales. Goods. Goods sales means what are the outcomes? Sales and cash. Sales is an income, credit balance always increases credit. Next cash, asset, debit balance increases or decreases? Increases. Comes in or goes out? Comes in. Comes in means increases, goes out means decreases. So what is the entry? Cash account debited to sales account. So next we have discussed the concept called as discount. So what is the meaning of discount, Amma? Reduction in value of purchase price or selling price is called as a discount. How many types of discounts are there? Two types. Trade discount, cash discount. Okay, now discount on or before the sale or purchases is called as a trade discount. This discount will be presented in the invoices or books. Will be presented in the invoices, but we no need to record in the books of accounts, because already at the time of recording the transaction we will record at a reduced price, at a more than price, at a reduced price. Next, cash discount means after the transaction or before the transaction? After the transaction, after the purchase or after the sale. How many types of discounts are there? Two types. Discount allowed, discount received. Discount allowed means business is going to provide to debtor, it is a loss. Discount received means creditor will going to give to the business, it is a gain. Both are recorded in the books of accounts, both are not recorded in the books of accounts. Both should be recorded in the books of accounts, otherwise we are not going to get correct profit or loss. If you record, we will get the correct profit or loss. If you are not recording in the books of accounts, we are not going to get the correct profit or loss. So this is how we have clearly explained this concept. And then after, so we have seen all these terminologies. And next, how many types of transactions are there? Two types. What are the transactions? Business transaction, personal transaction. Business transaction means related to business. Personal means not related to business. Okay, now again the business transactions are how many types? Two types. Monetary transactions, non-monetary. We should not record the personal transactions, and we should not record the business plus non-monetary. We should not record, but we need to record business plus monetary. Okay, now so that the transactions may be in the form of cash or maybe in the form of credit. Okay, now next we are going to discuss the event. What is the meaning of event, sir? Result of a transaction is called as a event. We need to record the event and we need to record the transactions in the books of accounts. What is the meaning of event, sir? I am not going to understand. Imagine we have purchased the machinery for rupees 10 lakhs. We purchased the machinery for rupees how much? 10 lakhs. We are going to sell that particular machinery 12 lakhs. How much? 12 lakhs. Okay, now we need to record purchase of asset and we need to record sale of asset. Why, ma? Because both are related to business or not related to business. Both are related to business in terms of monetary, in terms of non-monetary. In terms of monetary. So for that reason we are going to record the 10 lakhs and we are going to record the 12 lakhs. What is the entry for the 10 lakhs? Purchase of asset. Asset account debited to cash account. Sale of asset. Cash account debited to asset account. But there is a gain here. There is a gain. Yes or no? What is the gain here? 2 lakhs. We have purchased for 10 lakhs. Okay, forget about the depreciation. Okay, now I'm not going to discuss anything about the depreciation. Okay, here imagine there is no depreciation. You have purchased for how much? 10 lakhs. You have sold for how much? 12 lakhs. Okay, now we have we have got a gain of. The gain should be recorded, should not be recorded. Should be recorded. Here the 2 lakhs is called as result. The 2 lakhs is called as result of a transaction. Result of which transactions? Result of first transactions, result of first one and second one. Okay, now because of 2 transactions we are getting a result of how much? 2 lakhs is a gain. Okay, now this 2 lakh is called as event. This 2 lakhs is called as event. This 10 lakhs is called as transaction. This 12 lakh is called as transaction. Business plus monetary, business plus non-monetary, business plus monetary. Okay, now we need to record transaction and we need to record the event. The events also how many types? 2 types: monetary events, non-monetary events. So we need to record only the monetary events like this one. What is the meaning of non-monetary, sir? That is not related to money. That is related to internal issues. For example, in the board of directors, one of the most famous board of directors, okay, now leave the organization and went join in the competitor business. Okay, now this is also an event. This is also Atma event. But those type of transactions you are not going to record. That impact should be shown in the financial terms. Okay, now what is the impacts are there? There may be a reduce in the value of share price. Those transactions we can record in the books of accounts. Okay, now guys, next one. Now we are going to discuss about the accounting definition. What is the accounting definition here? As per ICAI, not as per ICMA, as per Entama, as per ICAI, it is an art of recording, classifying, summarizing, analyzing, interpreting, and communicating to the end user. Okay, now. So recording means you know already. Recording means what, ma? Journal. Classifying means ledger. Summarizing means trial balance. Analyzing and interpretation is called as nothing but financial statements. Okay, now we will analyze by preparation of financial statement. After that we are going to interpret whether we are getting a profits. Okay, we can continue the business. In case of getting a losses, we should close the business. Like that we need to get the decision in the case of interpretation. The case of what, ma? Interpreting. And then we need to communicate to the end users. How we can communicate? How we can communicate the financial statement to the end users? By way of giving the advertisement in the website, or there is a portal called as what, ma? MCA portal. Do you know what is the meaning of MCA? Ministry of Corporate Affairs. This is the head for all the companies. We need to, there is a website will be there. That website we need to upload the financial statements of the organization. What is the meaning of financial statements? As of now, P&L account, trading account, balance sheet, these are all called as what, ma? Financial statements. Okay, now we need to upload in which portal? MCA. So this is called as communication. This is called as what, ma? What is the meaning of communication? Uploading in our website, company website, and uploading in the MCA portal is called as a communication. You know all the things recording. What is the meaning of recording, classifying? I am not going to explain in detail. Why? Because it is unnecessary. Necessary, unnecessary. Unnecessary, because you know how to prepare the journal, you know how to prepare the ledger. So that's why we are discussing the entries. Okay, now different types of entries we are discussing in the journal. Okay, now we need to follow the which orders are chronological order. What is the meaning of chronological order? Date wise. Okay, now date wise we need to record the transactions. Okay, now that order. Next one, there is a what is the definition once again? As per ICA, it is a art of recording, classifying, summarizing, analyzing, interpreting, and communicating to the end user. Recording means journal. Okay, na. Classifying means ledger. Recording means, okay, imagine you all the students are joined in the Shikra. First of all, at the time of taking admission, our in-charge sir will take the will wrote the names, names, mobile phone, mobile number, and contact details like that. After that, what they will do, ma? Here more than 150 admissions are happened means we're going to divide into 2 sections. In that, how many number of boys are there, how many number of girls are there. If you divide like that, that is called as classification. That is called as what, ma? Classify. So in total, our in-charge sir will say, okay, now in the first batch Total number of girls is 15. Total number of boys are 70. Like that. That one is called as summarizing. That one is called as what, ma? Summarizing. Or if we take the salaries example, date wise we are going to record the salaries. Date wise means what? Every month end we are going to provide the salaries to the employees. Okay, now month end details will be there in the ledger. Month end will be details will be there in the ledger. But we required a overall year information. At that point of time, from where we can get the details? Trial balance. The trial balance total year data will be presented. The month wise will be maintained in the ledger. Okay, now date wise will be maintained in the journal. Journal is a date wise, ledger is a month wise, trial balance is a year. At last we will prepare the financial statement to identify the two reasons: financial result and financial position. Ultimate objective of accounting is called as identify the financial result and identify the financial position. So this is in detail. Okay, now I'm not going to explain even because it will take time. You know already paper number 6 having a huge syllabus, small syllabus, huge syllabus. For that reason I am not going to explain in detail. But because you know now, you don't know now, you know. Yeah, we need next one. We are going to discuss about the accounting system. What is the meaning of accounting system, sir? The manner of recording the transactions and events in the books of account. Manner means what? How to record. How to record the transactions. Here first one is called as what, ma? Recording. Recording means nothing but journal. Okay. How to record? How to record means what, ma? We're having how many types? Two types. Single entry system, double entry system. Single entry system means what? Either credit accept or debit accept. Okay, na? In any one that both the items, only one item we are going to record is called as single entry system. We are going to record both the debit accept and credit accept. We are recording the both the accept means it is called as double entry system. Okay, now single entry system means, for example, only personal accounts in nature of transaction should be recorded here. Double entry system means we will record the personal account, real account, nominal account type of transaction. We will record both the debit and credit accept. If you see, imagine we have started a hotel. Okay, now imagine we are having one village. That village hotels, how it will be, ma? Daily they will pay the amount we are having the credit sales more. Village, imagine the village. In our village only credit sales will be more. You know, there will not be any cash sales. Monthly once they will pay, or 6 months once they will pay. Okay, now because in the village all the members will do what, ma? Agricultural activities. The agricultural activities they will get the amount 6 months once. Yes or no? Firstly, they in the first 6 months they will have the overall expenses. Okay, now for the cultivation, for digging up the land, for what are all the things? Okay, now for taking rent of a tractor, for taking a field for the rent, or fertilizers you want. First they will incur all the expenses. Okay, now after 6 months, whether after cultivating the what are the products they have cultivated, for example wheat we are cultivating, so we are going to sell in the market. After selling the wheat in the market, then only we'll get the funds. Otherwise the farmer will not get the funds. So they will pay how much? They will pay in a day wise 6 months 6 months once. Are you getting the point what I am saying? In the villages, mostly we are having the credit sales, cash sales, credit sale. Because why? What is the reason? The villages, most of the members will do the farming. Okay, now if we are doing the farming means daily we will get the amount, monthly we will get the amount, yearly we will get 6 months once, 6 months or 3 months once. 3 months, because some of the crops will take the 3 months, some of the crops will take the 6 months. So for that reason, mostly in the villages, credit sales will be there, cash sales will be there. Credit sale. Okay, one of the person will come and eat the 2 bhaji, 1 bonda. Okay, now how they will say? Right, I have written, I have eaten what, ma? 2 bhaji, 1 bonda. Here what, ma? We will record only incomes. We will record only incomes. We are not going to record the expenses. Then we'll get the correct profit or loss. We are not going to get the correct profit or loss. At which point of time we'll get correct profit or loss? We need to record expenses. We need to record incomes. The single entry system, either some people will record only expenses. Some people will record only incomes. At that point of time, we are not going to get the correct profit or loss. Okay, now they will maintain only personal accounts. That means what, ma? Debtor account, creditor account, like that. They will not maintain the incomes and expenses in full-fledged manner. Okay, now either they will record the debit accept or they will record the credit accept. So, but in the double entry system, we need to record both the debit accept and credit accept. Okay, now. So here we are going to record personal account, real account, and nominal accounts. All the three accounts we are going to record. So which option is the best? Double entry system is the best, the single entry system? Double entry. In our homes, our parents will follow what? Single entry system. Our parents will follow what, ma? Single entry. Either they will record what, ma? They will record payments, or some people will record what, ma? Only incomes. That's all. Okay, now. In our books of accounts, we are going to maintain both expenses, incomes, personal accounts, real accounts, all the things we are going to record in the double entry system. Are you getting the point? Next one, method of accounts. Method means what, ma? First, we need to follow which system? Double entry or single entry? Double entry system. Next, that double entry system we can maintain in how many manners? 3 manners. Okay, na? That double entry system, how many methods? First of all, we have fixed the method. Method means what? Accounting system means it is a recording of transactions and manner. How to record, you know. In that how to record, how many methods we are having? 3 methods. First one is called as cash basis, accrual basis, hybrid basis. So first of all, we are going to see the cash basis. First of all, we are going to see what, ma? Cash. Cash basis means whether we received, we will record, or whether we paid, we will record. That's all. Only payments, only received in cash. Must and should be happen in the cash, in the creditor, in the cash. So if you see the transactions, we're going to record in the books of accounts only when there is a involvement of cash. If there is no involvement of cash, that means imagine the transaction. Okay, now in the transaction, how many types of transactions are there? 2 types: business transaction, personal transaction. In this business transaction, monetary, non-monetary. In this monetary, cash, credit. In the cash basis, we will record only cash or creditor. Cash. That means we are going to record business transaction, that too monetary transaction, that too cash transactions. In the which basis, ma? In the cash basis. In the accrual basis means we will record the credit asset and cash, but related to business, but related to current year. Related to current year. Here, the current year or previous year, next year is not necessary. Okay, now whether we received, we are going to record. Whether we have paid, we are going to record. Here, current year, next year, previous year, we should see or we should not see. We should not see in which basis? Cash basis. But in the accrual basis, we need to consider whether paid or not paid, whether received or not received, but related to current year means we will record as per which approach? As which basis? Accrual basis. In the cash basis, irrespective of year, irrespective of year, only received means we are going to record in the cash basis. Next, hybrid means what, ma? Combination of both. Okay, na? Cash and accrual is called as a hybrid basis. One of the film called as what, ma? Sai Pallavi. There is a famous dialogue. Hybrid pilla, like that. Hybrid means what? Hybrid means not the Sai Pallavi. Cash and accrual, both the combinations is called as a hybrid basis. Okay, na? Hybrid means Sai Pallavi. There is generally hybrid agriculture. You know, hybrid agriculture means one rose flower, and they will take yellow color flowers and red color flowers. They will combine and they will tie up. Okay, now for the same plant we are going to get 2 flowers. That is called as hybrid. Hybrid. What is the meaning of cash basis? Irrespective of year, whether received or paid, we will record in the books of account. What is the meaning of accrual basis? Respective of year, irrespective of year. Respective of year, whether received or not received, whether paid or not paid, we will record in the accrual basis. Okay, now guys. So what is the meaning of accounting system? Manner. Manner means how to record the transaction. Next, in that manner, we can maintain how many systems? 3 systems. Cash basis, accrual basis, hybrid. Nothing but record. Which type of transactions we need to record? Cash or both or cash and mix combination. But overall in the outside, what they will follow ma? Accrual basis. 99.99% they will follow which basis? Accrual. Accrual basis is also called as mercantile basis. Accrual basis is also called as mercantile basis. Only in the question they have mentioned the cash basis, means we should follow the cash basis. Otherwise, which basis we need to follow? Accrual basis. Okay, na guys. So next one. Now we are going to see some of the journal entries. After that, we can discuss how to identify the profit or loss as per cash basis and accrual basis. Okay, na guys. Things so problematic material. Okay, now tomorrow I will discuss clearly about the cash basis and accrual basis. As of now, what we can record we can discuss the journal entries. Okay, now in this class we have started with the discussion of event. What is the meaning of event? Result of a transactions. We need to record the event, we need to record the transaction. Which type of events we need to record? Monetary events. Next, accounting definition. As per ICI, accounting is an art of recording, classifying, summarizing, analyzing, interpreting and communicating to the end users. Okay, now I am not elaborately discussing about the definition because already you know. Next, accounting system means manner to record the transactions and events. Okay, now which manner we need to follow? Double entry system. The double entry system, how many methods are there? In the double entry system, we are having the 3 methods. First one is called as cash basis, accrual basis. What is the meaning of cash basis? Only involvement of cash means we will consider, otherwise we will not consider, irrespective of year. But in the accrual system, irrespective of year, whether received or not received, whether paid or not paid, nothing but here we are going to record only cash purchases, cash sales. Here we are going to record cash purchases, credit purchases, cash sales, credit sales. Okay, now I think do you know the outstanding salaries? Okay, now outstanding salaries will be recorded in cash basis, accrual basis, because outstanding salary means what ma? Paid or payable? Payable. So outstanding salaries will be recorded as per accrual basis, will not be recorded as per cash basis. Income received in advance, cash basis we will consider. In the accrual basis we are not going to consider, because why should we should not consider as per accrual basis? Even though it was received in the current year but not related to current year, even though it is received but related to current year, not related to current year, not related to current year. Next, income receivable. The cash basis we should not consider. Why ma? Whether income received or not received? Not received. Involvement of cash is there or not there? Not there. The accrual basis we should consider, we should not consider. We should consider, even though it is not received but related to current year. Okay na guys, so like that we can discuss. I will discuss the whole things, you don't worry. As of now we are discussing only the meanings of all the things. Okay na guys, so how many journal entries you have completed? 3 journal entries, huh? Discount allowed also completed, huh? Not completed. Okay, fourth one. Imagine this is a business. We are making a credit sale of goods. What we have done ma? Credit sales or purchase sales? Credit sales of goods at the rate of 10 lakhs. The rate of how much? 10 lakhs. Now this person is called as debtor, creditor. Creditor. This person is called as debtor. Okay, now we are making the credit sales. Okay, now so that person is called as creditor, debtor. Now in this situation, debtor value increases or decreases? Huh? Increases or decreases? Debtor. Previously we are having a debtor. Now only we are having the debtor. Debtor increases means asset increases, liability increases. Asset increases. Debtor is an asset or liability? Asset. So here debtor value increases. The situation debtor value increases. Asset created now. Asset created now. So asset value increases or decreases? Now what he can do from this sales, he is going to return the some amount of sales is called as what? Sales returns. Because of sales returns of rupees 2 lakhs. What is the amount of sales returns of rupees 2 lakhs? Because of sales returns of 2 lakhs, debtor value will be increases, will be decreases. Firstly, we are having how much amount of balance? 10 lakhs. Now, because of this one, the balance will be decreases to 8 lakhs. That means because of this transaction, debtor value decreases or increases? Decreases. So next, then after, he can repay, he cannot repay, he can repay. So amount received from debtor of rupees 7,50,000. Because of this one, debtor value increases or decreases? Debtor value increases or decreases? Decreases. Why? How much amount he need to repay now? Only 50,000. Firstly, how much 10 lakhs. Firstly, how much? 10 lakhs. From these 10 lakhs, how much amount he has returned? 2 lakhs. Now, because of that one, what is the balance? That means balance increases or decreases? Decreases. That means, so because of sales returns, debtor value decreases. Now again, he going to repay how much? 7,50,000. So if you reduce the 7,50,000, how much? Now again the balance increases or decreases? Debtor balance increases or decreases? Decreases. Now how much amount he need to repay? Only 50,000. First 10 lakhs, 10 lakhs to 8 lakhs, 8 lakhs to 50,000 means how much we need to reduce or we need to increase? We need to reduce the debtor. Are you getting the point? At the time of credit sales, debtor value increases because his balance 0 to 10 lakhs. That means we will receive we are going to repay we will receive. Receive means receivable means asset or liability? Asset. So because of this one, debtor value increases or decreases? Increases. Okay, now don't be confused. Debtor value increases. Asset is created. Asset is created. Next, because of sales returns, debtor value decreases. Now how much amount he need to pay? Only 8 lakhs. Previously 10 lakhs. Now we need to reduce the amount received from debtor. Okay, now in this situation also debtor value increases or decreases? Now how much amount he need to repay? 50,000. Now what we are doing is, so we are asking us to debtor, no need to repay. No need to repay. How much? 50,000. So that means this discount is called as discount allowed or received? Discount allowed of rupees 50,000. Because of this situation also, now the balance we are going to reduce how much? The balance is, and that means we need to reduce or we need to increase the debtor. In this situation also debtor value decreases. Are you getting the point? Okay, now you will understand the concept. Please just a second. First, credit sales, debtor value increases because asset is created. Next, because of sales returns. Next, amount received from debtor, discount allowed decreases. Okay, now so one by one we are going to discuss. Okay, now What is the A point, sir? Credit sale of goods to debtor of rupees 10 lakhs. Normally they will give the name, but as a general example, we are taking it as what ma? Debtor. What are the two outcomes? Debtor and sales. So debtor means asset. Asset which balance? So asset and expenses will have the debit balance. Comes and liabilities is called as credit balance. So debit balance. Now in the situation, debtor value increases or decreases? Decreases. For that reason, I am discussing whether the debtor value increases or decreases. So increases. What we need to do? So debit balance increases means we need to do debit. Next is sales. Income. Sales means income which balance? Credit balance. Incomes always increases. So next what we need to do? Income increases means credit. So what is the entry? Debtor account debited to sales account. What is the format? Date particulars. LF. Debit amount and credit amount. So what is the entry? Debtor account debited to how much amount? 10 lakhs and 10 lakhs. What is the narration? Being goods sold to debtor on credit. Okay, guys. అయిపోయిందా? Write this one also. Completed? Completed this one. Completed? Okay. Now write along with me. Okay, na? Parallelly. Okay, na? I will also write. You also write and participate. I will ask the questions and while answering only write along with me. Okay, na? At that point of time you will not get sleep. Otherwise you will get the sleep. So B point. So what is the B point? Sales returns. We need to discuss all the transactions. First one completed. Second one, sales returns made by debtor of rupees how much? 2 lakhs. Okay, now what are the two outcomes? And debtor. First, what did you say? Debtor and creditor sales. Because of you, debtor and sales returns. So debtor means asset will have which balance? Debit balance. In this situation, debtor value decreases. Decreases. Debit balance decreases means credit. Next is sales returns. Income, expenses, asset, liability. We are going to categorize it as expenses. Sales is an income. Sales returns is an expenses. So expenses means which balance? Debit balance. Next, debit balance. So always expenses increases. What we need to do? Debit. Debit balance increases means debit. Debit balance decreases means credit. So what is the entry we need to write? What is the format? Date, particulars, LF, debit amount and credit amount. So what is the entry? Sales returns account debit to debtor account. How much? 2 lakhs. Under 2 lakhs. Being sales returns made by debtor. Generally, they will give the person name. We need to write the person name. Okay, na guys. Okay, shall I start the third one? What is the third one? Key point. Amount received from debtor of rupees how much? 7,50,000. What are the two outcomes? Debtor and cash. So what is the debtor? Asset. Debtor means an asset. Will have which balance? Debit balance. Debtor, asset, debit balance. Now in this situation also debtor value decreases. So debit balance decreases. What we need to do? Credit. Now cash is an asset. Will have which balance? Asset will have debit balance. Now cash comes in or goes out? Comes in. That means increases or decreases? Decreases. So debit balance increases means what we need to do? Debit. So what is the entry? Cash account debited to debtor account. If in the sentence they will give the check means what we need to write? Bank. So the entry is called as cash or bank account debited to debtor account. So how much amma? 7,50,000 and 7,50,000. What is the narration we need to write? Being cash received from debtor. Being cash received from debtor. Completed amma. Next D point. What is the D point? Discount received allowed. Discount allowed to debtor of rupees how much? 50,000. What are the two outcomes? Discount allowed. Cash debtor. Debtor cash debtor. So discount allowed and debtor. What is the discount allowed? Whether income or expenses are asset or liability, we can call it as loss or we can call it as expenses. So which balance amma? Debit balance. Always expenses are increases. So what we need to do now? Debit balance increases means debit. So next debtor means asset will have which balance? Debit balance. In this situation also debtor value increases or decreases? Decreases. What we need to do? Credit. So what is the entry? Discount allowed account debited to debtor account. So what are the format? Journal date, particulars, LF, debit amount and credit amount. So what is the entry amma? Discount allowed allowed account debited to debtor account. How much amount? 50,000. What is the narration? Being discount allowed to debtor. Okay, na guys. If you see the fourth transaction, leave the first transaction and see the second. That means B, C, D. What are the journal entries? For the B, what is the entry? Sales returns account debited to debtor account. And if you see the C point, cash or bank account debited to debtor account. If you see the D point, discount allowed account debited to debtor account. That means what is the common point here? In each and every journal entry, debtor is debited or credited? Debited. Debtor is debited. So we can write the compound entry. We can write what ma? Compound entry. When at which point of time we should write the compound entry? Imagine we are imagining that what ma? These three transactions are happened on the same day. Has happened on the which date ma? Same day na different day na? Same day. If any transaction is happening on the same day, means okay na, we can write what ma? Compound entries. Okay na. So here, what is the compound entry we can write? What is the second one? Second entry. Sales returns account debited to debtor account. What is the third one? Cash or bank account debited to debtor account. What is the fourth one? Discount allowed account debited to debtor account. So what is the common point here? Debit or credit? Credit. Okay, now you know, for example, imagine in the max 10x plus 15x plus 20x. We can take the common. X common. Here x is not a common. Y common. 5 common. We can take the 5x is a common. Yes or no? So 5x, if you take the common, what we'll get? 2 plus 3 plus 4. Like that. Here also we can take the common. Which we can take the common? Debit common, credit common. Credit common. In the three journal entries, okay na, debtor is the common. Debtor is presented on which side? Credit side. So how we should write the compound entry? Sales returns account debit, cash account debit, discount allowed account debited to. What is the common? Debtor account. What is the amount of return sum? 2 lakhs. What is the amount for the cash? 7,50,000. Next, what is the amount for discount allowed? 50,000. What is the total amount? So 10 lakhs should be recorded on the credit side. So debit must be always equal to credit. So which system? Double entry system or single entry system? Double entry system. This is how we need to write the compound entry for which transactions. So for transaction of B comma C comma D. So must and should the transaction should be happen in the same data, different data, same date. If they are happen on the same date means we can write. Otherwise we cannot write. Okay, now we are targeting to prepare the debtor account. We are targeting to prepare what ma? Debtor account. How to prepare the debtor account we can learn. Okay, already we have discussed that. Okay. So please listen carefully. Don't write anything. So these accounts will be helpful for the single entry, final accounts, okay, NPO, all the type of these chapters. These type of accounts are very, very important. What are the types of accounts will be there, sir? Debtor account, creditor account, income account, expenses account. Okay, na. The next one is called as asset account. These are the accounts are very, very important. In this, we are going to discuss about which account? Debtor account. You know the transactions. Okay, na. What are the transactions related to debtor as of now? Credit sales, sales returns, collection from the debtors. Okay, na. Discount allowed. You know the bad debts also. Bad debt is also one of the transaction related to debtor. Related to debtor. So while preparation of any ledger account, first we need to write the opening balance and closing balance. So okay, debtor is an asset or liability, amma. Asset. Will you have which balance? Debit balance. For the debit balance, opening balance will be on which side? Debit side. What we need to write? To balance brought down. Okay, can I write like this? To balance brought down. I am not going to write any amounts. Okay, na. Next, what is the closing balance? Will be present on which side? Credit side. For the debit balance, opening balance will be on the debit side. Closing balance will be on the credit side. So we can write what ma? By balance carried on. Okay, now we can write like this. Next, if the debit balance increases, which side we need to record? Debit side. So debtor increases means debit, debtor decreases means credit. You know, this is a debit record and this is a credit record. Because which balance, amma? Because this is a debit balance, credit balance. Here this transaction is it is an asset and debit balance. So debit increases means we should record on which side? Debit side. Debit decreases means we should record on which side? Credit side. Okay, as of now. What is the credit sales entry? See the A point. What is the credit sales entry, ma? Debtor account debited to sales account. That means in the debtor account, which side we need to record? Debit side. So to sales or by sales? To sales. Okay, now. Next, what is the sales returns entry? To debtor account. Okay, debtor is debited or credited? Credited in the journal entry. So that in the ledger also, we need to record on which side? Credit side. If the debtor debited means debit side. If the debtor credited means credit side. So we can record by sales returns. Yes or no, ma? Now, next, amount received from debtors. Cash or bank account debited to debtor account. So to cash or bank, by cash or bank? By cash or bank. Are you getting the point? By cash or bank. So if you see here, once again. So what is the first point, amma? Credit sales or cash sales? Credit sales. What is the entry for the credit sales? Debtor account debited to sales account. We are going to record the debtor account. We are going to prepare the sales account. We are going to prepare the debtor account. In the debtor account, which side we need to record? Debit side. Why? In this journal entry, debtor is debited or credited? Debited. So for that reason, we need to record on which side? Debit side with the name of sales. In the debtor account, we should not write the debtor. The debtor account we should write, we should not write. We should not, but we should record on side. Which side we need to record? Debit side with the name of sales. With the name of sales. Okay, now. Next, that means two sales or by sales? Two sales. At the time of preparation of ledger account, debit side we need to put the word called as two. Credit side we need to put the called as by. Okay, now. The debit side to, credit side by. If you see the second transaction, what is the second transaction? Sales returns account debited to debtor account. Here the debtor is debited or credited? So credited, so that in the debtor account, which side we need to record? Credit side. What we need to record? Credit side by, debit side to. So by sales returns. So that's why we are recorded. Next, if you see the third one, what is the third one? Cash or bank account debited to debtor account. So debtor is debited or credited? Credited. So that we need to record on which side? Credit side with the name of by cash or bank account. Bank account. Next, in this situation, what we need to record? By discount allowed. Okay, now. So, to discount allowed or by discount allowed? By discount allowed. So, this is the entry to ledger format. Okay, now. Simply we can remember like this. How? Increases means debit, decreases means credit. At the time of discussion of example, because of sales, debtor value increases, debtor value, so that we have recorded on the debit side. Because of these three transactions, debtor value decreases, so that we are recording on credit side. Okay, na? Are you getting the point? Okay. I have discussed the journal and I have discussed the ledger. Easy, further easy remembering. So if the debit means increases, credit means decreases. So because of sales, debtor value increases, so that we are record on the debit side. Because of sales returns, cash and bank, discount allowed. So because of these three reasons, debtor value decreases, so that we are recording on the credits. Just a second. Oh, because of bad debts. Because of bad debt. What is the meaning of bad debt? Amount will be recorded, will not be recorded? Will not be recovered from the debtor. That means debtor value in our books of accounts should be zero, na? Should be something. Should be something. Debtor value we need to show in our books of accounts zero, na? Or we need to write 10,000 in the bad debt situation. Okay, now remember. So totally 10 lakhs is the, in our example, what is the total amount of credit sales? 10 lakhs. After that, how much amount he has repaid? 2 lakhs. So what is the balance? 8 lakhs. In this, how much amount he is repaid? 7,50,000. So what is the balance? So imagine we have discount allowed only 30,000. So what is the balance? This 20,000 is called as bad debt. Imagine this 20,000 becoming what, ma? Good data, bad data, bad debt. So bad debt means we are going to receive from the debtor, we are not going to receive from the customer. Not going to receive means debtor value should be in our books of accounts 20,000, or we should show 0. We will recover this 20,000, we cannot recover. We cannot recover means, so if we can recover this 20,000 means in our books of accounts we need to show how much? 20,000. But now we are able to recover, we are not able to recover. Not able to recover. In that, at that point of time, we need to show how much amount of balance in our books of accounts. 0. 0 means this 20,000 we need to reduce or we need to increase. We need to reduce. That means because of bad debt, debtor value decreases. Because of bad debt, debtor value decreases. Are you getting the point? Okay, now at this point of time, 20,000 we need to recover from the debtor. But debtor is solvent. Debtor is what, ma? Insolvent. Insolvent means he is in a not able to pay situation. So not able to pay means whether we will receive or we are not going to receive. We are not going to receive means, so we should show still 20,000 in our books of accounts. If you show the 20,000 in our books of accounts means what is the meaning of that one? We are in a receivable capacity from the debtor of rupees how much? 20,000. But what he is saying, he will repay, na? He will not able to pay. He will not able to repay. That means how much amount we need to show here? 20,000. 0 na? 0. You know, we should not show the 20,000. If we are showing the 20,000 means we are in a able to receive situation. But what the debtor is saying, so I am in a insolvent position. I am not able to pay na? I am able to pay na? I am not able to pay. Vaadu kattapothe meeku vastaya. So if is in a not able to pay situation, whether you are going to receive or not going to receive, not going to receive. That means how much amount of balance we need to show the books of accounts? 0 na? 20,000. We need to show the balance to 0 means we need to increase the debtor, we need to reduce the debtor. We need to reduce the debtor. Debtor reduce means which side we need to record? Credit side or debit side? Credit side. So, to a by bad debt. What is the entry? So here the debtor, in the debtor account, which side we have recorded? Credit side. The debtor account credit side means in the journal entry debtor is credited. The journal entry debtor is credited. So in the debit side, what we need to record? Bad debt. So what is the entry for the bad debts? Debtor account. Bad debts account debited to debtor. So in our books of accounts, the debtor value should be 0 na 20,000 na 0. So in order to reduce the balance from 20,000 to 0 means we need to reduce or we need to increase. We need to reduce. So because of this reason, because of bad debts, debtor value decreases. So debtor value will be increases only in the situation of sales. Which sales? Credit sales. The remaining situation, debtor value increases or decreases? Decreases. So there is some other points. Please wait a second. So till now there is any doubts? So first in the debtor account we have recorded the opening balance and closing balance. So debtor is having which balance? Debtor is an asset. We'll have the debit balance. For the debit balance, opening balance will be on the debit side. Closing balance will be on the credit side. Then after, because of sales, increases or decreases? So increases debited. So because of sales returns, decreases. Because of cash and bank, discount allowed, bad debt, decreases. So there is a concept called as bills receivable. There is a concept called as what ma? Bills receivable. I will explain. So please listen carefully. Imagine this is a business. So who is he? Yashvana, Pushpana. Yashvana. This is a business. Okay, guys. So he is a debtor. Debtor means what ma? What we have done? Credit sales or credit purchase? Credit sales. So credit sales of rupees 10 lakhs. How much ma? So at this point of time, what is the entry we need to record? Debtor account debited to sales account. So how much? 10 lakhs under 10 lakhs. Okay now. But we are not having trust on the Keshva. Having the trust or not having trust? Because he is working like a labor. The part 1, not in the part 2. Okay na? The part 1 he is working like a Pushpa part 1. Okay na? He is working like a labor. We are having the trust, we are not having the trust. For what reason? He is a labor. Okay na? He may repay or he may not repay. So okay, not having the trust. Imagine he is not able to repay. He is not able to repay. At that point of time, what we need to do? We need to record the bad debts. We can file a suit on the Keshvana. We can file or we cannot file. We can file or we cannot file the suit. Okay, you can file. What is the proof? What is the proof you are having? To file a suit, we required what? Evidence. What is the evidence you are having to file a suit? Invoice, Invoice, or your books of accounts, What is the proof? For filing a suit, we require evidence. What is the proof of document? Bill receivable. Where is the bills receivable? Just what we have done? Debit note. Okay, debit note means nothing but invoice. Okay, na. Just invoice is not a proof document, because why ma? I will also print the bunch of invoices. Okay, voucher, invoice is all, everything is same. Okay, na. I will also prepare the invoices like Shikara Institute. Okay, na. In that I will write all the names. All the names means my wish, I am going to write all the CMA foundation candidates, those who have passed. I have write in the invoices. Whether they have joined or not joined, it is not necessary for us. Just I am writing the invoices, and then I am filing a suit on the court. These are the students are joined in my institute, and they have went outside. They need to pay the fee to me, like that. So it is a correct proof of document. No, this is not a correct proof of document. Why ma? Because everyone will prepare the invoices. Okay, nama. It is on their wish. Okay, na. Only the printing cost will be happen. That's all. We can write whatever we want. No, there is no legal stamp on that. Is there any legal stamp? So if we are having a legal stamp, means it is a valid document. Otherwise, it is not a valid document. Are you getting the point? So okay, na. ఓన్లీ ఒక్క ఇన్వాయిసే మనకు ప్రూఫ్తో అవ్వదు, మనం వెళ్ళి కేసు ఫైల్ చేయొచ్చా? వీ కెనాట్ ఫైల్ ద బిల్. బట్ ఫర్ దిస్ రీజన్ వాట్ వీఆర్ డూయింగ్, వీఆర్ డ్రాయింగ్ ఏ బిల్. వీఆర్ డ్రాయింగ్ ఏ బిల్ ఆన్ ద కేశ్వర్ will accept, will reject, will accept. We have drawn Keshwa, accepted. Okay, now the debtor value will be decreases. In the place of debtor, what will come into the picture ma? Bills receivable will come into the picture. Okay, so imagine this is the journal entry for the credit sales. What is the entry? Debtor account debited to sales. In this we need to reduce the debtor, we need to reduce the sales. Debtor, if you reduce the sales means it is possible. If you are going to reduce the sales means you are not having any income. You are not going to have any income. So we need to reduce the debtor, we need to reduce the sales, we need to reduce the debtor. Okay, debtor which balance? Debit balance reduces means credit. On the debit side, what we need to record? Bills receivable. So what is the journal entry we need to record? Bill receivable account debited to debtor account. Okay, na. After listening all the Ramayanam, some person will ask, who is the Sita? Like that. Bills receivable account debited to debtor account. Which side we need to record? Because of bills receivable, debtor value increases or decreases? Decreases means which side we need to record? Credit side. So to by bills receivable. So are you getting the point? So why the bills receivable will come into the picture? Having the trust or not having the trust? Not having the trust. For that reason we are reducing the debtor. So reducing the debtor means debtor having which balance? Debit balance. We are going to reduce the debit means credit. On debit side, what will come into the picture? Bills receivable. It is an asset. Bills receivable is an asset. Now only created, we are going to cancel. Now only created. So that what we need to do? Debit. So bills receivable, asset, debit balance increases debit. Are you getting the point? So bills receivable, asset, or we can take asset comes in means debit, goes out means credit. Bills receivable comes in, goes out, comes in. So he is accepted and giving the bill to us. That means comes in, goes out, comes in. Okay, na point. So this is how we can show the which account? Debtor account. Okay, na. There is a situation called as dishonor of a bill. Did you remember? Dishonor. Bill of exchange in the CMA foundation. Okay, na. Honor means payment will be happened, payment will not be happened. Payment will be happen. Dishonor means payment will not be happen. Okay, imagine we are having the bills receivable in our hands. Okay, at the time of receipt of money from the debtor, what is the entry for us? Cash account debited to bills receivable account. Why, sir? Already we have cancelled which one? Here once we have debited and once we have credit. So cancelled. No debtor in our books of accounts. Then after, we're having the two options. Either we need to reduce the sales, or either we need to reduce the bills receivable. Which one we are going to reduce? Bills receivable. We should not change we should not do change of sales. We should only reduce the option called as what ma? Bills receivable. So what is comes in? Cash. What is goes out? Bills receivable. What is the entry? Cash account debited to bills. Okay. Now which side we need to record in the debtor account? Debit side or credit side? Come on, first. Debit side or credit side? The debtor account. We should not record anything in the debtor account. Why ma? Because what is the entry? Cash account debited to bills receivable account. So we should not record. Okay. This is a honor situation or dishonor situation. The case of dishonor. Dishonor means what we need to do. What is the meaning of dishonor? Payment happened or not happened? That means validity of the bill completed. Not completed. Completed. Validity was completed, but the payment made or not made? Not paid. That means we need to do cancel. We need to do the cancel. Cancellation of bill means this one is called as creation of bill. What is the meaning of this one? Creation or cancellation? Creation. We need to cancel the bill. What we need to do? For creation, opposite only na. Cancel means what ma? Debtor account debited to. Oh, sorry guys, sorry. This is not a creation. So this is a creation. This is a creation. Okay na. So this is a creation of bill. Now we need to cancel the bill. What we need to do ma? We need to reverse this entry. We need to reverse the creation entry. What is the entry? Debtor account debited to bills receivable. On which side we need to record now? Debit side. What we need to record? To bills receivable account. Honor or dishonor? Dishonor. So this is the overall information about which account? Debtor account. If you see, debtor is an asset, debit balance. Increases means which side? Debit side. Decreases means which side? Credit side. So because of sales, increases. Because of sales returns, decreases. Collection from debtors, decreases. Discount allowed. Bad debts, decreases. Next, bills receivable accepted, decreases. Next, bills receivable dishonor, increases. Okay now, these are all the things will be appeared in the which account? Debtor account. Okay now, please take a note of it. In the sums we'll get either balancing figure. They will give opening balance, closing balance. Anything we may get the balancing figure. Okay na guys? Okay na? In the single entry you can understand the concept, no problem. And learn the concept. Don't do mug-up. While coming to the next class, you need to prepare the creditor account. Okay na? What is the homework? This is the debtor concept. You need to think what? Creditor concept. The creditor, what are the transactions will be there? Credit purchases, purchase returns, amount paid to creditor, discount received. There is no bad debts. Okay now, because we are the good persons. We are always good persons. We are always going to repay or not going to repay. We will always repay. Okay na. So there will not be any concept called as bad debts. Bills payable. There is a concept called as what ma? Bills payable. So you need to write the transactions. First you need to prepare the example. Then after you need to write the transactions, journal entries. And then you need to prepare which account? Creditor account while coming to the next class. Okay na. So and I will ask each and everyone, how did you prepare that particular account also? Okay na. You need to say logical manner. Okay na. Just increases, decreases, not like that. The creditor account, which balance? Creditor is asset or liability? Yeah? Liability. Which balance it is? Opening balance will be on the what we need to write? By balance brought down to balance carried on. Okay na. So because of purchases, credit purchase, creditor value increases. Because of purchase returns decreases. Because of repayment decreases. Because of discount received decreases. Sales returns is also called as return inward or return outward. Sales returns means return inward. Sales returns means return inward. Purchase returns means return outward. Okay na? No need of this entries. What is the honor entry ma? Honor entry. Cash account debited to bills receivable account. What is the dishonor entry? Cancellation. That's all. Debtor account debited to bills receivable account. Okay now, what is tomorrow's homework? Creditors. I will ask each and everyone. These are all basics. What is the bad debts entry? Bad debts account debited to debtor account. Okay. In tomorrow's class, I will discuss the bad debts recover and creditor. Okay now. Sorry, I am not going to discuss anything related to creditor. You need to do on yourself. Okay now. We are going to discuss some other examples in the next class. Okay now. In this class, we have completed the terminologies. Terminologies including transaction, event, accounting definition, next double entry system, next cash basis, accrual basis. We can discuss some other class in clear manner. How to calculate the profit in the cash basis, how to calculate the profit in the accrual basis. What is the meaning of cash basis? Related to cash, irrespective of year. What is the meaning of accrual basis? Respective of year, paid or not paid, received or not received. Hybrid means combination of both. Okay now, for both means what ma? We are following the cash and accrual simultaneously. So this is how we have completed the discussion. So further discussion will be continued in the next class. Thank you. Have a nice day. Bye bye. Hello. Hello. Okay, in the previous class, we have discussed some of the journal entries. So, what are the journal entries we have discussed? Only data, sir. Okay. So, we have completely discussed about the debtor situation. So, debtor is an asset or liability. Debtor is an asset. Only in the case of credit sales, okay, na, debtor value increases. In remaining all the situations, debtor value will be decreases. So, what are all the situations? Sales returns, debtor value decreases. Next, amount received from debtors. Again, debtor value will be decreases. And the discount allowed also, debtor value will be decreases. There is another concept called as bad debts. So, because of bad debts also, debtor value will be decreases. Okay, na. So, there is another concept called as what ma? Bills accepted. Okay, na. The debtor has accepted the bills. We have drawn the bill. So, bills receivable accepted by the debtor. In that situation also, debtor value will be decreases. So, in the case of bill dishonor, debtor value will be increases. Okay, na. In remaining all the situations, debtor value will be decreases. So, now we are going to discuss from creditor point of view. So, I think I have given the homework. Have you done? Is really? Okay. Shall I skip that concept? Creditor concept. Can I go forward? Okay, na? Can I skip that concept? Huh? Okay, na? Okay. Now write the what is the transaction number? Sixth one, na? One, na? Sixth one, complete discussion about the creditor. So I am taking an example. Imagine this is a business. And you know this person, right? Who is this person? Pushpa. Pushpa is our creditor. Pushpa is our creditor. So creditor means we are going to purchase or we are going to sell, amma. Purchase. So business. He is our creditor. So we are purchasing so goods purchased on credit of rupees 10 lakhs. What is the value of goods we have purchased? 10 lakhs. So in this situation, the creditor value increases or decreases? Increases. So why it is increases? Now only liability was created. Liability we are going to repay. Liability was created. So in this situation, creditor value will be increases. After that, what we will do, ma? We are going to give the Purchase returns or sales returns? Purchase returns is also called as carriage. Return outward. Purchase returns is also called as return outward. Return outward. Okay, now in this situation of rupees, let us take it as 2 lakhs. So in this situation also, creditor value will be increases or decreases? Decreases. So now how much amount we need to repay? Only 8 lakhs. At the initial says how much amount we need to repay to the creditor? 10 lakhs. So next, what will be happen? We are going to repay amount paid to creditor. Cash paid to creditor of rupees 7 lakh 50,000. In this situation, creditor value increases or decreases? Decreases. What is the next concept? Discount allowed or discount received? So we are going to receive the discount. So in this situation also, so we are going to receive the discount. So in the discount received, of rupees how much amount? What is the balance amount? 50,000. So in this situation, again the creditor value will be decreases. So this is the overall concept. So we are going to see one by one. Are you getting the point? Same like debtor, we are discussing the creditor. Okay, what is the first one? Credit purchases of goods of rupees 10 lakhs. What are the two outcomes? The two outcomes are purchase and creditor. Purchase and creditor. So what is the meaning of purchase? Expenses or income? So expenses will have which balance? Debit balance. So always expenses are increases. As of now, expenses are increases. So what we need to do? Debit. We need to do the debit. Next one, creditor. Liability. Which balance? Credit balance. So liability created or liability repaying? Created. So in this situation, increases or decreases? Increases. What we need to do? Credit. So what is the journal entry? Purchase account debited to creditor account. Purchase account debited to creditor account. So what are the columns? Date, particulars, LF, debit amount and credit amount. So purchases account debited to creditor account. So what is the amount? 10 lakhs and 10 lakhs. So what is the narration we need to write? Being goods purchased on credit. Okay, now I think did you write? Yes, sir, already. So next one, what is the next transaction? Purchase returns. Goods returned to creditor of rupees how much summa? 2 lakhs. What are the two outcomes? So purchase returns and creditor. So here the purchases we have considered it as what ma? Expenses. Then purchase returns we are considering it as income, opposite. Now, income which balance amma? Credit balance. So here always income is increases. So what we need to do? Credit. Next, then after creditor means asset or liability amma? Liability. Liability will have which balance? Credit balance. So here previously we are having how much amount of liability? 10 lakhs. Now liability will be reduces or liability will be increases. Because of this transaction liability will be reduces. So decreases. What we need to do? We need to do debit. So what is the entry we need to write? Creditor account debited to purchase returns account. Okay na? So what is the format? Date, particulars, LF, debit amount and credit amount. So what is the entry? Creditor account debited to purchase returns account. What is the value? 2 lakhs and 2 lakhs. What is the narration we need to write? Being goods returned to creditor. Okay na? So are you following? So complete. We have how many completed ma? We have 2 completed. What is the next transaction? So cash paid to creditor of rupees how much more? 7,50,000. So what are the two outcomes? Cash and creditor. Cash and creditor. Okay na guys. So what is the entry here? So here cash is equal to asset. So cash comes in the goes out amma. Goes out. Okay na, we are repaying we are receiving we are repaying. So here the asset is having which balance? Debit balance. So cash goes out, so that means decreases. So what we need to do? Debit or creditor? Credit. So creditor liability. Which balance? Credit balance. Sir, we are repaying the liability. We are creating the liability. Repaying. Repaying means increases or decreases, sir? So decreases. What we need to do? Debit. So what is the journal entry? Creditor account debited to cash account. So as of now we have taken a cash. Normally what we need to write? Bank account. More than 10,000 means we need to write the bank. Okay. So what is the entry? Creditor account debited to cash account. How much? 7,50,000 or 7,50,000. What is the narration we need to write? Being cash paid to creditor. Okay guys, up to here. Next one. Discount received from creditor. Discount received of rupees how much? Of rupees 50,000. Sir, here discount receiving means we are receiving the cash. No, we are not receiving the cash, but the credit we are not going to repay to creditor. That means our in our books of accounts the creditor value should be 0 na 50,000. 0. We should make it as 0. What are the two outcomes here? Creditor and discount received. Cash and discount received we should not use. So creditor, the discount received. So discount received is a cash discount or trade discount? Cash discount. Discount received is a cash discount. We are going to record in the books of accounts. Why we need to record? Because in order to identify the correct profit or loss, we need to record the discount received and discount allowed. We should not record the trade discount. Why? Before the transaction recording into the business itself, we know that is a discount. So for that reason, we are directly reducing the amount of discount and directly we are recording in the books of account. The trade discount will be appeared in the invoice. That will be appeared in the invoice. Even though it is appeared in the invoice, we should not show na. We should show na. We should not. It is not required to show. Okay na. So creditor means liability. We have which balance amma? Credit balance. Again, the creditor value increasing or decreasing? Decreases. So what we need to do? Decreases means we need to do debit. Yes or no ma? Okay na. Only in the case of purchases, credit purchase, the creditor value increases. Remaining all the cases, the creditor value will be decreases. So discount received means nothing but gain. We can call it as what ma? Come gain or come. Which balance? Credit balance. In our class, one person will be there. If it is debit means he will say credit. If it is credit means he will say debit. Instead of debtor, he will use creditor. Instead of creditor, he will use debtor. Even though he tried to manage to get 253 in CMA foundation. Okay. Credit balance increases or decreases? Increases. So what we need to do? Credit. So what is the journal entry? Creditor account debited to discount received account. Now only I have told you na that person. In Telugu, one proverb will be there. After listening Ramayanam, they will ask one question. Who is Sita? So what is the entry? Creditor account debited to discount received account. And even though that is a wrong thing, but he will say with a confidence that is a great thing. So what is the amount? 50,000 and 50,000. So what is the narration? Being discount received or allowed? Received. Okay. Being discount received from debtor, from creditor. Okay. These are the transactions we can see from whose point of view? Creditor. Okay. Now we can write the component here. Yes. We can write the component for B, C and D. What is the component we can write? Creditor account debited to purchase returns to cash account and to discount received account. We can write like that. Okay na? So next we are going to discuss what ma? Creditor account. We have the previous class we have discussed about the debtor account. Now we are going to learn about the creditor account. Okay na? So now easily we can write. So creditor account. Okay, they are asking what is that person name? What is your name? Okay. Huh? Okay. These are the live sections. I think so. The parents will see. Okay. After this is a 7th class or 8th class. I think so. After 2 classes, we are going to reveal that person name. Okay na? We wait. Okay na? Please please subscribe the Shikara class. Shikara tutorials for more updates regarding to cmainter. I will show you one day that person. First we need to write the opening balances and closing balances. So creditor means liability asset. Liability asset. Liability. Okay. Creditor is a liability. We are going to have which balance? Credit balance. Sir, credit balance means opening balance will be on which side? Credit side. So we need to write two balance brought down. By balance brought down. Okay, now we are not going to write any amounts. Just we are preparing the account. Closing balance. To balance carried on. Closing means carried on. Beginning means brought down. You already seen in the initial classes itself. And next, then after. What is the first entry, Amma? Purchase account debited to creditor account. Yes or no? So we are creating the purchase. We are creating the creditor. Creditor. So in that particular journal entry, if you observe, what is the journal entry, Amma? Purchases account debited to creditor account. So here the creditor is debited or credited? Credited. So that for that reason we are preparing the creditor account. We are preparing the purchase account. We are preparing the creditor account. So in the creditor account, we need to record on which side? Credit side, because it is credited in this journal entry. But we are recording in the credit side with the name of opposite asset. What is the opposite asset? Purchases. So what we are going to write, ma? While recording anything in the debit side, we are going to start with the 2. While recording anything on a credit side, we are going to put the by. So what we need to write now? By purchases. Purchases or purchase returns? Purchases account. Next, what is the entry? Creditor account debited to purchase returns account. Okay, na. So creditor account, we are preparing a purchase returns account. Creditor account. So creditor debited or credited? Debited. So in the creditor account, which side we need to record? Debit side with the name of purchase returns. So what is the entry? So sorry, what is the posting here? To purchase returns. To purchase returns account. Next one, we are paying the cash. What is the entry? Creditor account debited to cash account. So again, to cash or by cash, amma? To cash or bank account. Next one, discount allowed. To discount allowed or by discount allowed? To discount received. Next, we need to discuss about the bills payable concept. Just a second. So bad debts will be there or will not be there? Because credit, we are the good persons. Always we will repay to the creditor. For that reason, bad debts will be there or will not be there? Will not be there. In the debtor situation, bad debts will be there or will not be there? Will be there. Why? Debtor is a bad person. Okay. Safe side. Oh yeah, that person only saying yes. Imagine now, we are going to discuss what ma? Bills payable. So again in the bills of exchange chapter, I will repeat. Okay, no problem. But we are discussing the total account. For that concept, I am discussing this thing also. Okay, we are having the creditor. Here we are having what ma? Business. Okay. Who is our creditor? Our creditor. Puspa. This thing you will say right only. So Pushpa, if you are not going to pay, what he will do? He will come with that. He will come with that axe, and he will cut off our heads. Okay. Business is there. First, what we have done, ma? We have done the credit purchases. But Pushpa is not having trust on us. Having the trust or not having the trust? Not having the trust. Okay. For that reason, what he is saying, I am not having any trust on you. So that what he will do, ma? He will draw the bill. He will draw the bill means creditor will draw, na? We are drawing. Creditor will draw. Now, what we are doing? We are going to do the acceptance. For that reason, from our point of view, that bill is called as bills payable. So, bills payable. So, don't think from point of view of creditor. Always we need to think from point of view of business, because owner is a different person. Business, from the business entity concept, we need to discuss always from the viewpoint of view of business. In the previous example also we have discussed from the viewpoint of view of business. So don't think from point of view of creditor. Here at the time of credit purchases, what is the entry we have recorded? At the time of credit purchase, what is the entry? Purchases account debited to creditor account. Now bill we have accepted or we have not accepted, amma? Bill accepted. Bills payable come into the picture. Yes or no? Now this entry we need to keep it in our books. We need to change this particular entry. We need to change. Okay na? In order to change this particular entry, what is the entry, amma? Purchase account debited to creditor account. What we need to do, sir? Purchases we can reduce, we should not reduce. Purchases we should not change. We should not change the purchases. Okay na? So then which thing we can do the reduce? Creditor. So creditor balance will be decreases. In the place of creditor, who will come into the picture? Bills payable. So creditor value will be decreases and bills payable value will be increases. Bills payable is a asset or liability? Liability. Creditor is also a liability. Okay na? So both are liabilities, but creditor value decreasing. So that what we need to do? Debit. Bills payable value increasing. So that what we need to do? Credit. What is the entry? Creditor account debited to bills payable account. This creditor name will be changes as drawer. Will be changes as what, ma? Drawer. Okay na? At that point of time we can discuss in a clear manner, no problem. So what is the entry? What is the situation, ma? Bills accepted of rupees how much? 10 lakhs. Bills accepted of rupees how much, amma? 10 lakhs. What are the two outcomes here? Bills payable. We are accepting na, so that bills receivable payable. Bills payable. And what is the second outcome, sir? Creditor. So bills payable, asset or liability, amma? Bills payable is a liability. Creditor is also liability. So we'll have which balance? Credit balance. So here bills payable comes in na, goes out. Comes in, we are receiving, we are accepting, and so we are accepting the bills means our liability increases or decreases. Our liability is increases. So what we need to do? We need to do credit. Next one. Liability is also which balance, amma? Credit balance. Here we are going to decrease or increase? Decrease. Why we are decreasing our liability? Because instead of creditor, who is replacing the creditor? Bills payable. Okay na? So what we need to do? Debit. So what is the journal entry we need to record? Creditor account debited to bills payable account. So what is the amount? 10 lakhs and 10 lakhs. So no need of amount anything, just I am writing. So now we are preparing which account? Debtor account or creditor account? Creditor account. So creditor is debited or credited? Debited. In the creditor account, which side we need to record? Debit side. What we need to record? Two bills payable. Super. Two bills payable account. Next one. On the due date, we need to repay na? Creditor will repay to us. We need to repay. If you repay, what is happening, ma? So if you observe this both the entries, what is the first entry, amma? Purchase account debited to creditor account is the first journal entry. What is the second journal entry we have recorded? Creditor account debited to bills payable account. That means already one time the creditor we have debited or credited? Credited. Another time again the creditor value is debited. That means creditor value is there or not there? The creditor account zero balance will be there. How, sir? Simple. So imagine this is which account, amma? Creditor account. Already in the debit side, how much amount we have recorded? Debit 10 lakhs. And again the credit side, how much amount we have recorded? 10 lakhs. What is the account balance? Zero. This is a debit balance, no. This is a credit balance, no. Both the sides are equal means this is called as nil balance. That means in this particular account is complete closed, is still open, closed in our books of accounts. So now what are the accounts we are going to have? We are going to have only purchase account. And what is another account we are going to have? Bills payable account. So now we are paying means cash balance increases or decreases? Decreases. Cash is an asset or liability? Asset. Cash asset, debit balance decreases credit. In the debit side, what we need to do? If we are paying means which value is going to reduce? Bills payable value will be going to reduce. We should not write again what, ma? Creditor. We should not write again what? Creditor. Already the creditor value is there in our books of accounts or not there? There is no creditor value in our books of accounts. Already 10 lakhs here and 10 lakhs here. So for that reason we already closed with the creditor account. What are the still accounts we are having? Only two accounts, purchase account and bills payable account. Okay, now we should not disturb the purchase account because it is an expenditure, we should not disturb. So which account we need to reduce now? Bills payable. So what is the entry, amma? Bills payable account debited to cash account. Okay, now is this particular entry is affecting creditor account or not affecting creditor? Not affecting the creditor account. Are you getting the point? We are repaying means cash goes out. Cash goes out means debit or creditor? Credit. Which value will be decreases? Bills payable value will be decreases. So what is the entry we will get, ma? The case of honor or dishonor, amma? Honor. In the case of honor, what is the entry? Bills payable account debited to cash or a bank account. Okay, na? So whether this entry is affecting or not affecting? Not affecting the creditor account. Okay, na? Is there any doubts? Okay, na, Maniku? Next, dishonor. What is the meaning of dishonor? We have repaid, we have repaid on the due date, we have not repaid. We have not repaid. Even though we have not repaid, the bill value will be existing or will not be existing. So bill should be cancelled. Bill should be cancelled. At the time of acceptance of bill, what is the entry we have recorded? Creditor account debited to bills payable. This is called as acceptance entry. Yes or no, ma? Now we are going to cancel the bill. We are going to still present the bill. Cancel the bill because due date completed or not completed? Completed. For cancellation, what we need to do? We have recorded this entry. Just we are striking off. We should do like that. No, we should not do like that. Then what we need to do, ma? We need to pass the reverse entry. We need to pass what, ma? Reverse entry. Strike off means here reverse. Debit reverse means credit. Credit reverse means debit. What is the entry we are going to get? Bills payable account debited to which account, amma? Creditor account. Here in this situation, again the creditor value increases. Again the creditor value increases. Okay, na? So what is the posting the creditor account? Which side we need to do the post? So creditor is debited or credited? Credited. In the creditor account, which side we need to record? Credit side. So with the account name of, what is the account name? By bills payable. This is a honor or dishonor, amma? Dishonor. So we should write the dishonor. This is called as acceptance. This is called as acceptance and this is called as dishonor. So in this way we are going to complete the which account? Creditor account. Okay, now this is the overall concept about the creditor. Now we know the another method also. What is the another method? Credit balance increases means which side? Credit side. Decreases means which side? debit side. So we need to write firstly what ma DR and CR. So if you observe this scenario, because of purchases, which purchases amma? Credit purchases, the creditor value increases. For that reason, we are recording by purchases. Because of bills payable dishonor, again the creditor value will be increases. Because of that reason, we are recording on the which side? Credit side. And all the debit items we have recorded. What is the reason ma? Creditor value is decreases. So creditor value increases means credit side. Creditor value decreases means. So this is the overall concept. Up to here, we have clearly discussed about the what are the things. First, capital we have discussed. Okay, na? We have discussed the capital account. We have not discussed the capital account. Yeah. Only statement we have discussed. Okay, okay. Okay, na? Completely we have discussed about the debtor and creditor. That means we know the credit purchases, we know the credit sales, cash sales. Okay, na? Sales we will record in the case of goods. Asset name will be recorded in the case of asset purchase or asset sales. Okay. Next we are completely discuss about the capital. Next we are going to completely discuss about what ma capital. Now you know already what is the statement of capital. So once again I am trying to write. So you don't write anything. Just I will write. What is the complete discussion about capital? Just participate. That's all. This is our business. Pawan Kalyan is the owner. Atom right. These things you know very well, but you don't know debit and credit. Huh? Sure. Even though if you don't know, but he is a hero. That's all. Just as an example. Okay, don't hurt. It is not hurting anyone. Okay, even though I am not a fan of Pawan Kalyan, or you can assume that one. Okay. So here the matter is not about the Pawan Kalyan. Here the matter is about the capital. Okay, na? So owner invested the capital. What will the owner do, ma? He will make the investment. So invested to the business of rupees how much? 1 crore. How much amount we have invested? 1 crore. This is called as which one? Opening capital. I am going to call it as what? Opening capital. So this opening capital we need to repay to the owner. So first of all, he is a owner. This is a business. We need to think only from the viewpoint of view of business. Only our target. We need to think each and every point. If you go to the company accounts, if you whatever you go in the company accounts, you will think from the point of view of company. In the partnership, you will think from the viewpoint of view of partnership. Okay, now now we are discussing about the sole proprietor. Okay, now we are going to discuss from the viewpoint of view of business, not from the sole proprietor, from the viewpoint of view of business. So in this situation, we need to repay na, owner need to repay na. We need to repay to the owner. That means liability created, liability repaying, created. In future we will repay na, now only we are going to repay na. Future at the time of winding up we will repay. Okay na? Okay. On this amount. But we are utilizing the amount, we are not utilizing the amount. We are utilizing the amount. For utilization of this amount, owner will we need to pay certain consideration to the owner. So what is the name of that consideration, sir? Interest on capital. Interest on capital. So this is a capital. On this capital, we are utilizing. For that reason, we need to pay certain consideration to the owner. Okay, now we will repay the capital only at the end of the completion of business, only at the winding up. Until then, he need to wait. Okay, now for example, he is not giving anything to us. He is just putting 1 crore in the fixed deposit. He will get the interest, and he will not going to get the interest. He will get the interest. Pawan Kalyan will get the interest and will not get amma. Will. But instead of that reason, not putting into the fixed account, fixed deposit, he is giving to us for the sake of doing the business. For that reason, we need to pay the consideration. No need to pay the consideration. We need to pay the consideration. What is the meaning of that one? What is the name of that consideration? Interest on capital. So we need to pay interest on capital. Okay, Namma, we need to pay interest on capital. Okay, next then after. Are you getting the point? Interest on capital means expenses are income. It is an expenses because owner, instead of putting here, owner, if in say that 1 crore is putting into the bank account means he will get the interest on that fixed deposit. But instead of now he is what he is doing instead of putting into the bank account, he is giving to us. Then we need to pay the interest and no need to pay the interest. We need to pay the interest. Next then after, owner will taken away the, what is the owner will do So owner will make the drawings. What is the meaning of drawings? From the business, owner can take goods or cash or any other asset. Any other asset for personal use or business use. For personal use. That situation, the concept is called as drawings. Here drawings, who need to repay? Owner need to repay to the business. That means we are in a receivable capacity. We need to receive from the owner. We need to receive from the owner. So imagine he has taken away the 10 lakh rupees. What is the amount of drawings? 10 lakhs. How much amount we need to repay initially? Initially, what is the investment? 1 crore. So 1 crore we need to repay. In that 1 crore, how much amount the owner taken away? 10 lakhs. So we can reduce or we should not reduce? We can reduce. Ultimately, how much amount we need to repay? 90 lakhs. If we repay means it is sufficient. Yes or no ma? Instead of we are paying 1 crore and again we are going to take 10 lakhs. So what is the best thing? We are going to set off. We are going to set off that 10 lakhs and we need to pay ultimately how much? 90 lakhs to the owner. For that reason, drawings we need to reduce from the capital. We need to reduce from the capital. Okay, next. Then, without giving this 10 lakhs to the owner, we can put the 10 lakhs in the fixed deposit and we can get the interest. We cannot get the interest. We can get the interest. But in this situation, we are not going to get any interest. Then who need to pay the interest to us? Owner need to pay the interest on drawings. So for us, the interest on drawings is called as income. For us, the interest on drawings is called as income. So because of that, again the capital will be reduces, the capital will be increases, reduces. So because of additional capital, okay, now because of opening capital and because of interest on capital, the capital value will be increases. Then because of drawings and interest on drawings, the capital value will be decreases. And again for the net loss also, capital value will be decreases. So what are the things the capital will be increases ma? Opening capital, capital will be increases. Interest on capital, capital will be increases. Additional capital, capital will be increases. Net profit, capital will be increases. Now, because of which reasons the capital will be decreases? Drawings, interest on drawings and net loss. Okay na? So easily we can prepare the account. Okay, how we can prepare the account? Then after we can write the entries. Okay, now directly we are going to prepare the account. Okay, which account we are going to prepare, ma? Capital account. Okay, now capital is an liability asset, amma. Liability will have which balance? Credit balance. So for the credit balance, so credit balance means increases means which side? Credit side. Decreases means which side? Debit side. So because it is a credit balance or debit balance, credit balance. If the credit balance increases, we need to record on which side? Credit side. If the credit balance decreases, we need to record on which side? Debit side. First we need to write the opening capital and closing capital. Nothing but opening balance and closing balance. So credit balance, opening balance will be on the credit side. What we need to write? By balance brought down. Okay, now I am not going to write anything. Next, closing balance will be on debit side. To balance brought down or carried down? Carried down. How much? Okay, we are not going to write. And next, opening capital was completed, closing capital was completed. And next, what we need to do? Additional capital. Because of additional capital, capital value increases or decreases? Increases. Capital value increases means which side we need to put? Credit side. So we can write what, ma? To cash or sorry, by cash or bank account. Because of this one increases, so that we are recording on credit side. And next, interest on capital. Increases or decreases? So can I write credit side? Yes. So by interest on capital. Next one, by net profit. Okay, now he is come to the sink. To net profit or by net profit, amma? By net profit. Next one. After that, because of which reasons the capital will be decreases? Drawings. Two drawings. Account. Increases or decreases? Decreases. Next, two. Interest on drawings. Next one, two net loss. This is where we need to prepare what, ma? Capital account. If it is increases means which side? Credit side. If it is decreases means which side? Debit side. So because of which reasons the capital balance will be increases? Opening capital, additional capital, interest on capital, net profit. Because of which reasons the capital will be decreases? Drawings, interest on drawings, net loss. So what is the entry for additional capital? What is the entry for the additional capital? Sir, cash and bank is debited or credited? Credited in the capital account. That means capital should be in the journal entry. Which side? Credit side. Which side, amma? Credit side. In the capital account, cash and bank debited or credited? Credited. So that the capital in the journal entry will be on which side? Credits. Credit side. Which side, amma? Credit side. What is the entry? Cash or bank account debited to capital account. Cash or bank account debited to capital account. What is the interest on capital account entry? Interest on capital account debited to capital account. What is the entry for the net profit? Net profit account debited to capital account. Net profit transferred to capital. And next, what is the drawings entry? Capital account debited to drawings account. What is the interest on drawings account? Capital account debited to interest on drawings account. What is the net loss transferred to capital? Net loss account. So this is so we need to prepare the capital. So in the single entry chapter, this is the most important point. So based on this, totally we are going to solve 4 to 5 questions. How many questions we will solve? Or this is the one of the model in the single entry chapter. Totally 2 types of problems they will give. So this is the one of the type. Okay, now on this totally how many questions we need to solve? 4 questions. If you know this one, easily we can complete the single entry. If you know this all the accounts, what are all the accounts? Debtor account, creditor account, and capital account. Okay, now we are not going to learn the basics. We are learning. I am preparing for you the future topics. Okay, now if you know these accounts, easily you can prepare the NPO, non-profit organization. Easily you can solve easily the non-profit organizations. Okay, now so please listen this. So keep in your mind, we are not only discussing the basics, we are discussing the whatever the matter requirement for the future chapters. Okay, now we are going to learn the subsidiary books for the in order to in order to solve the rectification of errors. If you know the subsidiary books, then only we can solve the rectification of errors. Otherwise, we cannot solve the rectification of errors. Are you getting the point? So please take a note of it. This one is not needed. అయిపోయిందా రాసుకుంటావు కంప్లీటెడ్. What happened? Next, our target is to learn about the income account, expenses account, income account and expenses. Before that, I need to discuss about the outstanding expenses, prepaid expenses, and next one income receivable, income received in advance. We can discuss those topics. Then after we can discuss the income account and expenses account. Is there still we are having 40 minutes left? Up to 4 only now. Completed? Vaibhav Survamsiya. Udbhav, yes, name is Udbhav. Okay, he is such a nice person. Because of him, our class will be very much entertainment. Udbhav, where are you from? SR Nagara? Hyderabad. Hyderabad. One girl is asking, where is the address? What is the address of Udbhav? Do you want that girl name? If you want, I will. Okay. What is our next target? We need to learn about outstanding salaries. So next heading is called as what ma? Outstanding salaries. What is the meaning of outstanding salary? Sorry, outstanding expenses. Outstanding expenses means standing outside the class. Outstanding expenses means payable. Expenses related to current year, but we have paid or we have not paid. We have not paid in the current year. So it is a liability, it is an asset. Liability. So what is the meaning of outstanding expenses? You can write along with me. Okay, now while writing, you can participate, no problem. Why Udbhav will sit in one chair, his book will be another chair. Okay, somebody is asking, can you show the Udbo face? Okay, what is the outstanding expenses? Expenses related to current year. What is the meaning of current year? Okay, years are two types, financial year and calendar year. Okay, I am not asking those topics. What is the meaning of current year? Current year means present year. Ongoing year is called as current year. Okay. Expenses related to current year, but we have not paid during the current year. But we have not paid during the current year. So that means these are asset or liability, amma. It is a liability. Liability created or liability repaid. Liability just now the liability created or we are going to repay na. Liability created. That means liability increases or decreases? Decreases. Okay na? I will take an example and I will say the entry for the outstanding expenses. So till now did you understand the concept? What is the meaning of outstanding expenses? Expenses related to current year, but we have not paid during the current year. Okay now. Okay, what is the meaning of this one, sir? Okay, Udbhav, who is your favorite cricketer? Huh? Yeah, if you say, I will put. Okay now. What is the meaning of this one? Indiana. BCCI. BCCI. Okay now. What is the meaning of BCCI? Code of. Okay. Board of Control for Cricket in India. Board of Control for Cricket in India. Okay. Why you are taking this one, sir? There is a reason. Say, who is your favorite cricketer in India? Who is your favorite cricketer, ma'am? I think you don't know the names of cricketers, huh? Oh. Okay. Somebody is saying Kohli. I will take the Kohli. Aggressive man. Okay. For Kohli, who will pay the salaries? BCCI. Okay, na? I will shift this one. Why are you laughing, man? Oh, Udbhav is don't know about the cricketers. I think he will read the books in free time. Yes or no, man? What are your hobbies? Scrolling reels, sending reels. Free Fire. Okay, okay. So now we need to think from views point of view, BCCI point of view. Okay, na? He is an employee. Yes or no, ma? He is an employee in the BCCI. Now we need to pay the salaries. So we need to pay the salaries. Imagine per annum. Per annum, how much we can pay to the Kohli per month. Okay, I'm not disappointing anyone. I am taking 1 crore per month, not per annum. Per month, how much? 1 crore. How many months will be there? 12 months. What is the total amount? 22. Oh, 1 into 12, 22. Okay, thank you, Urbo. You part of our class. What is the per annum total? 12 crores. 12 crores is the salary amount we need to pay to the Kohli. But in this 12 crores means how many zeros? Six. Okay. Why this thing? We can write 12 here. Okay, na? This is nice. In these 12 crores, I am dividing into how many parts, ma? Two parts. 8 CR. What is the balance amount? 4, 4 CR. That means 8 CR we have paid in the current year. 8 CR we have paid in the current. This is called as salary paid or payable. Paid. 8 crores we have paid. 4 crores we have not paid in the current year. What is this name? Salary payable. Or we can write it as what, ma? Outstanding salary. So salary payable or outstanding salary. Okay, na? What is the entry for salary paid? To cash. Okay. Salary or salaries account debited to cash or bank account. You know this thing. But what is our target? You need to learn about the outstanding salaries. So here, what is the amount of outstanding salaries, sir? 4 crores. Okay. What are the two outcomes? Cash. Outstanding salary means we have paid or we have not paid. We are not paid. Okay now. But expenditure related to current year, not related to current year. Related to current year, but we have not paid. So even though if you are not paid, we need to show the expenses. So for that reason, salary is one of the outcome. We have paid or we have not paid? We have not paid. We have not paid to whom? Kohli. We have not paid to him, Kohli. Sir, if you are not going to pay amount to the Kohli means we are not able to pay the another players also. Did you get the point? If you take the Shikhara as an example, okay, now Shikhara management is not paid salary to me means is not paying salary to Bhaskar sir also. Why, sir? Without paying to me, paying to Bhaskar sir means I will accept, I will reject. Reject. Okay, you are paying salaries to Bhaskar sir, and then the management is not paying salaries to me means what I will ask, ma? So don't pay salary to that Bhaskar sir also. Why? Because if you are not having sufficient fund means what we need to do? Proportionate basis we need to do. Okay, na? For him 12 lakhs or 15 lakhs means proportionately, and we are also need to work now. We are also need to eat, don't eat. So for that reason, paying salaries, not paying salary to one employee means not paying salaries to every employees. Okay, na? For that group of people, instead of group of people, we are using one word called as what, ma? Outstanding salaries. Okay, na? So outstanding salary is called as liability. Normally it is a personal account, a real account, a nominal account. Personal account. Representative personal account. Normally here what we need to write? Employees. What we need to write, ma? Here employees. So without writing the employees, what we are doing, ma? What is the new name we are adding? Outstanding salary. So here instead of employees, we are using the outstanding salaries account. So representative personal account. So outstanding salary is represented by whom? Represented by the employees. Okay, now instead of owner, we are using the capital. Instead of owner, we are using the drawings. Those capital and drawings is also called as representative personal accounts. Okay, but we are not following the traditional approach. We are following only the modern approach. So salary means expenses. We are going to have which balance? Debit balance. Okay, increases or decreases? Increases. Expenses always increases, what we need to do? Debit. Did you get the point? Outstanding salary liability will have which balance? Credit balance. Credit balance. So increases or decreases? Increases. Now only liability was created. Now only the liability was created. So increases. What we need to do? Credit. So what is the entry here? Salary account debited to outstanding salary account. Okay now normally replace here the salaries with expenses. Okay now instead of salary put the word called as what ma? Expenses. What is the entry? Expenses account debited to outstanding expenses account. What is the entry for expenses paid? Expenses account debited to cash or bank account. What is the entry for outstanding expenses? Expenses account debited to outstanding expenses account. Now, which approach is the best one? Modern approach is the best one, not traditional approach. Modern approach, because sorry, in the modern approach, easily we can identify whether it is an asset, liability, income, expenses. Expenses means debit balance. Asset means debit balance. And next, liabilities are credit balance, incomes are credit balance. Easily we can identify when, in which situation it is increases, in which situation it is decreases. So for that reason, modern approach is the simplest approach. Easily we can write the general entries. So what is the entry for outstanding expenses? Expenses account debited to expenses account debited to outstanding expenses account. This entry we need to pass in the current year, next year, current year. In the next year, okay na? 1 second. In the next year, we are paying the outstanding expenses. The next year, we are paying what ma? Outstanding expenses. At that point of time, what is the entry? Outstanding expenses will be decreases. Outstanding expenses will be decreases. Outstanding expenses, liability, credit balance decreases. We need to do debit. Cash comes in, goes out, goes out. So what is the entry? Outstanding expenses account debited to cash account. That entry we need to pass in which year? Next year. Okay now what is the entry for the outstanding expenses? Expenses account debited to outstanding expenses account. Okay now in the previous class we have discussed one concept, cash basis and accrual basis. Okay, if you are following the cash basis means this entry you are going to record or you are not going to record. We are not going to record. This entry we need to record only in the case of accrual basis. So this is the ultimate objective. Okay, you can write. Completed this one. This one? No need. Oh. Leader. Okay, what is the next one? Prepaid expenses. What is the meaning of prepaid expenses? Prepaid expenses means next year expenses we have paid in the current year. Next year expenses we have paid in the current year. So how we can write ma here? Expenses relating to next current year. Expenses related to next year. We can write just next year. Expenses related to next year, comma, we have paid in the current year. Expenses related to next year, but we have paid in the current year. So what is the, whether it is called as asset, whether it is called as liability? It is called as asset. Instead of we are having the surplus funds, so for that reason we are going to pay. Okay, Nama. So generally there is a situation called as, so we don't know whether we are paying the current year or next year. So we always try to record what ma expenses account debited to cash, expenses account debited to cash. So like that at the end of the year, instead of paying 12 times, unfortunately we have paid 14 times. We don't know at the time of paying the prepaid expenses, but now we are discussing what ma prepaid expenses we have paid in the current year, even though it is not related to current year. Okay, that means it is belongs to next year or current year? Next year. Okay, so the same example I am taking. What is the total amount we need to pay? 12 crores. Or can I take another one? If you take the rent, rent paid in advance, we need to pay the rent in advance. Otherwise, owner will not going to accept. Owner will not going to give the house for the rent. So actual rent per annum is equal to 10 lakhs, 12 lakhs. Rent per annum is equal to how much? 12 lakhs. But in the current year, we have paid 14 lakhs. We have paid 14 lakh rupees. In this 14 lakh, I am dividing into the two parts. How we can divide ma? 8 lakh, 6 lakhs. Why 8 lakh, 6 lakh? 12 lakh, 2 lakh. Ante kada? 12 lakhs and 2 lakhs. What is the normal current year expenses? 12 lakhs. But 2 lakh is belongs to which year? Next year. So this is a current year. This is the next year. Okay, now what is the entry for 12 lakhs? Rent account debited to cash account. What is the entry for the 12 lakhs? Rent account debited to cash account. What is the entry for this 2 lakhs, sir? This 2 lakh also we have paid or we have not paid? We have paid. That means must and should we need to write to cash? Yes or no? To cash. In the debit side, what we need to write? Prepaid rent. What we need to write? Prepaid. If you write the rent instead of prepaid rent, rent means current year. Okay, now you are going to write here also rent. That one belongs to current year. So, but we should not include in the current year. We should include. We should not include in the current year rent. For that reason, we need to differentiate. We need to differentiate. So, what we need to write, ma? Prepaid rent or renter? Prepaid rent. If you write the rent, it belongs to current year. But it is belongs to current year or not belongs to current year? Not belongs to the current year. In order to differentiate rent and prepaid rent, in order to differentiate the current year rent and next year rent, what we need to write, ma? Rent and prepaid rent. Rent and prepaid. So why you have debited, sir? Prepaid rent is an asset. Prepaid rent is an asset. Which balance? Debit balance. So increases or decreases? Increases. Now only we have paid. It is an asset to us. In the next year, our asset will be increases or decreases? Decreases. In the current year, our asset will be increases. Okay, now prepaid expenses means it is an asset. In the next year, what is per month, ma? 1 lakh. Per month is how much? 1 lakh. In the next year, even though if you are not going to pay the 2 lakh, 2 months also, owner will accept or will not accept? Owner will accept, because how many months advance we have paid? 2 months advance we have paid. That means it is an asset, it is a liability. It is an asset. Okay, at the time of leaving the house, he will give or he will not going to give? He will give it back. So for that reason, it is an asset or liability? Asset. So we need to differentiate current year and next year rent. We know we should not differentiate. We need to differentiate. So for that reason, what is the entry we need to write? Prepaid rent account or rent account? Prepaid rent account debited to cash account. What is the entry for the current year rent? Rent account debited to cash account. Are you getting the point? So this is the actual discussion. Okay, now again in the final accounts I will repeat it, no problem. Okay, now what is the entry for the prepaid rent, amma? Prepaid expenses. What is the entry for the prepaid expenses? Prepaid expenses account debited to cash or bank account. In order to differentiate the current year expenses and next year expenses, we are putting the prepaid in before the expenses. Okay, na guys. So this is the overall conclusion. Okay, Nama. Is there any doubts? So in this class, we have completely discussed about the creditor account, and then we have discussed about the capital account. Capital, next outstanding salaries, prepaid outstanding expenses, prepaid expenses. In the next class, we will see the income receivable, income received in advance, and then we need to discuss which accounts? Income accounts and expenses account. So if both the accounts are completed, so what we can do, ma? So easily we can start with the capital and revenue chapter. Capital transactions, revenue transactions, and then subsidiary books, like that we can discuss. Okay, na guys. So easily we can do. Okay, I will show you on paper. Apa number 10 na? Okay, we can see the questions in the next class, no problem. Okay, is there any doubts to the today's discussion? Thank you, have a nice day. Thank you, Udbo. Okay, hi guys. A very good afternoon. In the previous class, we have started the discussion about outstanding expenses we have completed and prepaid expenses we have completed. So, and then we have discussed the capital account, we have discussed the debtor account, creditor account. So, one by one we are discussing. So, what is the meaning of outstanding expenses? The expenses related to current year, but we have paid or we have not paid, Amma. We have not paid during the current year. So, this is called as outstanding expenses. So, what are the two outcomes for the outstanding expenses? Expenses and outstanding expenses. So here the expenses is a nominal account because it is an expenses, and outstanding expenses is called as representative personal account because instead of all the employees we are creating what outstanding salaries. So salary expenses debit balance increases debit, outstanding salary liability credit balance increases credit. So what is the entry? Salary account debited to outstanding salaries. When come to the common expenses, when come to the common outstanding expenses entry, what is the common outstanding expenses entry? Expenses account debited to outstanding expenses account. So if you observe the scenario of accrual basis, what is the meaning of accrual basis, Amma? We need to consider the current year transactions. We should not consider the next year or previous year transactions. So outstanding expenses means related to current year, related to next year, related to current year. We need to consider. We need to consider. But as per cash basis, we should not consider because there is no involvement of cash. Next, then after we have discussed about prepaid expenses. What is the meaning of prepaid expenses? Expenses related to next year, but we have paid during the current year. It is called as prepaid expenses. So here, if you observe the cash basis, we will consider because it is related to cash transaction, but not related to current year. Even though it is not related to current year, we will consider in the cash basis. But as per accrual basis, we should not consider because it is not related to current year. So what are the two outcomes for the prepaid expenses, ma? Prepaid expenses and the cash. We need to bifurcate the expenses and prepaid expenses. If you rate the expenses, that particular expenditure belongs to current year. So instead of differentiate the current year expenses and the next year expenses, we need to put the word called as what, ma? Prepaid in front of the expenses. So what is the entry? Prepaid expenses account debited to cash or bank account because the cash balance will be decreases. So cash asset debit balance decreases credit. Then after prepaid expenses asset debit balance increases debit. So we have discussed all the things. Is there any doubts up to here? So we know the debtor account and we know the creditor account and we know the asset account and we know the capital account also. We already discussed all the things will be helpful for the upcoming chapters. So next, in today's class we are going to discuss about what is the concept, ma? Income receivable. So next put the heading called as income receivable. What is the meaning of income receivable? Can anyone in the class? So income receivable means income related to current year, but we have not received during the current year. So please write that one. Income related to current year, but we have not received during the current year. That means in which basis we will consider this one? In the accrual basis we will consider, but in the cash basis we should not consider, because why ma? As per accrual basis, even though we have not received but it is related to current year, we will consider. As per cash basis, there is no involvement of cash, for that reason we should not consider. So what is the meaning of this one, sir? Whether it is an asset or liability, it is an asset. It is an asset. I will say one of the example, no problem. Imagine, so we are having a fixed deposit in HDFC Bank. Where we are having the fixed deposit ma? Imagine we are the business and we have made the fixed deposit. We have made the fixed deposit of rupees 1 crore. How much amount we have made the fixed deposit ma? 1 crore. On this fixed deposit, we are going to receive the interest. Yes or no ma? We are going to receive interest. We are going to receive the interest on quarterly basis. On which basis ma? Quarterly. What is the meaning of quarterly? So we need to receive interest from the fixed deposit. Okay na? How we are going to receive a quarterly basis? Imagine how many months in a year? 12 months in a year. Quarter means 3 months. Quarter means how many months ma? 3 months. So that means how many quarters will be there? We are having 4 quarters in a particular year. So quarter 1, quarter 2, quarter 3 and quarter 4. So on that 1 crore, we are going to receive 10% interest. How much interest amma? 10%. So 1 crore means how many zeros? 7 zeros. So okay, take 1 crore on your calculator and what is the 10%? Do 10%. How we can do the percentage ma? So 1 crore into 10 divided by 100. That is equal to how much amma? 12 lakhs rupees, sorry, 10 lakh rupees, 10 lakh rupees. Okay na? This 10 lakh is per annum, per quarter? Per annum. Okay na? This percentage is per annum. Okay na? Divided 10 lakhs into the 4 parts. How much we will get ma? How we can divide 10 lakhs divided by 4? That is equal to how much ma? 12 lakhs, sorry, 10 lakhs divided by 4, how much? 2,50,000 and 2,50,000 every quarter we need to receive. But here what here going on ma? Quarter 1 interest will be received in quarter 2. Quarter 2 interest will be received in quarter 3. And quarter 3 interest in quarter 4. And quarter 4 interest in next year. Okay nama? Then we will receive the quarter 4 interest next year. So that means even though we have received in the quarter 2, but we have received in the current era, we are going to receive in the next era. We are receiving in the current year itself. Even though quarter 1 interest we are going to receive in the quarter 2 also, but we are receiving in the current era, next era. We are receiving in the current year. That means in the current year, totally how much interest we are going to receive ma? 2,50,000 into 3 or 4? into 3. Okay, now quarter 4 interest we are going to receive in next year. Okay, now I am asking how much interest we are received in the current year. We have received only 2,50,000 into 3. That is equal to how much, Amma? 7,50,000 we have received during the current year. But 2,50,000 we are going to receive in the next year. Okay, now. So this 7,50,000 is called as interest received or interest receivable. Interest received. But what is the balance amount? The balance 2,50,000 is called as income receivable. Nothing but interest receivable. What is the meaning of 7,50,000? Interest received. Are you getting the point? Okay, now totally what is the amount of interest during the current year, ma? We need to receive 10 lakhs. We need to receive how much, ma? 10 lakhs. But we have received only during the current year how much? 7,50,000. The balance of 2,50,000 we are going to receive in the current year, in the next year. In the next year. Are you getting the point? Quarter 1 in quarter 2. Quarter 2 interest will be in quarter 3. Quarter 3 interest in quarter 4. But quarter 4 interest will be received in next year. So for quarter 1 how much? 2,50,000. For quarter 2 how much? 2,50,000. 3 2,50,000. 4 also 2,50,000. But quarter 1 interest, quarter 2 interest and quarter 3 interest we are going to receive in the current year. We are going to receive in the current year. But quarter 4 interest we are going to receive in the next year. For that reason 7,50,000 is called as interest received and 2,50,000 is called as interest receivable. Interest receivable. What is the entry for the 7,50,000? What is the entry for the 7,50,000? Interest received. That means bank account debited to interest account. Bank account debited to interest account. So what are the two outcomes here? Bank and interest. Bank asset debit balance increases debit. Interest income credit balance increases credit. So what is the entry for the interest received? Bank account debited to interest received or receivable, amma? Received. This is the entry for how much, amma? 7,50,000 or 10 lakhs? 7,50,000. Are you getting the point? Okay, na? 7,50,000 we have received or we have not received? We have received during the current year. But 2,50,000 we are receiving or we are not receiving? We are not receiving. So we are not, so that this interest receivable is called as asset or liability? Asset. Asset which balance, amma? Debit balance. Increases or decreases? Increases. So what we need to do? Debit. In the credit side what we need to write? Interest. The credit side what we need to write, ma? Interest. So what is the entry for the interest receivable? Interest receivable account debited to interest receivable. This is an asset. Which balance, amma? Debit balance increases debit to interest account. How much, amma? 2,50,000 and 2,50,000. Are you getting the point? Is there any doubts? In the current year, how much amount of interest we have received? 7,50,000. In the next year, how much amount we are going to receive? 2,50,000. What is the entry for the 7,50,000? Bank account debited to interest received account. What is the entry for the 2,50,000? Interest receivable account debited to interest account. Okay, na? So this is how we need to complete the. We have completed which one, ma? Income receivable. What is the general entry? In general perception. In general, income receivable. What is the income receivable entry, sir? In the place of interest, please keep the income. What is the entry? Income receivable account debited to income account. Income receivable account debited to income account. What is the outstanding expenses entry? Expenses account debited to outstanding expenses. Debtor. We should not call the debtor. We should call it as debited. Okay, na? Again, shall I say your name? Okay, is there any doubts up to here? Okay, na? So what is the normal normal entry for the income receivable ma, income receivable account debited to income account. This is the normal entry for the income receivable. Is there any doubts? Next we need to discuss what? Income received in advance. Income received in advance. So till now we have completed the outstanding expenses, prepaid expenses and income receivable. Outstanding expenses is a liability. Okay na. Prepaid expenses is an asset. Next one, income received in advance. Income receivable is called asset. Next we are going to discuss about income received in advance. What is the meaning of this one, sir? Asset or liability? Why? Obligation to pay na. Obligation to do work. Hey man, what did you eat today? You are saying correct answers. Okay. What is the meaning, sir? First we need to write the meaning. What is the meaning of this one? Income related to next year, but we have received during the current year. So income related to next year, comma, but we have received during the current year. Okay, na guys. So can we take one example? Are you ready? Where is the participation, man? Are you there in the class? Then participate. Are you ready or not? Yes, sir. So what is the example, sir? Okay, na? You know already. We are going to start one education institute. Okay, na? Which institute, ma? What we need to put? Shikharana? No. We should not put here the Shikhara. Why means you will understand. Okay, we are going to start cinema is there. Even though it is cinema. Okay, imagine we are going to start cinema. We are not starting the cinema. We are starting the education institute. Okay, na? The education institute related to CMA. Related to what, ma? CMA. We know in the CMA how many levels will be there? 3 levels, sir. Okay. What is the first level? Foundation or final? Oh, super. First level is called as foundation, or we can have the CMA cat. Do you know the CMA cat? Okay, we can discuss some other time. And what is the second level, ma? Inter. CMA, inter. What is the third level? Final. Okay, na. So, but what? Imagine this is a first year. This is first year. This is a second year. This is third year. Okay, na. But we are going to collect the fee in the foundation itself. You know, the total fee related to inter and related to final, we are going to collect in the at which level? In the foundation itself. So totally we are going to charge. How much we should charge? Totally 3 lakhs we have collecting. How much amount we are going to collect? 3 lakhs is the education fee we are collecting from the students. So even though we collected 3 lakhs from the students, in the which level, ma? Foundation level itself. That means in the first year itself. Okay, na? But 1 lakh belongs to foundation, 1 lakh belongs to inter, and 1 lakh belongs to final. Okay now. But we are going to receive total amount in the first year or second year. We are going to receive total amount in the first year itself. Okay now. That means in this 3 lakhs, in this total 3 lakhs, 1 lakh belongs to current year, remaining 2 lakh belongs to next year and then next year. Okay now. That means in this 3 lakhs, we are going to divide into how many parts, ma? 2 parts. Just 2 parts. 1 lakh and balance 2 lakhs. 1 lakh is called as 1 lakh is called as 1 lakh related to current year, next year. 1 lakh related to current year and 2 lakhs related to next upcoming years. Okay na? Next upcoming years. Okay na? Please listen, man. Okay. So that this is related to current year na. So that what we need to call this 1 lakh is called as income received. This 1 lakh is called as income received. What is the meaning of this one? Income received in income related to upcoming years or current year? Upcoming years. What is the meaning of this one? Income received in advance. Received in advance. Okay na. So this is an asset or liability. Liability. What is the liability here, sir? We need to provide the service. We need to provide the service. Without providing the service, but we have collected the amount from the students. So this, for that reason, this income received in advance is called as asset or liability. Liability. Okay na, guys? So is there any doubt? What is the entry for the income received? What is the entry for the income received? Cash or bank account debited to interest received. Fee received account. Cash or bank account debited to fee received account. What is the entry for the income received in advance? We have received or we have not received? We have received. That means in the debit, what we need to put, ma? Cash or bank account debited to fee received or fee received in advance? What we need to write? Received or received in advance? Received in advance. So fee received in advance account. Fee received in advance account. This is the entry. Are you getting? If you write the fee received, we cannot differentiate. So in order to differentiate the current year and next year, what we need to do? We need to give the separate sentence called as fee received in advance. So this is how we need to write the entry for related to what, ma? Income received in advance. What is the income received in advance entry? Over cash or bank account debited to income received in advance. So this is the entry, normal entry for the income received in advance. Are you getting the point? So this is how we have completed the total discussion about the 4 types. What are the 4 types? Outstanding, prepaid, received, receivable and received in advance. Outstanding is a liability, prepaid is an asset, receivable is an asset, and then received in advance is called as liability. What is the entry for the outstanding expenses? Expenses account debited to outstanding expenses account. What is the entry for the prepaid expenses? Prepaid expenses account debited to cash or bank account. What is the entry for the income receivable? Income receivable account debited to income account. What is the entry for the income received in advance? Cash or bank account debited to income received in advance account. Here, he is an example, man. Oh. Now, next we need to discuss the which accounts are income account and expenses account. So please be very concentrated. These are 2 types accounts are some of the difference Okay, now there will be a different when compared to the previous accounts. What are the previous accounts? Asset account. Next, we have discussed the capital account. We have discussed the debtor account. We have discussed the creditor account. But these two types of accounts will play the major role, but different will be there. Okay, na? What would go? Are you getting the point? Okay, these two types are differences. Same similar to those difference. There will be a difference. Okay, na guys? First, we are going to discuss detailed discussion about the expenses and then detailed discussion about the incomes. Okay, na? Okay, first, put the heading called as expenses. In these expenses, I am going to divide it into the three parts. Okay, na? Can anyone can say how many types of expenses are there? Three types. Expenses paid. What ma? Expenses paid and outstanding expenses. And third one is called as prepaid expenses. Okay, now these are the three types we are going to see. Here, outstanding expenses is called as asset or liability. Liability. Prepaid expenses is called as asset. Liability is having what ma? Opening balance and closing balance. And asset is also having what? Opening balance and closing balance. These three types we are going to show only one account. Okay, na? Expenses paid and then what ma? Outstanding expenses and then prepaid expenses. These all the things will be presented only in one account, a difference account. Only one account, but we'll show in a different manner. We'll show in a different manner. Okay, na? Outstanding expenses will have the opening balance and will have the closing balance. And in the same way, prepaid expenses will have the opening balance and will have the closing balance. Okay, na? So for liability, opening balance will be on which side? Credit side. So what we need to write? By balance brought down. So closing balance to balance carried on. Okay, na? Okay. Next, prepaid expenses will have the opening balance and closing balance. Asset liability, asset. Asset means which balance? Debit balance. For the debit balance, opening balance will be on the debit side. So we need to write to balance brought down and by balance carried on. Okay, why you are writing like that, sir? Okay, now you will understand. Please wait up to the completion of expenses account. Okay. Sir, what is the meaning of opening balance related to current year balance or previous year closing balance? Current year opening balance means this balance we have taken from the previous year. This balance we have taken from the previous year. That means, can I write like this? This balance related to current year or previous year? Sorry, this balance related to previous year. Wait, man, please. Otherwise, you come here and teach. Sir, opening balance means, what is the meaning of opening balance? We have taken this balance from the previous year. Previous year closing balance will be the current year opening balance. That means this amount belongs to previous year or current year. This outstanding expenses belongs to previous year. Okay, now because this is a opening balance or closing balance. This is a opening balance. Okay, now where we have brought the opening balance? From the previous year closing balance, we have brought the current year opening balance. Are you understanding the point or not? Previous year closing balance is equal to the current year opening balance. Okay, even though we are going to record in the current year opening balance, but that particular outstanding amount belongs to previous year or current year? Belongs to previous year. Why I am saying the previous year? Because this balance we have taken where ma? We have taken from the previous year closing balance. We are brought to the current year opening balance. Are you getting the point? అర్థమైందా అర్థం కాలేదా? మనం ఎక్కడి నుంచి తెచ్చుకున్నాం? మా ప్రీవియస్ ఇయర్ క్లోజింగ్ బ్యాలెన్స్నే కరెంట్ ఇయర్ ఓపెనింగ్ బ్యాలెన్స్గా రికార్డ్ చేసాం. సో కాబట్టి ఈ పర్టికులర్ అవుట్ స్టాండింగ్ ఎక్స్పెన్సెస్ అనేది ఏ ఇయర్ది? రిలేటెడ్ టు ప్రీవియస్ ఇయర్. సార్ టూ బ్యాలెన్స్ క్యారీడ్ ఆన్ అంటే నథింగ్ బట్ ఓపెనింగ్ బ్యాలెన్సా క్లోజింగ్ బ్యాలెన్సా? కరెంట్ ఇయర్ క్లోజింగ్ బ్యాలెన్స్. సో దట్ దిస్ పర్టికులర్ అవుట్ స్టాండింగ్ ఎక్స్పెన్సెస్ రిలేటెడ్ టు విచ్ ఇయర్? current year. Related to which year ma? Current year. Are you getting the point? Okay na? Next. To balance brought down. Okay na? To balance brought down. Prepaid expenses to balance brought down. That nothing but what ma? Opening balance or closing balance? Opening balance of current year we have taken from where? Closing balance of previous year. What is the meaning of prepaid expenses ma? Expenses related to current year, related to next year. Expenses related to next year we have received during the current year. But to balance brought down means what ma? Previous year closing balance. That means what ma? These prepaid expenses we have received in previous year, we have received in current year, we have received in previous year. We have received in previous year. That means what ma? The these prepaid expenses. Which prepaid expenses ma? These prepaid expenses we have received during the previous year. Received during the but related to current year. But related to current year. Even though we have received this opening prepaid expenses during the previous year, but related to which year ma? Current year. So that can I write like this? Can I write current year? So what is the meaning of by balance brought down? Opening balance or closing balance? Closing balance. That means what ma? This particular prepaid expenses we have received during the current year, but related to next year. So what we need to write here? NY. NY means next year, CY means current year, PY means previous year. Are you getting the point? Okay. If you think from the outstanding expenses point of view, what is the meaning of outstanding expenses? Expenses related to current year, but we have not paid. What is the meaning of prepaid expenses? Expenses related to next year, but we have paid in the current year. For that reason, outstanding point of view, opening balance means that particular outstanding expenses related to previous year. Outstanding expenses closing balance means that particular outstanding expenses related to current year. When we think from the point of view of prepaid expenses opening balance means what ma? That prepaid expenses we have paid in the previous year. Even though we have paid in the previous year, but related to current year. For that reason, we are writing the current year. What is the meaning of closing balance of prepaid expenses? That particular prepaid expenses we have paid during the current year, but related to next year. Are you getting the point? So, even though if you don't understand this concept also, we can write easily, no problem. Okay now what we need to prepare? We need to prepare the expenses account or expenditure account. Which account we need to prepare ma? Expenditure account. Left hand side is called as debit record and right hand side is called as credit. What is the entry for the expenses paid? Expenses account debited to cash or bank account. I think, do you know na? Okay. For this expenses account, for this expenditure whole account, overall expenditure account, expenditure means which type of account? Nominal account. Expenditure means which type of account? Nominal account. For the nominal accounts, please remember, for the nominal account, we are not going to have any opening balance and we are not going to have any closing balance. Why, sir? Because as a whole account, I am saying, not I am saying from the outstanding expenses, not I am saying about the prepaid expense. I am saying the overall. Okay now, by adding overall expenses, okay now, by adding which expenses ma? Overall expenses, we are not going to have any opening balance and we are not going to have any closing balance. Why, sir? Because the closing balance of overall expenses will be transferred to which account? P&L account. Be transferred to which account ma? P&L accounts. Normally what we need to write ma? Debit balance means how it will be presented. Just a second. Normally debit balance means how it will be presented ma? To balance brought down. And what we need to write ma? By balance carried on. Instead of writing by balance carried on, we need to transfer this amount to which account? P&L account. Which account ma? P&L account. We should not write. If you write the balance carried on, then only what we will get ma? Brought down. We are writing the carried on. We are not writing the carried on. In the place of carried on, what we are putting? P&L account. What we are going to put ma? P&L account. If you put the P&L account, brought down will be coming to the picture. Brought down will not come into the picture. Are you getting the point? Sir, because what is the reason here? The closing balance of expenses and the closing balance of income, overall expenditure and overall income, we are going to transfer to which account? P&L account. But that means we should not write what ma? Carried on. Instead of carried on, the place of carried on, we will put the word called as what ma? P&L account. If you write the P&L account, brought down will come into the picture or will not be coming to the picture? Will not be coming to the picture. So for the debit balance, it will be there or will not be there? Will not. Only we are having only what ma? Instead of by balance carried on, we are directly putting the P&L account. So for that reason, overall expenditure account is going to have the opening balance, is not having the opening balance. We should not have the opening balance, but we are having the closing balance, but we need to transfer to P&L account. So we need to write two balance brought down now. We should not write the two balance brought down. But what we need to write, sir? By P&L account. Are you getting the point? Okay, we are not going to write two balance brought down. Why ma? We are writing by balance brought down, carried on. No, we are not writing by balance carried on, so that we should not write two balance brought down. Are you getting the point? Instead of writing by balance carried on, what we are going to write? P&L account, which account ma? P&L account. Are you getting the point or not? Okay na? Okay. Next, decision, which balance ma? Debit balance or credit balance? Debit balance. So in order to increase the expenditure, which side we need to record? Increases means debit side, decreases means credit side. Okay na? We need to follow the accrual basis. We need to follow what ma? Accrual basis. Accrual basis means what ma? Related to current year means we will consider. Not related to current year means we are not going to consider. Are you getting the point? Consider means increasing the expenses. Consider means what ma? Increasing the expenses. Not consider means what ma? Decreasing the expenses. Consider means increases. Okay, not consider means what ma? Decreases. Are you getting the point? Okay. Now, first, expenses paid. In the place of expenses paid, what is the entry we have recorded? Expenses account debited to cash account. Which account we are going to prepare? Expenses account. So in the expenses account, what we need to put? So we need to record on which side ma? Debit side or credit side? Debit side. So what we need to write here? To cash or bank account completed. Next, come to the outstanding expenses. What are the in the outstanding expenses? If you observe the scenario, previous year and current year. Okay na? Previous year means we should consider or we should not consider. Previous year means we should not consider. We are following which approach, which basis? Accrual basis. So previous year means we should not consider. We should not consider means expenses increases or decreases? Decreases. So can I write on the debit side or on the credit side? On the credit side. So what we need to write, sir? By outstanding expenses related to previous year. Related to which year ma? Previous year. Are you getting the point? Or otherwise what you can write? So previous year means this is a opening balance or closing balance? Opening balance. We can write like this easily instead of this one. What is the opening balance ma? Outstanding means asset or liability? Liability. Liability opening balance. What is the opening balance? By balance brought down. What is the closing balance? To balance carried on. To balance carried on, by balance brought down. If I write like this, you may get confused. You may get what ma? Confused. Are you getting the point or not? Okay na? If I write like this, you will get what ma? Confusion. For that reason, now I am not writing the balance brought down and balance carried on. Instead of that, what we are writing ma? Outstanding expenses related to previous year. Okay na? Okay. Outstanding expenses related to current year, we should consider or we should not consider? We should consider, because related to current year, related to next year? Current year. That means what we need to write ma? Outstanding expenses related to current year. Consider means increases, not consider means decreases. The next one. When come to the prepaid point of view, when come to the which point of view ma? Prepaid. Prepaid point of view, opening balance means belongs to current year, belongs to next year? Opening balance means that particular opening balance is equal to the closing balance of previous year. That means that prepaid expenses we have paid during the previous year or last year belongs to current year. So belongs to current year means we need to consider, we should not consider. We should consider. That means we should consider means increase or decrease? Increase. So what we need to write? To prepaid of which year ma? Current year. So current year means increase. Next year or previous year means decrease. Now what we need to write? By prepaid of current year next year amma? Next year. This is how we need to write the account. Which account ma? Expenses account. So in order to, for understanding purpose, we can write like this. Okay, now for remembering purpose, how we can remember? Consider not, we can remember the opening balance, closing balance like that. We can remember what ma? Opening balance and closing balance like that. Or otherwise, if you understand the concept means easily, how we can remember ma? We are having the opening balance, we are not going to have the opening balance. We are not going to have the opening balance because it is a nominal account. For the nominal accounts, closing balance will be there. But we need to transfer to which account? P&L account. For that reason, what we are writing? By P&L. Why we need to write by P&L ma? It is a debit balance, it is a credit balance. It is a debit balance. Debit balance normally what we need to write? To balance brought down, by balance carried on. But to balance brought down will be there or will not be there? Will not be there. Because why ma? We are not recording by balance carried on. Instead of by balance carried on, what we are putting? By P&L account. So for that reason, we are not going to have the to opening balance. Okay, now to balance brought down will not come into the picture. Are you getting the point? Next, then after, we are having the three items: expenses paid, outstanding expenses, prepaid expense. What is the entry for the expenses paid? Expenses account debited to cash account. For that reason, I am recording to cash or bank. Next, when come to the outstanding expenses will have the opening balance and the closing balance. But opening balance of outstanding expenses related to previous year, so that we should not consider. We should not consider means increase or decrease? Decrease. For that reason, what we are recording? By outstanding expenses of previous year. And current year outstanding expenses we should consider or we should not consider? We should consider. For that reason, what we are doing? To outstanding expenses current year. Next one. When come to the prepaid, we are having what ma? Opening balance, closing balance. What is the meaning of prepaid opening balance? Belongs to previous year. Even though belongs to previous year, what is the meaning of prepaid expenses? Paid during the previous year. Okay na? Previous year prepaid means what ma? Paid during the previous year but related to current year. It is related to current year. For that reason, we are recording on the debit side. Related to next year. For that reason, we are recording on the credit side. Are you getting the point? So this is how we are completing which account? Expenses account. Okay na? If you understand, you can remember this one. Or otherwise, current year means add. Next year or previous year means less. Are you getting the point? Add means increases, less means decreases. Increases means debit side, decreases means credit side. This is a somewhat different approach when compared to the previous accounts. Previous accounts are called as what ma? One is an asset, another one is a liability. Okay, now easily we can write the opening balances, closing balances, because assets and liabilities will be transferred to balance sheet or account? Balance sheet. But here we are transferring the nominal accounts to another account called as P&L account. Okay, another account called as what ma? P&L. So we are transferring one account to another account means, okay, now we are not going to have the balances. We need to transfer. Instead of closing balance, we need to put the word called as either P&L account or trading account. For the direct expenses, we will put the trading account. For the indirect expenses, we will put the P&L account. So if you put the P&L account means opening balance will come into the picture or will not come into the business? Will not come into the picture. Are you getting the point? Is there any doubts? Current year means increase, next year means decrease. Okay, now increase means debit side, decrease means credit side, because expenses is having which balance? Debit balance. But here you need to understand which is related to current year and which is related to next year. Opening balance of the outstanding expenses related to current year or next year amma? Previous year. Related to previous year. Closing balance of outstanding expenses related to current year. Prepaid expenses opening balance related to current year. closing balance related to next year. Okay, now current year means we will increase and record on the debit side. Next year or previous year means this is going to decrease, so we need to record on the credit side. So this is how we need to apply the which account? Expenses account. Are you getting the point? Okay, if you take, I will teach you the income account. At that point of time you will get some clarity, more clarity, if you we are teaching what ma income account. So please take the expenses account. Completed, huh? Babu Udbo, what are you doing? Next income account, you only should say. And what is the information going on there? Degree exams, huh? Write only degree exams. Don't come to class from tomorrow onwards. Okay, na? Become first year or second year? First year. If you understand this concept, then only you can write the degree exams. Otherwise, degree exams is also waste. You can give somebody. అయ్యో రాయిరా అవి ఉంటాయి నీకు అన్నీ సప్లీలే నాకు తెలుసు. 253 ఎలా వచ్చినాయిరా నీకు అసలు? ముందల ఎవరు? అర్థం కదా? రోల్ నెంబర్ వేస్తే వచ్చేస్తా. సరే అయితే ఇంటర్లో కూడా రోల్ నెంబర్ వేసిరా. How much time will take, man? You come into the first bench. You talk like that. I will throw this bottle. Which one? NPO na? NPO single entry for all the things it will be useful. If you don't know this one, 14 plus 5 marks, total 20 marks gone. Okay, next put the heading income account. After completion of this class, I will say. So next, in the income also, how many categories we are going to have? 3 categories. What are they? Income paid, consumer, income received, income receivable, income received in advance. Okay. What is the entry for the income received, Amma? Cash or bank account debited to income account. Okay, na? He's thinking. Next, then after. For income receivable, we are having what, ma? Opening balance and closing balance. Okay. Income receivable means asset or liability, amma? Asset opening balance means to balance brought down by balance carried on. And income received in advance. Asset or liability? Liability. Okay, cool. By balance brought down to balance carried on. Okay, completed. Now we need to decide whether which one is belongs to current year, which one is belongs to next year, or which one is belongs to previous year. Okay, now Udbo will answer. Now Udbo, come on. Okay, that is current year only. All of you. Income receivable opening balance means what, ma? That one belongs to previous year or belongs to current era? Belongs to previous year. What is the meaning of this opening balance? This income receivable happened in the previous year itself. Happened in the previous year. So it is belongs to which year? Previous year. What is the meaning of closing balance? This income receivable belongs to current year. Current year means increases or decreases? Increases. Previous year or next year means decreases. Okay. Next, income received in advance. Opening balance means what, ma? This income we have received during the previous year but related to current year. So this one related to current year and this one related to next year. What is the meaning of this one? Income received during the current year but related to next year. Super. If the Udbo understand the concept means overall India will be overall world will be understand. Yes or no, man? Okay. Now Udbo will answer the account, will prepare the account. Udbo will try to prepare the account, man. Yes, sir. You will close the book. So which account, ma? Come account. We are having the debit record and we are having the credit record. Now, to profit and loss account. Why? Credit account. Okay, credit balance. To balance carried on. Won't be. Why? Over. Because this is okay. Give me a chance. Here this is a nominal account. We are not going to have the opening balance. Only the closing balance will be transferred to which account? P&L account. So which balance of this one? Credit balance. Opening balance will be on which side? Credit side. And closing balance will be on which side? Debit side. So in the place of this one, what we need to write? To P&L account. Okay, completed. Next. Income received. What is the entry for the income received? Cash or bank account debited to income account. Income account. Okay. Which side we need to record? Okay. By cash or bank account. Okay. Here this is a credit balance. So that if it is increases means credit side, decreases means debit side. Yes or no, ma? Yes. Next, when come to the income receivable point of view, previous year means increase or decrease? Decrease. Which side we need to record? Debit side. Okay, what we need to record, ma? By income. Okay, I am testing whether you are in concentrating or not. Okay, to come receivable for which year? Previous year or current year? Previous year. Superman. Next, by come receivable current year. Current year. Next one, come in advance. Current year means, okay, what we need to write here? By come by income received in advance. Which year, ma? Related to current year. Related to current year means which balance? Opening balance or closing balance? Related to current year means opening balance or closing balance, amma? Opening balance. So that means this is a opening balance. Here this is called as receivable for the previous year means this is called as what, ma? Opening. This is a closing. And again what we need to write, ma? To income received in advance. Which year, ma? Previous year. That means what? Sorry, next year. Opening or closing? Closing. Did you get the point? Income receivable for previous year or current year, amma? Income receivable for the previous year means we need to reduce. Income receivable for the current year means we need to add. Next, income received in advance. During the previous year means current year. During the current year means next year. Then you can write like this here. Or we can write, ma? Income received in advance during the current year. Here what we can write, ma? Income received in advance during the previous year. Income received in advance during the previous year means it is related to current year. Now this is a easy process. Or writing to balance brought down by balance carried on is a easy process. To balance brought down by balance carried on only easy. Why, ma? Remembering these points is a toughest concept. So easily we can write what, ma? To balance brought down by balance carried on. Because income receivable is an asset or liability? Asset. For asset, opening balance will be on the debit side. We can write easily what? To balance brought down. Closing balance will be on the credit side. We can write easily what, ma? By balance brought. Next, advance. When come to the advance, opening balance by balance brought down, to balance carried on. Completed. Easy. But you will get confused. You will get as per concept point of view, you will get the confused. As per remembering point of view, which one is the easy? To balance brought down by balance carried on only easy. In order to understand the concept, I have designed this one. Okay na. So now what you need to do here, under this one you can write like this. You're having the space, you're having the space or not having the space, no na. Okay, but even though you are not having the space, you need to write, that's all. Okay, by outstanding expenses of previous year means outstanding expenses opening balance will be on the debit side or credit side. Outstanding expenses ma asset or liability, liability. That means here what we can write, what is the opening balance by balance brought down. Here what we can write ma, to balance carried on. When come to the outstanding, that means prepaid means to balance brought down. We can write what ma, by balance carried on. So please remember the concept. But here you need to mug up. For remembering the account, you need to mug up. For understanding the concept, not need. So if you understand the concept, it is difficult task for writing in the examination. So for that purpose, I am discussing the accounts. That's all. You know. So after going to the home, please sit in a careful manner and understand the concept once again. Are you getting the point? I think so. Outstanding opening balance means related to current era, previous era. Outstanding opening balance, man. Previous year. Outstanding closing balance means current year. Prepaid opening balance means current year. Okay, now closing balance means next year. Next year or previous year means decreases. Current year means increases. Okay. So now we have completed all the things. So what is the time now? So till now we have discussed all the accounts. What are all the accounts we have discussed? Debtor account, creditor account, capital account, asset account, expenses account, and incomes account. Okay, now you may have little bit confusion in income and expenses. So please refer once again. If you are having doubt means I will refer you once again. Okay, now. So next concept is called as just a second. So here if you see the index, we have completed the accounting basics. What we have completed ma? Accounting basics, nothing but terminologies we have completed. Okay now. So in the terminologies, business, owner, proprietor, drawings, capital, these all the things, types of assets, types of liabilities, what is the meaning of transaction, accounting definition, events, next to types of discounts, all this we have completed. Next to income, expenses, profit, loss. Okay, next we need to see the double entry system, and then we are not going to see the accounting principles. These accounting principles we can discuss in at last. After completion of syllabus we can discuss the accounting principles. Okay now. Next we have to start the journal, ledger and subsidiary. So now I will discuss which chapter? Double entry system. You know what is the meaning of double entry system? We need to record the debit asset and we need to record the credit asset. So here we need to maintain how many accounts? Personal account, real account and nominal account. In the single entry only one account will be maintained. Which account? Personal account. They will record either debit asset or credit asset. Okay now. So next, what is the page number here? So double entry system. Before that there is a small concept called as bookkeeping and accounting. So you know the accounting definition. What is the accounting definition ma? recording, classifying, summarizing, analyzing, interpretations. Okay na? So here bookkeeping means both journal and ledger is called as bookkeeping. Why ma? Journal is called as a journal day book. Journal is also called as what ma? Day book. Ledger is also a book. This two is called as books. After that, trial balance. Next one what ma? Final accounts. Okay na? These two are called as statements. Okay na? Final accounts is a statement. Trial balance is also a statement. But when come to the journal and ledger point of view, those two are called as what ma? Statements are books. Books. For that reason, both the journal and ledger is called as bookkeeping. So, what is the meaning of bookkeeping, Amma? Journal and ledger. After journal and ledger, what is the meaning? Trial balance. Next, financial statement. FA. FA means what ma? Final accounts. These two is called as what ma? Accounting. Okay now. So this is the overall information about the bookkeeping and the accounting. It is a process of recording the transactions and events. It is a process of summarizing the summarizing means what ma? Trial balance. Summarizing means what ma? Trial balance. It will give the summary for the total year. The trial balance, the total year payment of salaries will be there. Total rent payment will be there. Per year, per annum, per month, per year. Per month information will be available in the ledgers. Day information will be available in the journal. Okay na? Next, it is a base for the accounting. First, we need to prepare the journal, ledger, then only we can prepare the accounting. Yes or no ma? It is considered as a language of business. So financial statements does not forming part of this process. Yes or no ma? Financial statements will be prepared on the basis of bookkeeping records. Next, management decisions we can take. We cannot take the management decision only with the help of journal and ledger. We can take the management decisions based on the records. Which record ma? Final accounts will be prepared. We are getting a profits means we can continue the business. If we are getting a losses means we need to this all the businesses. This type of decisions we can take only with the help of financial statements. Financial statements will be available in which base? Will be available in accounting, will be available in bookkeeping. Financial statement is nothing but final accounts. Financial statement is nothing but final accounts. This final accounts we are going to prepare in the accounting, in the bookkeeping, in the accounting. So decision making can be taken only on the base of accounting, on the base of bookkeeping, on the base of accounting. There is no subfields in the bookkeeping. There are several subfields like what ma? Financial accounting, cost accounting, and management accounting in the accounts. Accounting there are from the financial accounting we will identify the profit or loss from the business. From the cost accounting we can identify how much amount we need to fix, how much cost we need to fix a particular product. We can identify in this cost account. So cost account will be discussed by particular faculty. Next, what is the meaning of management accounting? We are having the surplus funds. We are having what ma? Surplus funds. How to invest these surplus funds will be discussed by whom ma? Management accounting. What is the meaning of management accounting? How to invest, where to invest. If we have invested in the bank account means we will get certain amount of return. If we are going to invest some other business means we are going to get the some certain amount of return. So how to make the investments will be dealt by the management accounting. How to fix the cost will be dealt by the cost accounting. How to identify the profit or loss of a business will be dealt by the financial accounting. Next, financial position. What is the meaning of position ma? Solvent position. Solvency and in okay. The position we can identify from the bookkeeping, accounting. Balance sheet. Balance sheet where it will be there? Accounting. So financial position can be cannot be cannot be. Financial positions are ascertained on the basis of accounting records. Nothing but balance sheet. We can identify the financial position. Are you getting the point? This is the main difference between the accounting and the bookkeeping. So they are giving us certain examples. Next, what is the main objectives of the accounting? We have discussed already. What is the main financial result we need to identify? Financial position. So ascertain the result of above recording transaction. Nothing but what ma? Profit and loss. Ascertainment of financial position. So assess the management for the decision making. Based on the final accounts, we can take the decision and we can know the solvency position or insolvency position. This is the objective of accounts. And next we are having the functions. What is the meaning of functions are here? we can measure. What is the meaning of measurement, sir? It measures the past performance of the business and shows the current financial position. Next one, what ma? Forecast. Forecast means what? Forecast means what ma? Somebody will say, I am having the sixth sense, I am having the seventh sense. I can estimate what is the next step. So this is called as forecast. While playing the chess, what we need to do? We need to forecast the next step. What the another person is doing. Forecast means what ma? We are going to estimate the future. We are going to estimate. So based on these records, we can estimate the future. Based on these records only, bank will provide you the loans. Okay now, if you want the bank loans means what we need to submit, you need to submit the financial statements. Then only you can get the bank loans. Are you getting the point? If you want, you can go and ask to the bank. So after going to the bank, so what you will ask ma, sir, can you provide any loan? They will ask you about the income tax returns. They will ask you about the financial statements. Go and prepare the financial statements and come. Then only I will give the what they will give ma. Then only they will give the loans. Provisions they will say. Provisions means what ma? Provisions means estimate the future, estimating the future based on the current year financial information. These all the things will be possible only through the financial accounting or management accounting. Financial accounting. We can take the decision making. We can make the comparison and evaluation. What is the meaning of comparison and evaluation, amma? So all the members will follow the same rules and regulations or different rules and regulations. Same rules and regulations. We are having the gap. We are having what ma? Gap. Generally accepted accounting principles. All the persons will use the same principles while performing what ma? Financial accounting. That means we can compare our business with another business. So same field should be there. Okay na? Same field. For example, Tata Motors can compare with the Kia Motors, like that. Okay na? The field should be the same, business should be the same. I am saying what ma? Same line of business should be there. Same line of business means what ma? Comparing the boot, comparing the shoe shop with the cricket bat. Sports, we should not compare na. Okay na? Comparing what ma? Comparing the same line of businesses we should compare, but they will follow the same rules or different rules. They will follow the same rules while preparing the financial statements, because we are having the what ma? Gap. Generally accepted accounting principles. Next, control. What is the meaning of control, sir? Cost controller. What is the meaning of cost control? Here the control means what? In case we are getting a losses, what we can do ma? Imagine we are doing the business in 4-5 types of varieties of goods. For example, if we take the Reliance industry, okay now what the Reliance industry will do? Reliance is doing the Geo. Reliance is entering into the fresh. Reliance Fresh. Do you know what is the meaning of Reliance Fresh? Vegetables, groceries will be there. Okay na? Okay na? Reliance industry. Imagine they are doing the what ma? Trends. Okay, cloth business of trends. We are having the 3 types of businesses. Okay, after performing the financial statements, we have got to know that what ma? Reliance Fresh is getting a less profits, or Reliance Trends is getting what ma? Losses. In that situation, what we can do? We can control it. We can control means what ma? Cut off. We are going to cut off the Reliance Fresh, and we are going to run only 2 businesses. What are the 2 businesses? Trends and Geo. Okay now that means we can get a more profits or we can get a less profits. We can get a more profits. Why ma? The total investment pulling out from the Reliance Fresh and putting on the Trends and the other businesses, we'll get the more profits or less profits. More profits. So getting a loss business, we need to dissolve, and getting a profit business, we need to increase the investment. This kind of possibilities will be happen because of what ma? Financial accounting. Because of what ma? Financial accounting. What the financial accounting can do? It can measure, forecast, decision making, comparing and evaluation, and control. Just for knowledge, once you refer after getting the book, what you need to do? You need to refer these things. So till now we have completed the whole picture of basics. Okay, guys. Next we are going to see the double entry system. What is the meaning of double entry systems are here? We need to record the 2 assets, debit asset and credit asset. So we are going to maintain the 3 types of accounts. What are the 3 types of accounts? Real account, personal account, and nominal account. So it was in the year of 1494. Who is that? Luca Pacioli, an Italian mathematician, first published his comprehensive treatise on the principles of double entry system. So who is the father of accounting, father of double entry system? Luca Pacioli. Not only the father of double entry system, father of accounting is also a Luca Pacioli. You may get one of the MCQ. You may get, okay now. These are all the MCQs. You need to concentrate on foundation itself, but we are revising once, that's all, okay now. Who is the father of accounting? Luca Pacioli. Who is the father of double entry system? Luca Pacioli. What is the concept here? What is the meaning of, next we are going to discuss the concept of accounts. What is the meaning of concept of account? Account is a summarized record of transaction related to a person or a thing. Person means what ma? Debtor or creditor. Things means what ma? Land, building and equipment. Typically account having which shape ma? T shape. Okay na. Left hand side is called as debit, right hand side is called as credit. So debit derived from the which word ma? Latin word. Credit is also derived from the Latin word. Okay na. But Luca Pacioli related to which ma? Italian mathematician, but the words are taken from Latin words. What is the meaning of debit? Debit is derived from the word called as debitum, which means what we will receive. Credit is derived from the credari, which ma? Credari. So which means what we have to pay. Normal meaning of debit is called as what we have to receive. Normal meaning of credit is called as what we have to pay. So if the debit side exceeding the if the credit side exceeding the debit side means credit balance. If the debit side exceeding the credit side means it is called as debit balance. You know, debit side is more than credit means debit balance. Credit side is more than. Next one, classification of accounts. So totally we are having the mainly two types of accounts: personal accounts, impersonal accounts. What are the personal accounts? Natural personal account, artificial personal account, representative personal account. What are the impersonal accounts? Real account and nominal accounts. You know already these type of things. So natural person means what ma? Human beings like Ram, Sita. Udbhav is not a human being. Okay na. So in the place of Udbhav, what is natural person? Artificial person. Artificial person. Natural person. Okay na. Next, artificial person means what ma? Created by law. Anything created by law is called as a artificial person. Companies, banks. Next, representative personal account means capital, drawings, outstanding expenses, prepaid expenses. These are all the things called as what ma? Representative personal. We are using one account instead of another account is called as a representative personal account. These are not the name of any person or organization, but they are representing a personal account. Example what ma? Capital, drawings, outstanding, prepaid, bills receivable, bills payable. These are all called as what ma? Representative personal account. And next one, impersonal account means what ma? Real account and nominal account. What is the meaning of real account? Accounting which is related to asset is called as a real account. What is the meaning of nominal account? Accounts related to expenses, losses, gains and revenue. Examples what ma? Salary paid, interest paid, commission received. So next we are having what ma? Okay, just a second. Here we need to rectify. In your book the rectification was already done. Okay na? No problem. We will get the books, no problem. Please wait. Okay na? After completion of class I will show you. Okay na? By Monday we will get. Here in the place of gold and loans, what we need to put ma? Accounting approaches. Accounting approach. How many types of accounting approaches are there? 3 types. Traditional approach, modern approach, accounting equation approach. In this we have completely discussed about the modern approach. You know already traditional approach. What is the meaning of traditional approach, sir? In order to understand the traditional approach, we need to learn the golden rules. What is the golden rules? Personal account rule, real account rule, nominal account rule. What is the personal account rule? Debit the receiver, credit the giver. What is the nominal real account rule? Debit what comes in, credit what goes out. What is the nominal account rule? Debit all expenses and losses, credit all incomes and gains. Next, we know the modern approach. So normally this is how the modern approach will be there. But we have taken one shortcut. What is the shortcut? Dealer. D for drawings, E for expenses, A for assets, L for liabilities, E for equity or capital, R for revenue or incomes. So these three items are presented on the debit side, debit balance. Another three items are presented on the credit side, credit balance. So normally you need to understand like that. What is this one here? Capital account, having what having which balance credit balance. If it is increases, what we need to do? Increases means credit, decreases means debit. Normally which balance will be there? Credit balance. This is easy concept. What we have discussed is easy concept. We discussed in easy concept. Next, what is the accounting equation? Asset equal to liability plus equity. This same equation we can write like this. How, sir? Asset equal to liability. Equity means what capital. From the capital, what we can do? From the capital, drawings we need to reduce or we need to increase? We need to reduce. So revenue minus expenses means what profit. Revenue minus expenses means what profit. What we can do the profit? Add. We can do the add back profit. We can reduce the drawings. Next, interest on capital, add. Interest on drawings, minus. You can write like this also. I will explain in tomorrow class, no problem. Accounting equation. So like that we have completed what double entry system. So totally we have completed the 2 basic chapters. First one is called as basics. What chapters over. Is there any doubts in the double entry system? There is no, already you know all the things. How many types of accounts are there? 2 types totally. Personal account, impersonal account. You know all the things, no problem. Next, asset plus expenses plus drawings is equal to the liabilities plus capital plus revenue. You need to understand this concept. Accounting equation approach, I will say you, no problem. What is the next one accounting equation approach. Normally what is the accounting equation Asset equal to equity plus liabilities. Instead of equity, we can write what What is the equity formula, sir? Equity means nothing but what capital. So from the capital, we need to add back what net profit. We need to less drawings. As of now, only these 3 are there. Okay, now imagine always we can, most of times we'll get the profit. Only sometimes we'll get what loss. What is the formula for the net profit? Revenue minus expenses, or incomes minus expenses. Okay, now this is the formula for the net profit. Okay, now are you getting the point? So totally how we can write here? Asset equal to capital plus revenue minus expenses minus drawings plus what liabilities. Liabilities means outside or inside outside liabilities. Okay na? So the same equation, how they are writing asset expense minus expenses. If it bring to the left hand side means what will be plus. So asset plus expenses plus drawings equal to capital plus revenue plus liabilities. Like that they are representing. Are you getting the point? So this is the total derivation. This is total derivation. Are you getting? So in each and every transaction happening, the equation must be equal. The equation must be equal. I will take certain examples. Are you getting the point? These all the things are there in your book or not there? Is there in your book? I am explaining, that's all. What is the normal equation? Asset equal to equity plus liabilities. How the equity they are writing ma? Capital plus net profit minus drawings. What is the meaning of net profit? Revenue minus expenses. So totally they are writing like that. I am taking one example. What is that example, sir? It is appearing. Okay, na fine. That color is appearing. Owner started business with cash of rupees 10 lakhs. With cash of rupees, how much amma? 10 lakhs. Now here we are getting a two outcomes. How many outcomes? Two outcomes. Capital and cash. Okay. Capital is increasing. Cash is also increasing. Capital is increasing. Cash. What is the accounting equation ma? Asset equal to equity plus liabilities. This equation must be equal or must not be equal? Must be equal. What is the asset here? Cash. What is the asset here ma? Cash. So cash means asset. Cash means what ma? Asset. So here 10 lakh increasing or decreasing? Increasing. So there is any changes in the equity? There is no changes. There is a changes. Capital increases or decreases? Increases. So here also how much increases? 10 lakhs increases plus liability 0. The total equation satisfied or not satisfied? Satisfied. Okay na? If left hand side increases means right hand side also increases. Okay na? Or otherwise how it will be, sir? For example, imagine one asset increases means what should be happen, sir? Either equity should increase or either liability should increase, or otherwise another asset value should be decreases. Another asset value should be decreases. Then only the equation will be satisfied. Are you getting the point? If the asset increases means what should be happen ma? Either equity or liability should increase or asset will be decreases. Then only the equation will be satisfied. Otherwise the equation will be satisfied or will not be satisfied. Imagine now there is another concept. For example, if the equity increases, asset should be increases or decreases? Increases, but another equity should be decreases or liability should be increases or decreases? Why should be adi kuda increase aithe ela? What is the concept means? What first equity increases ra? First equity increases. This equation should be satisfied. This equation should be satisfied means what ma? LHS should be equal to RHS. Or imagine capital 10 lakh increases. Capital 10 lakh increases. Now in order to satisfy this equation, this is RHS LHS. RHS. RHS increases means LHS should also increases. But same side we are having how many points? 2 points. First one equity, second one liability. Same side means decrease. Same side means what they will do ma? Increase. And ikkada asset lo changes em ledu. There is no changes in the asset. Now what should be happen? Either equity should increase or decrease. Already equity increased. Now liability should decrease. Or another equity should be decreases. రెండిట్లో ఏదో ఒకటి జరగాలి. అర్థమైందా? Same side means decrease, opposite side means increase. If it is increases, are you getting the point or not getting a point? What I am saying is, for example, now I will say another example. If the liability increases, asset should be increase or decrease? Liability increases means RHS increases or decreases? RHS increases means LHS should also increase. This is a case one. Or what should be happen? If the RHS is not doing anything, LHS is not doing anything means the same side equity should decrease or liability should decrease. Equity should decrease or liability should decrease. I will say another point. For example, if the liability decreases means asset. If the asset increases, both are equal, unequal? Equal avala, unequal avala? Equal should be happen, unequal should be happen. Equal. Equal means RHS decreasing, LHS. Decreases means asset should decrease or increase? Decrease. Why you will say increase? Should happen like this. Or what is another option? Equity should increase or liability should increase. Are you getting the point? I will say another example. What is another example, sir? If the equity decreases, asset should decrease or equity increases or liability increases. Super. That thing only I am saying. I will say another example. What is the next one? If the asset decreases, equity decreases or liability decreases or asset increases. So this is how the equation approach will be carrying on. So this is the overall information. For example, we are paying the salaries. How will the equation will be equal? Paying the salary means cash balance will be decreases. Expenses will be presented in where? Equity. Equity will automatically increases or decreases. Why it is decreasing? We are doing the minus. We are doing what? Capital minus expenses plus expenses minus. So at that point of time, equity decreases. So asset decreases, equity decreases. For example, we are receiving commission. Means cash balance will be increases. Automatically equity will also be increases. Why revenue plus revenue minus equity, capital plus revenue. Capital plus revenue means equity will also be increases. So like that. We are purchasing the asset on a credit. At that point of time, liability increases, asset also increases. Equation tallied or not tallied? We are repaying the liability. Liability decreases, asset also decreases. So like that the equation approach will be applicable. Sir, opposite side means if LHS increases means RHS should increase or LHS should decrease. Okay na? If LHS increases means RHS should increase or LHS should decrease. Same side means opposite side means same. Okay na? Direct proportion, inverse proportion will be there na. Okay na? Opposite side means what direct proportion. Same side means inverse proportion. Direct means what increase means increase, decrease means decrease. Same side means increases means decreases, decreases means increases. Are you getting the point? This is how that overall accounting equation approach will be carrying on. Okay na? If you are having any doubts, I will explain tomorrow class once again. So is there any doubts up to here? So totally in the today's class we have discussed about the income account, expenses account, and we have totally completed the discussion of basics, and we have totally completed the discussion of double entry system. How many approaches we are having? 3 approaches. Traditional approach already you know, so that I am not discussing. I have discussed the modern approach and I have discussed the accounting equation approach also. Same side means direct or inverse? Inverse. Opposite side means direct. The increases means increases, decreases means decreases. Same side means increases means decreases, decreases means increases. What is the accounting equation? Asset equal to equity plus liability. That equity they are going to write how capital plus net profit minus drawings. Or net profit is equal to revenue minus expenses. So what is the total overall equation? Asset equal to capital plus revenue minus expenses minus drawings plus liabilities. So that equation they are recording like asset plus expenses plus drawings equal to capital plus revenue plus liabilities. So this is the overall equation. They may ask you what this accounting equation in the MCQs. They will ask the accounting equation. Choose one of the correct answer and they will give 3 wrong answers and they will give 1 correct answer. So we need to identify the correct accounting equation. Are you getting the point? So this is how I completed 2 chapters related to our book. the basics and the double entry system. In the next class, we are going to discuss which topic? The journal, ledger, and subsidiary books. Okay, now after journal, ledger, trial balance only we will discuss. Okay, now. So thank you. Have a nice day. Okay, hi guys. Good afternoon, one and all. The previous class we have completely discussed about the basics. So we know how to prepare the debtor account, creditor account, capital account, asset account, income account, and expenditure account. So in the today's class, we are going to start with the some new concept called as capital and revenue transactions. So what is the discussion for today's class? Capital and revenue transactions. So just listen the simple concept. The weightage of this concept is 7 marks. How many marks we are going to get? 7 marks. This chapter is the base for NPO. What is the chapter name? NPO, non-for-profit organization. This is the base for NPO. How many marks we are going to get? 7 marks. Sir, generally you know the gap, I think so. What is the meaning of gap? Generally accepted accounting principles. In this only we are having the rules and regulations with respect to the accounting. So we are going to call it as rules and regulations is called concepts and conventions or principles we can call them. In that one of the principle is called as going concern assumption. What is the principle, Amma? Going concern concept. So what is the meaning of going concern concept? Anyone in the class? What is the meaning of going concern? Going concern means business may go forever. Forever means infinite years. No. Business will be continue for next year also. What is our assumption, ma? This year business is happening and the business will be there in the next year. The foreseeable future means how many years from this year ending to next year ending, the business will be there or will not be there? Will be there. This is the basic assumption as per which concept, amma? Going concern assumptions. So without any barriers, the business will be there for the foreseeable future. What is the meaning of foreseeable future? The meaning of business operations which must be existence for at least how many years, amma? 1 year from the date of current year balance sheet. Okay, now generally at what time we are going to prepare the balance sheet? We are going to prepare the financial statements at the end of the year. From the date of preparation of financial statements till the next year ending, the business should be there is our assumption. So what is the meaning of foreseeable future? From the end of the preparation of balance sheet till the next year ending, the business will be there or will not be there? Will be there. This is our assumption. Okay, based on which concept we are going to assume this one, ma? Going concern assumptions. So intention to winding up of the operation. So here no intention. What we need to write here? Intention to winding up, no intention to winding up, no intention to winding up of the business. So based on this going concern concept or assumptions, the transactions are divided into how many types, ma? 2 types. First one is called as capital transaction and second one is called as revenue transaction. What is the meaning of capital transaction, sir? The benefit we are getting more than 1 year means it is called as capital transaction. The benefit we are getting less than 1 year means it is called as revenue transaction. For example, we are purchasing the camera. Okay, na? Because of camera, we are getting benefit more than 1 year or less than 1 year, amma? More than 1 year. So purchase of camera is called as capital transaction. Okay, nama? For example, we are paying the salaries to the employees. Okay, now paying the salaries to the employees. For them, we are going to get the benefit only 1 month. Yes or no, ma? We are paying the current month salary means the worker will work for the next month. Or otherwise, if you are not paying the salaries means worker will be there or will not be there. So worker will go out of organization. So what is the benefit of salary? Benefit of salary is only 1 month. 1 month means less than 1 year, more than 1 year, less than 1 year. So payment of salary is called as which type of transaction, ma? Current Revenue transaction, capital transaction, revenue transactions. So based on the going concern concept, we are divided into the two types of transactions. First one is called as capital and revenue. Benefit more than 1 year means capital, benefit less than 1 year means revenue. Next, we are going to discuss from the expenditure point of view. Which point of view, ma? Expenditure point of view. We are having the three types of expenses. First one is called as capital expenditure, revenue expenditure, and deferred revenue expenditure. So we are going to learn what is the meaning of capital expenditure and what is the accounting treatment of the capital expenditure. What is the next point, ma? Revenue expenditure. When come to the revenue expenditure, we need to know what, ma? What is the meaning of revenue expenditure and what is the accounting treatment for the revenue expenditure, and in the same way related to the deferred revenue expenditure also. Okay, now if you understand this type of expenses, you can understand easily what, ma? Accounting treatment also. Okay, now so now we are going to start with the capital expenses. What is the first one? Capital expenditure. Sir, what is the meaning of capital? First of all, benefit more than 1 year, less than 1 year? More than 1 year. What is the meaning of capital expenditure, sir? With the help of that particular expenditure, the benefit we are going to get more than 1 year, less than 1 year? More than 1 year. We are incurring the certain expenses, but by way of incurring certain expenditure, we are getting a benefit more than 1 year is called as a capital expenditure. So any expenditure incurred and a benefit for greater than 1 year, such expenses is called as what, ma? Capital expenditure. But that should be related to these 5 points. Okay, now we should incur certain expenses. With the help of that expenditure, we need to get the benefit more than 1 year, but related to these 5 examples. Related to how many examples, ma? 5. So please be very patient. First one is called as acquisition of an asset. First one is called as what, ma? Acquisition of an asset. What is the meaning of acquisition, sir? Purchase of asset. Okay, now we are planning to purchase one air conditioner. Okay, how much? What is the value of air conditioner, ma? Minimum 40,000 will be there. So we are going to planning the what, ma? We are going to purchase the air conditioner. What is the value of air conditioner here? 40,000. So this is called as capital expenditure, revenue expenditure. Capital expenditure. Why, ma? With the help of that air conditioner, we are going to get the benefit more than 1 year, less than 1 year? More than 1 year. So this 40,000 expenses is called as capital expenditure, revenue expenditure? Capital expenditure. What is the ultimate meaning of capital expenditure, sir? Capital expenditure means we have to incur certain expenses. With the help of that expenses, we need to get the benefit more than 1 year. That too related to fixed asset. That too related to what, ma? Fixed asset. How many types of assets are there? We are mainly 2 types. Current asset, non-current asset. Non-current asset is also called as fixed asset. Fixed asset means what, ma? Benefit more than 1 year, less than 1 year? More than 1 year. Are you getting the point? What is the final conclusion? We are incurring certain expenses. With the help of that expenditure, we need to get the benefit more than 1 year. That too related to fixed asset. Okay, now first one is called as what, ma? Acquisition of an asset. Here the asset means which type of asset? Fixed asset. Next one, any expenditure incurred for bringing the asset into the current location or condition. For example, after purchasing of AC, okay, now we can carry only one person can carry AC from the shop to till business premises. Only one person can carry the AC, or we need a transportation expenses. We need to incur the transportation expenses. What is the purchase cost of AC, amma? The purchase cost of AC is 40,000. After that, we have incurred 1,000 rupees for transportation expenses. Okay, Namma. And then we are going to incur the installation expenses. What is the meaning of installation? Fixing of an air conditioner is called as installation. So for the installation, we have paid how much? 1,000. Okay, now these 2 expenses are related to fixed asset, not related to fixed asset, related to fixed asset. Because of without these 2 expenses, we can use the asset, we cannot use the asset. We cannot use the asset. For that reason, this 1,000 and 1,000. What is the total amount, amma? 2,000. This 2,000 also we are going to add back to the asset. Now what is the cost of the asset? 40,000, 41,000, 42,000, 42,000. Okay, Nama. Even though this transportation, normal transportation expenditure is called as revenue expense. Normal transportation expenditure means revenue. But here we are incurring the transportation expenses for the purpose of what, ma? For the purpose of bringing the asset into the current location or condition. So for that reason, this 1000 rupees we need to add back to the asset. The 1000 rupees is also called as capital expenses. Next one, what is the third point, ma? Current location means what? Go down or workshop. Condition means what, ma? Should be in a passive use but not in a active use. What is the meaning of passive use, sir? Ready to use. I think so. In the CMA foundation, in the depreciation chapter, the word you have seen. What is the meaning of that word, ma? Ready to use. Ready to use what, ma? We have installed the AC and we have given the connection to the AC electrical supply. Okay, now if you switch on the AC switch, it should be work. Okay, now that condition is called as what, ma? Ready to use. Okay, now even though if you are you are not using the particular asset, then also the depreciation will be charged or will not be charged. Depreciation will be charged. The same concept apply here also. Up to put to use the cost, whatever the incurring to the particular asset, that cost is called as what, ma? Capital expenses. Are you getting the point? Up to put to use, up to active use, up to put passive use, ma? Up to passive use. Passive use means what, ma? Up to put to use. Are you getting the point or not? Okay, now what ఏదైతే మన ఎక్స్పెన్సెస్ మనం మిషనరీ యూజ్ చేసేంత వరకు ఇంకర్ అయ్యామో ఆ ఎక్స్పెండిచర్ మొత్తాన్ని ఏమంటాం? ద టోటల్ ఎక్స్పెండిచర్ వీఆర్ గోయింగ్ టు కాల్ ఇట్ యాజ్ క్యాపిటల్ ఎక్స్పెన్సెస్. యూ హ్యావ్ సీన్ అని అంటున్నా 40,000 యూ హ్యావ్ పర్చేస్ ద అసెట్, 1,000 ఫర్ ట్రాన్స్పోర్టేషన్, 1,000 ఫర్ ఇన్స్టలేషన్. అప్ టు హియర్, okay, now after incurring this kind of expenses, we can use the asset, we cannot use the asset, we can use this. So up to this condition is called as active use or passive use, ma? Passive use. Active use means what, ma? We need to use the particular asset even though you are not using or using, it is not necessary. Up to passive use, we have fixed or we have not fixed, ma? We have fixed. Up to this one, the expenditure, whatever the expenses we have incurred, that expenditure is called as capital expenditure or revenue expenditure, ma? Capital expenditure. What is the next one? Expenses incurred for renovation or extension of existing asset. Renovation or extension. For example, this floor, how many floors we are having now? 3 floors. Okay, now on this building we are adding one more floor. We are going to construct what, ma? One more floor. Constructing the one more floor is called as extension of a building. What is the meaning of that one? Extension. Up to 3 floors we have incurred 1 crore rupees for the construction. How much amount we have incurred, ma? 1 crore rupees for the construction. This 1 crore is called as capital expenditure, revenue expenditure. Capital expenditure. Because of incurring this 1 crore, we are going to get the benefit more than 1 year or less than 1 year? More than 1 year. But for constructing the one more floor, we are incurring 20 lakhs. We are going to incur how much, ma? 20 lakhs. Now this 20 lakh is also called as capital expenses or revenue expenses? Capital expenses. Why, ma? Because this is also, because of that construction we are going to get the benefit more than 1 year or less than 1 year? More than 1 year. But what we need to do, sir? This 20 lakhs we need to add back to the 1 crore. This 20 lakhs we need to add back to the 1 crore. This is called as extension concept. Are you getting the point or not? What did you understand? Okay, I think if you want to the more examples means, I think, do you remember the internet caves? The internet cave, one box will be there, one computer, they will put the one computer. Cabins, do you know the cabins in internet cave? Do you know or not, man? Okay, we have started the one internet cave. In that we are having only 4 cabins initially. How many cabins we are having, ma? 4 cabins. Okay, now for the 4 cabins 40,000 we have incurred. How much expenses we have incurred, ma? 40,000. First of all, this 40,000 rupees is called as capital expenditure or revenue expenditure? Capital expenditure. For that we are going to get the benefit more than 1 year or less than 1 year? But the customers are increasing day by day. Customers are increasing. What we have thought, ma? We are going to add 4 more cabins, extra 4 more cabins. For this also, how much amount we are going to incur? 40,000. So this is also called as extension. It's also called as what, ma? Extension. Or if you take the cinema hall having only 100 seating capacity, due to the Bahubali or big movies, the lot of the audience are coming to the cinema theaters. For that reason, what we are doing, ma? We are going to increase the seating capacity by way of balcony construction. Construction of balcony. Here the increasing the seating capacity is also called as extension of a building. What is the meaning of renovation? Renovation means what, ma? Old cinema halls are converted into new cinema halls. What they will do? They will do the remodeling cost. Okay, now they will incur what, ma? Remodeling. Because of the remodeling, the building value will be increases or decreases, amma? Increases. So that remodeling cost also we need to add back to the building. Are you getting the point? Extension cost is also we need to add back to the building. Are you getting the point? Next one, expenditure incurred for and decreasing the operating cost. What is the meaning of this one, sir? You have incurred certain expenditure. With the help of that expenditure, our operating cost is decreasing. What is the meaning of operating cost? Day-to-day expense. For example, have you remember the Gautam SSC film? Do you know the Gautam SSC film? Gautam SSC cinema చూడలేదా? Okay. For example, normally I think, do you know the mileage? Bike mileage. Okay na? If you are going to take 1 liter petrol, generally how many kilometers we can travel, sir? 35 kilometers. We take how many kilometers, ma? 35 kilometers for how many liters of petrol? 1 liter. What is the cost of 1 liter petrol? 120. Let us take how much, ma? 120. There is one spare part, one important spare part. By adding that spare part, our bike mileage is increasing. Our bike mileage is going to increase. That spare part value is 1 lakh rupees. The spare part value is how much, ma? 1 lakh. If we are incurring the 1 lakh rupees, our bike mileage will be increases. These are online classes, so that we are still sitting there. Otherwise, okay, what is the mileage increasing, sir? Before the spare part, we are getting how many kilometers, ma? 35. But because of that spare part, we can travel 70 kilometers. We can travel how many kilometers, ma? 70 kilometers. Before that, in order to travel a 70 kilometers, how many liters of petrol is required? 2 liters. Before this situation, before incurring of 1 lakh, you want to travel 70 kilometers means how many liters petrol is required? 2 liters. 2 liters means what is the cost? 120 into 2 is equal to how much, amma? 240. But with the help of incurring this 1 lakh, now the 70 kilometers we can travel with the help of only 1 liter petrol. That means our operating cost increases or decreases? Increases. Our operating cost, our operating cost is increases or decreases, amma? Decreases. So why the operating cost is decreases, ma? Because of this 1 lakh. So this 1 lakh is also called as which type of expenditure? Capital expenditure, because we are getting a benefit or we are not getting a benefit. So we are getting a benefit in the form of decreasing the operating cost. Okay, now if you see the Gautam SSC film, in that film there is a one there is the hero Navadip only na? Kampunesh Baba. Okay, Navadip has invented one important spare part. With the help of that important spare part, bike mileage will be increases. Okay na? So okay, forget that one. I think did you understand all the concept? First one is called as what, ma? What is the meaning of capital expenditure? An expenditure we have incurred. With the help of that incurring expenditure, we are getting a benefit more than 1 year. That too related to fixed asset. Related to fixed asset means what are the expenses we are having? First, acquisition of fixed asset, and that after acquiring the fixed asset, up to put to use whatever the cost we are incurring, that cost also we need to add back to the asset, because that particular cost is also called as what, ma? Capital expenditure, because without that cost we cannot use the asset, we can use the asset. Next, then after what, ma? Expenses incurred for renovation or extension of an existing asset. Already existing asset, for the existing asset what we are doing, either we can do the extension or either we can do the renovation. What is the fourth point? Expenses incurred. With the help of that incurring of expenses, our operating cost will be decreases. What is the fifth point? Expenses incurred and the benefit is everlasting in nature. It is any other case. You can take what, ma? Residuary cases. Residuary means what? Remaining some cases will be there. You can discuss in the problematic concept. Okay na, guys? So what is the first one, ma? Acquisition of an asset. Next one, any expenditure incurred to bring the asset a good asset. In the place of asset, if you replace the good, that expenditure is called as direct expenses. The place of asset, you are going to replace what, ma? Good means that kind of expenses is called as what, ma? Revenue expenses is called as direct expenses. It's called as what, ma? Direct. are expenses incurred for the purpose of asset to bring the present location or condition, means this kind of expenditure is called as what? Capital expenditure. Okay, location means what, ma? Our workplace or a go down. Condition means what? Passive user, active user. Passive use. What is the meaning of passive use? Ready to use. Okay, now next, expenses incurred for renovation or extension of an existing asset. Next, expenses incurred for decreasing the operating cost. Next, any other type of expenses that too related to fixed asset, with the help of that too related to what, ma? Fixed asset. For example, construction of a wall is a capital expenditure or revenue expenditure? Capital expenditure. With the help of that, we are going to get the benefit more than 1 year or less than 1 year. That too related to fixed asset or not related to fixed asset? Related to fixed asset. Okay, na? We are going to solve some sums. You can get a clarity. No problem. Okay, na? This is the meaning of capital expenditure. What is the meaning of capital expenditure? Do you know? Benefit is more than 1 year related to asset. Next one, revenue expenses. What is the meaning of revenue expenses, sir? Revenue expenses means general day-to-day expenses, salaries, rents, okay na, interest payments, commission payments, electricity expenses, advertisement expenses. These all are called as what, ma? General expenses and revenue expenses. Okay na. Normally, whatever the expenses you are going to debit in the trading and P&L account, those kind of expenses is called as what, ma? Revenue expenses. Whatever the items you are going to show in the balance sheet asset side, that kind of expenses is called as what, ma? Capital expenses. Okay na, are you getting the point? Whatever we are going to record in the balance sheet asset side, that particular expenditure is called as capital expenses. Whatever they are going to record in trading and P&L account debit side, that kind of expenses is called as what, ma? Revenue expenses. So here they are saying something. Any expenses incurred and the benefit is deriving less than or equal to 1 year. Such expenses were as follows. Thus kind of expenses can be any expenses incurred for production activities. What is the meaning of production activity? Raw material purchase. This is an expenses related to production activity. So direct expenses and indirect expenses. In the costing, I will remember the direct expense. What is the meaning of direct cost, indirect cost? Direct expenses, ma. If you see in the table, what is the direct expenditure? Wood, iron, these are all called as what, ma? Direct expenses. Okay, na? The worker worked on this table. For him, we are going to pay the wages. That one is also called as direct expenses. Okay, na? The watchman who is there in our factory is called as indirect expenses. Okay, na? Supervisor, indirect expenses. Whether here we are not going to divide any direct expenses, indirect expenses. Totally, we are going to call it as what, ma? Expenses, revenue expenses. The costing they are going to divide into two parts: direct expenses, indirect expenses. We are having we need to see this kind of expenses. No need to see. We no need to see. Okay, na? For us, we want only two types of expenses. What are the two types of expenses? Capital expenses, revenue expenses. That's all. Capital means asset. Revenue means normal expenses. Are you getting the point or not? Okay, na. Next, what, ma? Certain expenses. Any expenses incurred for day-to-day activities such as administration expenses. What is the meaning of administration expenses? So, before that, you have seen the Raju sir. Raju sir is admin department. Yes or no, ma? For him, we are going to pay what, ma? Salary. Salary paid to the Raju sir is called as administration expenses. Revenue expenses, capital expenses. Revenue expenses. Okay, na. If you are not going to pay the next month's salary, means Raju sir will work, will not work. Okay, na. Next, selling and distribution expenses means packing expenses, advertisement expenses, carriage outward. Next, financial expenses, interest. We have taken a loan, we need to pay what, ma? Interest. Next one, asset maintenance expenses, depreciation expense. What is the asset maintenance expenses? Example, depreciation. Non-cash expenses is also a depreciation. You can take like that. Okay, na? So these all kind of opportunity cost, those all things will be come into the costing concept. Okay, now this is an accounts. Till now, what you are understanding, ma? What is the meaning of capital expenses and what is the meaning of revenue expenses? Okay, now any expenditure related to asset means it is called as capital expenditure, and other than capital expenditure is called as what, ma? Revenue expenditure. But we cannot conclude like that. because there is another concept called as what ma? Deferred revenue expenses. What is the meaning of deferred revenue expenditure, sir? For this type of expenses also, the benefit we are going to get more than 1 year, but not related to fixed asset. Okay, na? We are incurring certain expenses, we are going to get the benefit more than 1 year. Related to fixed asset means capital expenditure. Not related to fixed asset means revenue expenditure. What is the, if you give the example, sir, I will give you example. What is the meaning of deferred revenue expenses? Any expenses incurred which are in the nature of revenue, but the benefit is more than 1 year. Benefit will be more than 1 year. What is the normally first initially we have discussed ma? If you get the benefit more than 1 year means it is called as capital transaction. But here we are going to get the benefit more than 1 year, but the nature is what ma? Revenue. The nature is what ma? Revenue. What is the meaning of nature revenues are not related to fixed asset? Not related to fixed asset. Are you getting the point? We are incurring the expenses. Okay na? Benefit more than 1 year. But related to fixed asset means it is called as capital expenditure. Not related to fixed asset means it is called as deferred revenue expenses. Are you getting the point or not? Sorry. If you see the underwriting commission, what is the meaning of underwriting commission, sir? Do you know the underwriter? Okay. Do you know the minimum subscription? 90%. Minimum amount of subscription we need to get. Okay, leave it. Imagine one company. Imagine what ma? One company. What the company will do ma? If they want the capital, what they will issue? They will issue the shares. Okay na? We can purchase the shares or we cannot purchase the shares. Where we can purchase the shares? Vegetable market. The vegetable market we can purchase the vegetables. In the share market we can purchase the shares. What are the share markets? How many types of share markets are there in India? Nifty 24. Okay, what is the first one? NSE, BSE. SEBI is a regulatory body. Okay, sufficient. Okay, cool. We're having two types of stock exchanges, NSE, BSE. NSE means National Stock Exchange. NSE, BSE, National Stock Exchange and Bombay Stock Exchange. Okay na? So in these stock exchanges we can purchase the what ma? Shares. Okay na? But if any company is going to issue the shares, for example, the company issuing for 1 crore rupees. How much amma? 1 crore. In this 1 crore, the public need to purchase how much amma? 90%. 1 crore into 90% means how many lakhs? 90 lakhs. Company need to accept for how much amount? Company need to subscribe for 90 lakhs. Otherwise, we cannot issue the shares. Otherwise, we can issue the shares or we cannot issue the shares. We have gone from the public for asking the amount of rupees how much? 1 crore. The public should give minimum how much? 90 lakhs. Public give minimum how much? 90 lakhs. Public giving 90 lakhs means 90% of people they are trusting us or not trusting us. They are trusting us. Okay now, without 90% trust, you should not give the shares. This is called as minimum subscription. This is called as what ma? Minimum. So there is a risk, there is no risk. There is a risk. Okay now, public may accept or may reject. Okay now. Generally we are going on proposing to one goal means that one goal only not accepting. No ma. But how the company will going to get the 90%? It is a difficult task. No man. అర్థమవుతుంది నేను చెప్పేది. 90% పీపుల్ యాక్సెప్ట్ చేస్తున్నారా చేయట్లేదా? మనం వెళ్ళి ఒకరికి ప్రపోజ్ చేస్తేనే వాళ్ళే యాక్సెప్ట్ చేయొచ్చు లేదా ఏం చేయొచ్చు, రిజెక్ట్ చేయొచ్చు. అట్లాంటిది కంపెనీ ఇప్పుడు ఎంతకు వస్తుందమ్మా? 1 crore rupees they're asking the public. Okay na, public want to give minimum how much? 90 lakhs. Otherwise the shares should be issued or should not be issued? Should not be issued. There is a risk, there is no risk. There is a risk. Oh no, public should give minimum how much? 90 lakhs. Okay na. But in order to cover this risk, in order to cover the risk, underwriter will be there. Who will be there ma? Underwriter. What the underwriter will do ma? He will say what? Okay, public company, you go to the public and you can ask the amount from the public. Okay na. After asking the amount to the public has given only 50 lakh. How much amount they are giving ma? 50 lakh. Remaining 40 lakh who will give ma? Underwriter will give. Remaining 40 lakh who will give? The underwriters. Okay, now for him what we need to pay? We need to pay the commission. Okay, na ma. But how much amount we need to pay ma? We need to pay what ma? Commission. Why we need to pay the commission? He is taking a risk, he is not taking the risk. He is taking a risk. Here the underwriting commission is an expense. Yes or no? Underwriting commission we need to pay to the underwriter. This is an expenditure, this is an income. Expenses. With the help of that expenses, we are going to get the benefit more than 1 year, less than 1 year. More than 1 year. But related to fixed asset? No. Related to capital, this one. Related to liability. So that for that reason, this kind of expenses is called as what ma? Deferred revenue expenses, normal expenses. Deferred revenue expense. Related to fixed asset means capital expenses. Are you getting the point or not? Who is the underwriter? He will cover the risk of minimum subscription. Okay, now we have asked the public how much amount we are collected. 50 lakhs. How much amount we need to collect? 90 lakhs. For how much amount we have collected? Only 50 lakhs. Remaining 40 lakhs risk will be bear by whom? Underwriter. For him we need to pay the consideration or no need to pay the consideration? We need to pay the consideration. The consideration what we are going to pay the underwriter is called as underwriting commission. For our point of view, that underwriting commission is called as expenses. What kind of expenses? Deferred revenue expenses. Are you getting the point or not? Okay. Next there is a premium on issue of shares and debentures. Okay, now you can get to know this concept in the company corporate accounting group 2 paper number 10. Okay, now this is only a difficult task because why ma? You need to understand. CMA foundation there is a syllabus called as company accounts, but in CMA foundation there is no concept related to company accounts. So for that reason you don't know anything related to the sheets. That's all. It is a simple task. Did you get the point? Who is the underwriter? What is the underwriting commission? Underwriting commission is a deferred revenue expenses or normal expenses? Deferred revenue expenses. Normally in our CMA foundation, we have learned that what ma? Advertisement, research and development, preliminary expenses, pre-operating expenses and employee training cost. These all the cost are called as deferred revenue expenditure we have learned in the CMA foundation. Okay, nama. Advertisement is a normal revenue expenses, deferred revenue expenses. You have discussed in the CMA foundation, but in the cmainter, as per which standard ma? Standard number 26, accounting AS 26. What is the meaning of AS 26, sir? Intangible assets. Accounting for a intangible assets. As per this standard, these 5 expenses are not deferred revenue expenditure. These 5 expenses are not deferred revenue expenses. Normally, these expenses are deferred revenue or not a deferred revenue? Deferred revenue. Why, sir? We are going to give the advertisement. Okay, now in the World Cup matches, we have given the advertisement. For that advertisement, we are going to get the benefit more than 1 year, less than 1 year? More than 1 year. Do you remember the Denver? Mahesh Babu will come and he will spray. Denver, my scent of success antaడు. అవునా సార్ నమ్మా? Yes. In that situation, we are remembering that advertisement and we are going to purchase the Denver spray scent. Benefit is there or not there? Yes. More than 1 year will be there, less than 1 year? More than 1 year it will be there. So deferred revenue expenses are normal expenses. Deferred revenue expenses, we are incurring that this kind of expenses for the purpose of sales, not for the purpose of fixed asset. Okay, now even though not for the purpose of fixed asset, we are getting a benefit more than 1 year, less than 1 year? More than 1 year. But normally these 5 are called as what ma? Deferred revenue expenditures only. But in cmainter, we need to classify these 5 expenditures as revenue expenses. Even though they are deferred revenue expenses, we need to classify it as what ma? Revenue or deferred revenue? Revenue. Okay, na? So if you have seen the R&D means what ma? Research and development. Okay, na? Research and development cost. This type of cost is also get benefit more than 1 year, less than 1 year? More than 1 year. Okay, na? At the time of Corona, okay, na? They have invented the Covishield, Covaxin. For the invention, in order to invent the Covishield and Covaxin, what we have needed ma? We need a research and development cost. After incurring the research and development, we have invented one vaccine. For that, we are getting a benefit, we are not getting a benefit. We are getting a benefit. The benefit is more than 1 year, less than 1 year? More than 1 year. Normally this research and development cost is for a product, is for a fixed asset. Research and development cost we are incurring for the product, for the fixed asset, for the product. That means this is called as deferred revenue expenditure and normal capital expenditure. Deferred revenue. Even though this is a deferred revenue expenditure, we need to classify it as what ma? Revenue expenses. So remember these type of points they will ask in the question. And in order to get the confused. Okay na? Advertisement expenses is a dash expense. Revenue expenses are deferred revenue expenses are revenue expenses. Normally that the type of expenditure is called as deferred revenue expense. But even though that is a deferred revenue expenditure, as per which standard ma? 26 AS. As per AS 26 intangible assets, this type of expenditure is called as revenue expenses. Next one, what is the meaning of preliminary expenses, sir? Preliminary means before incorporation of company, if there any type of cost is called as a preliminary expense. Before incorporation, after incorporation, amma. What is the meaning of incorporation? Starting. What is the meaning of incorporation? Starting. What is the meaning of employee training expenses? Employee training means what, ma? Have you seen your brother and sister? I think so. At the time of many software industries, okay, at the time of getting the job, they will get how much amount, ma? 20,000, 30,000, small amounts. Okay, na? Why they will give the small amounts? Because at the time of joining into the particular job, directly they can do the work. They cannot do the work. Companies what they will give, ma? They will give the training for initial 5 to 6 months. Then after what, ma? After completion of training, they will give the more number of salaries. Okay, na? But they have trained the employer, they have not trained the employer. They have trained the employee. For training purpose, after training, we are getting a benefit, we are not getting a benefit. We are getting a benefit. This kind of expenses is also called as deferred revenue expenses. Even though this is a deferred revenue expenses, for our sake, as per 26 AS, what is that kind of expenses, ma? Revenue expenses. Please remember how many points? 5 points. What are the 5 points? Advertisement, research and development, preliminary expenses, pre-operating expenses, and employee training cost. Okay, na? Finally, these 5 expenses are called as revenue or deferred revenue. Revenue. Normally, what is the nature of these 5 expenses? Deferred revenue. Okay, na guys. So now we have discussed all the 3 meanings. What are the 3 meanings? Capital expenditure, revenue expenditure, and deferred revenue expenses. What is the meaning of capital expenditure in one liner? Benefit more than 1 year related to fixed asset. Benefit more than 1 year not related to fixed asset means it is called as deferred revenue expenses. What is the meaning of revenue? Other than capital, other than deferred revenue, it is called as a revenue expense. Normal daily day-to-day expenses is called as revenue expenses. Next, we are going to see what ma? Accounting treatment for the capital expenditure, revenue expenditure, and deferred revenue expenditure. What is the next concept? Accounting treatment for the capital expenditure, revenue expenditure, and deferred. Okay, now you can say, what is the accounting treatment for the capital expenditure, ma? Capital expenditure means what, ma? Related to asset, related to other than asset, related to asset. That means it should be disclosed under the asset side of balance sheet. Okay, it should be disclosed under the asset side of balance sheet. What is the example? Acquisition of an asset. 40,000 we have incurred. That 40,000 we need to disclose in balance sheet, P&L account, balance sheet. After that, what ma? There are remaining 4 points. What are the remaining 4 points? Next one. Expenditure incurred to bring the asset into the present location and condition. Okay, na? Those expenses we are incurring for already existing asset. Now only we are purchasing. Already existing asset we are going to incur. Okay, at that point of time, what we need to do, ma? Add it to the concerned asset which is already disclosed in the balance sheet. Okay, nama already asset ఉంది మనం ఖర్చు పెట్టాం అనుకోండి ఏం చేస్తాం? We are going to add back to that particular asset. Or now only we are purchasing a new asset means we are going to disclose separately. We are going to disclose what ma? Separately. For example, we are only having what ma? Camera, laptop, AC, air conditioner we are having. But in the business, now only we are purchasing a new machinery. Another machinery. Okay, we are going to disclose separately, or we are going to add back to the asset AC. Need to disclose it separately. Are you getting the point? Until now we are having what ma? Camera, laptop, and air conditioner we are having. These 3 assets we are having. Now we are going to purchase the fans. Okay, we need to disclose separately, or we need to add back to the air conditioner. We need to disclose separately. Already existing asset we are going to incur any expenses means we need to add back to the existing asset. In the case of renovation, extension, already building will be there, building will not be there. Already building will be there. For that building, we are going to what, we are going to do the extension. The extension cost, we are going to add back to the asset. We need to disclose separately. We need to add back to the asset. In the case of renovation also, same logic, different logic. Same logic. In the case of expenditure incur, operating increases also. Operating expenditure decreases also. That case also what, we need to add back to the asset. Are you getting the point? Either disclose separately or what, add back to the existing asset in the balance sheet. Which side? Asset side. Next one, what is the accounting treatment for the revenue expense? Revenue expenditure means what, day-to-day expenses or what? Day-to-day expenses. It should be recognized in the which side, debit side of either trading or profit and loss account. Next, the important point is deferred revenue expenses. Very, very important. Okay, na sir. Why they are further classified into the deferred revenue means deferred revenue expenses are having the expenditure large amounts. Okay, even though they are not related to fixed asset, these kind of expenses will have the large number of amounts or small number of amounts. Large number of amounts. Example I will take, no problem. If you see, this is a P&L account. The P&L account gross profit will be on which side, amma? Debit side or credit side? Credit side and debit side. This is a which account? Profit and loss account. And imagine 1 lakh. Imagine how much, amma? 1 lakh. Expenses we are having how much? 10,000. Okay, now incomes we are having 30,000. What is the net profit? 1 lakh 20,000 is called as net profit. Imagine suddenly we are incurring underwriting commission. Underwriting commission, okay, how much amount we have not acquired from the public? 50 lakh. How much amount we have acquired? 50. Okay, how much amount is going to bear the underwriter? 40 lakh. Even though if we are going to bear the 40 lakh, but we need to pay the commission on 1 crore. We need to pay the commission on how much, 1 crore. 1 crore into, if you take the 10% also, how much amount, 1 crore, 10 lakhs. If you write here the 10 lakhs directly, you are getting a loss, you are getting a profit, sir. Get a loss. How much amount of loss, Nearly 8 plus lakhs, 9 plus lakhs. Nearly how much amount of loss we are getting? 9 lakh. 8 lakh 80,000. Huge loss, small amount of loss, huge loss. In our business, we are getting only profit of how much? 1 lakh 20. In this situation, you are directly writing 10 lakh in the debit side of P&L account. We are going to get what, losses. Yes or no, What is this type of expenses? This is also a normal expenses only. But why we are going to categorize it as deferred revenue? For the accounting treatment purpose. For the accounting treatment. Now this 10 lakhs, we are going to divide it into the 5 installments or 4 installments. Our wish. 5 or 4. I think we are imagining that we are going to divide it into 4 installments. 4 means 10 lakhs divided by 4 means how much we will get? 2.5, 2.5, 2.5 and 2.5. What we will do, in the first year we are going to transfer only how much? 2.5 in the P&L account. 2.5 in the P&L account. And remaining how much amount will be there? 7.5. How we will get, 2.5 plus 2.5 plus 2.5. What is the total amount now? 7.5. This 7.5 we need to show in. Where we need to show, we need to show in asset side under the head of what, non-current assets. Under the head of what, non-current asset. Are you getting the point? Deferred revenue means what, combination of revenue expenses and combination of capital expenses. Capital expenses means we need to write directly where, balance sheet. Okay, revenue means P&L account. But in the deferred revenue expenses, what we are going to do, we are going to do the both type of accounts, accounting treatment. What, some amount we are going to record in the P&L account, debit side, and some amount we are going to record in the balance sheet, asset side. To the extent of unamortized portion should be disclosed in the asset side of balance sheet under the head of what, other non-current assets. Liability enduku vachindi? Already we have paid prepaid expenses. Already we have paid. We need to paid అయితే ఏంటది అవుట్స్టాండింగ్. ఆల్రెడీ ఏం చెప్తున్నా, యూ హ్యావ్ పెయిడ్ అని చెప్తున్నా, ఎంత పే చేసా అని చెప్తున్నా, 10 లక్షలు. మళ్ళీ వీ నీడ్ టు పే అంటావేంట్రా? ఓకేనా గైస్? Instead of writing totally 10 lakhs into the P&L account at a time, what we are doing, we are bifurcating into the 4 installments. Or if you want, you can take how many installments? 5. No problem. Okay na? Whatever the amount you have recorded in the P&L account, how much 2.5. This is called as amortization. This is called as what amortization. What is the amount you are recording in the balance sheet of 7.5 lakh? It is called as unamortization. It is called as what unamortization. Amortization means amount recorded in the P&L account. Unamortization means amount not recorded in the P&L account, recorded in the balance sheet. Are you getting the point or not till now? Is there any doubts? Next year, what we will do, again in the next year, already 2.5 lakh transfer to P&L. Okay, leave it. Again in the next year, what we are going to do? This 2.5 lakh we are going to record in the P&L account. And how much amount we are going to disclose in the balance sheet? 5 lakh. And the next year, 2.5 in the P&L account, 2.5 in the balance sheet. And the last year, 2.5 in the P&L account, 0 amount in the balance sheet. Like that we need to do. Are you getting the point? First year, how much amount in the P&L account? 2.5. How much amount in the balance sheet? 7.5. In the next year, second year, P&L account how much? 2.5. And balance sheet is the balance how much? From the 7.5, 2.5 in P&L, 5 in balance sheet. And again, this 5, 2.5 in P&L, 2.5 in balance sheet. Again, this 2.5 will be transferred to P&L account, and then balance sheet is 0. Are you getting the point? Every year we are going to transfer 2.5, 2.5, 2.5, and the balance in the balance sheet will be decreases or increases? Will be decreases. The amount you have recorded in the P&L account is called as amortization. The amount you have recorded in the balance sheet is called as unamortization. This is the accounting treatment for the deferred revenue expenditure. Why we are doing like that? Huge amount of expenses, small amount of expenses, huge amount of expenditure. You are going to write the huge amount of expenditure in P&L account. You are going to get a huge losses. Okay na? After disclosing the huge losses in the financial statements, no one, we are not interested to invest in our company. Why even though this is a actually we have incurred unexpectedly we have incurred the huge amount of expenditure. Okay na? If you show the huge amount of expenditure, we are going to get the huge losses, and no one are interested to invest in your company. For that reason, what we are doing, we are postponing the recognition of expenses into the P&L account. So for that reason, we have divided a further expenses called as what deferred revenue expenses. It's called as what deferred revenue expenses. Is there any doubts? Okay na? I will remember the concept. In assets are how many types? 2 types. What are the 2 types? Current assets, non-current assets. In the current assets, we are having 3 categories. We are having how many categories? 3. Liquid assets, non-liquid assets, and third one is called as fictitious asset. I remember the concept. Did you remember that one? Which asset Fixed asset, current asset. You know, fixed asset is classified into how many types? 3 types. First one is called as tangible, intangible, vesting assets. And then current asset is classified into how many types? 3 types. Liquid asset, non-liquid asset, fictitious asset. This fictitious asset only is called as an unamortized portion. Amortized portion, unamortized portion. This is created by the organization. These assets are created by the organization. At that point of time, I have told you that I will discuss in some other point of time what is the meaning of fictitious. What is the meaning of fictitious Anything created by the organization for the purpose of what not a real asset. Okay na? That one is an asset no, not a real asset, but it is created by whom? Organization. Because of what deferred revenue expenses accounting treatment. I think did you get the point of fictitious asset? Is there any doubts? Liquid means what Within 3 months we need to convertible into the cash. Non-liquid means what ma? More than 3 months and within 1 year. Okay na? Tangible means which we can see and touch. Intangible means which we cannot see and touch. Vesting assets means created by the nature. It's called as examples: oil well, coal mines, etc. So I think, did you get the point related to capital expenses, revenue expenses, and next one what ma? Deferred revenue expenses. Is there any doubts? Is everything fine? Or once again I need to repeat? Okay. Anyone in the class? Can you say the capital expenses definition? We're having how many points? How many points we're having? 5 points. What are the 5 points? Acquisition of an asset, bringing the asset into the current location or condition. Next, existing asset extension or renovation. Next, expenses incurred for decreasing the operating cost. Next, any other expenses related to the fixed asset. This is called as capital expenditure definition. You need to remember, no need to remember? No need to remember. You should understand the concept. Okay, nama. They will give one transaction. We need to identify just what ma, whether that one is a capital expenditure or revenue expenditure. That's all. Okay, na. But you need to write the reason, one-liner reason why it was capital expenses, why it was revenue. At that point of time, this matter is required. Okay, nama. So, one note trial, one you can write on your own. Are you getting the point? Can I go for receipts? Receipts means what ma? Incomes. Incomes are classified into how many types, sir? Only 2 types. Receipts are classified into how many types, amma? 2 types. First one is called as capital receipt and revenue receipt. What is the meaning of capital receipt, sir? Non-recurring nature. Non-recurring means non-repetitive. Non-recurring means what, ma? Non-repetitive. What is the meaning of revenue, sir? Recurring nature. What is the meaning of recurring nature? Repetitive in nature. Okay, now, for example, income na, okay, sale of goods. We are going to do daily or once in a year. Daily we will do the goods, we will sell the goods. So recurring or non-recurring? Recurring. That means that kind of receipts is called as revenue receipts. Nothing, receipt is nothing but incomes. Receipts are nothing but incomes. How many types of incomes are there? 2 types. Capital income, revenue income. But we should not call it as capital income and revenue income. We need to call it as capital receipt and revenue receipt. What is the meaning of revenue receipt? Recurring nature. Daily, whatever the amount we are going to record in P&L account credit side, whatever the amount we are going to record in P&L account, which side? Credit side is called as revenue receipt. In the P&L account debit side you have recorded means P&L account debit side record cheste emannam revenue expenditure. P&L account credit side record cheste revenue receipt. Okay na. Normal incomes are called as a revenue receipts. Okay na. What is the meaning of capital receipts, sir? Recurring nature or non-recurring nature? Non-recurring nature. For example, loan taken. Recurring or non-recurring? Daily will take the loans or once in a year? Once in a year. This is called sale of asset. Sell the asset. You will receive the amount. We are not going to receive the amount. We are going to receive the amount. But both the transactions are recurring nature or non-recurring nature? Non-recurring nature. This type of transactions are called as capital receipt or revenue receipt? Capital receipt. Generally, capital receipt means liability. Generally, capital receipt means what, ma? Liability or decrease in the value of asset. Liability or decrease in the value of asset. Liability means where we need to disclose in the balance sheet and the P&L account. The balance sheet, which side we need to disclose the capital receipt, liability. Generally, receipt means we can take it as assumption what, my asset. No, here the capital receipt means it is not an asset. It is a liability. Increasing of liability or reducing of asset. Super. Next, revenue receipt means what, ma? Normal incomes is called as a revenue receipt. Revenue expenditure means what? Normal expenses are called as a revenue expenses. What is the capital expenditure, ma? Capital expenditure means asset. Capital expenditure means asset. Revenue expenditure means normal expenses. Capital receipt means liability. Revenue receipt means what, ma? Normal incomes. Normal incomes. Recurring means revenue. Non-recurring means capital. That's all. Are you getting the point? These are the meanings. Now, what is the accounting treatment for the capital receipt? It should be disclosed in the liability side or should be reduced from the asset side of the balance sheet. It should be disclosed in the under the liability side of balance sheet. That means what is the example? Loan Taken a loan, repaid a loan, taken. Next one, what ma? Decreasing from concerned asset which is disclosed in the asset side of balance sheet. What is the example here? Sale of asset. Are you getting the point? Next, what is the accounted inward for the revenue receipt? Revenue receipt, where we need to disclose. It should be recognized in the credit side, either in the trading account or P&L account. So, what is the meaning of capital expenditure ma? Asset or liability? Asset. Revenue expenditure means normal expenses. Capital expenditure means, capital receipt means liability. Revenue receipt means incomes, normal incomes. Okay, in certain situations, the capital receipt may be changes to revenue receipt, or revenue receipt may be changes to capital receipt, depend upon the situation. Normally, building is an asset. Normally, building is an asset. We are doing a real estate business means building is called as revenue. Okay, now purchase of building is an asset. Capital expenditure, revenue expenditure. Capital expenditure. Normally, purchase of building is called as what ma? Capital expenditure. We are doing the real estate business means the same transaction will become a revenue expenditure. Are you getting the point or not? This is only the situation. If you see the next one, the factors that are affecting the classification of capital and revenue nature. First is the nature of business. Purchasing a motor vehicle. Normally, purchase of motor vehicle is called as what ma? Capital expenditure. But the motor vehicle is purchased by a dealer. Dealer means what ma? He will purchase and he will sell the motor vehicles. So resale objective. So for him, it is called as what ma? Revenue expenses. So next one, generally repairs of an asset. Generally bike servicing will be there. If you purchase the bike, they will give you the first service, second service, third service. That service, you will incur certain expenses, but the efficiency will be increases or will not be increased. Will not be increases. Servicing cost is called as a revenue expense. Purchase of motor vehicle is called as capital expenditure. Repairs is called as revenue. But because of some repairs, our efficiency may increase. Okay, now if the efficiency increases means it is called as capital expenditure. If the efficiency not increases means it is called as revenue expense. So repairs, if the efficiency increases means it is called as capital expense. If the efficiency maintenance in a same level, it is called as revenue in nature. Next, recurring and non-recurring. Recurring means revenue, non-recurring means capital. So these are the some of the factors we need to decide. Are you getting the point? Now the total discussion we have completed now. Now we need to discuss the questions. Then only you can understand more effectively. Okay, na? Now we have learned the concept, that's all. You don't need to mug up anything. You don't need to do. You need to identify whether it is a capital expenditure or revenue expenditure or deferred revenue expenditure, or what we need to do ma? Capital receipt or revenue receipt. They may ask you the accounting treatment. You know, capital expenditure means asset should be disclosed in the asset side of balance sheet or add back to the particular asset. Next, revenue expenditure means normal expenses. It should be disclosed in the debit side of either trading account or P&L account. Deferred revenue means what ma? Amortization and amortization. Capital receipt means, first of all, capital receipt means liability. It should be disclosed in the liability side of balance sheet or reducing from the particular asset in the asset side of balance sheet. Next one what ma? Revenue receipt. Revenue receipt means nothing but incomes. It should be disclosed in the credit side of trading or P&L account. Okay, now shall we start the discussion of problems? Okay, see the first one. State whether the following are capital, revenue or deferred revenue expenses. We need to identify which one is a capital, which one is a deferred revenue or revenue. Carrying of 7,500. Carriage of rupees how much amma? 7,500. Spent on a machinery purchase and install. It is called as, by as per which point you are going to call it as capital expenses? First point or second point? Second point. Okay, now expenditure incurred to bring the asset a good amma, to bring the asset into the present location or condition. So carriage of rupees 7,500 paid for the machinery purchased and installed should be treated as what ma? Capital expenditure. Next one. Heavy advertisement cost, heavy advertisement or small advertisement, any advertisement cost is called as revenue expense, even though it is a deferred revenue expense as per 26 AS para 56. So this is called as revenue expenses. Advertisement expenses for launching a new product, దేనికైనా సరే, for anything, for launching a new product, for sale of asset or any purpose, advertisement expenses is called as the company should be treated as what ma? Revenue expenses as per 26 AS. Intangible assets. Next one, rupees 200 paid for servicing a company vehicle, including 50 rupees paid for what ma? Changing the oil. Okay na, both are what ma? Just normal repairs. Okay na, this is performance increase and they have given any performance increases? No, that means what ma? These are normal expenses. So rupees 200 for servicing of oil changes should be treated as revenue expenses. Construction of a basement, costing how much amma? 1,95,000 for the factory premises. Okay now we are going to construct a factory premises. For that the basement we have incurred what ma? 1,95,000. This basement cost is called as capital expenditure. We are getting a benefit more than 1 year, that too related to fixed asset. So construction cost of basement should be treated as what ma? Capital expenses. So these are the small questions they will give. I will show them an examination question also. Okay na, please wait. Next one, state whether the following are the capital or revenue expenses. Paid a bill of rupees how much ma? 10,000 of Mr. Kumar, who was engaged in the erection engineer. Erection means installation. Erection means what ma? We have paid to whom? Mr. Kumar. Who is Mr. Kumar? He is a installation engineer. That means what ma? We are incurring a installation expenses. Okay na, to set a new automatic machine costing how much? 20,000 in the new factory site. So installation expenses, it is nothing but what ma? Expenditure incurred to bring the asset into the present location or condition. So that means this is called as capital expenditure or revenue expenditure? Capital expenditure. Who is Mr. Kumar? Erection engineer. Without him we cannot install that particular new automatic machine. Are you getting the point? So without installation we can use or we cannot use? We cannot use. Up to passive use means what ma? Up to put to use. The cost incurred we need to add back to the asset. Okay na, that means what is the total cost of the mission? 30,000 or 20,000? 30,000. Purchase of mission is also called as capital expenses. Installation expenses 10,000 is also called as capital expenses. What is the total expenses? 30,000. Incurring 26,000 expenditure on varied what ma? Advertisement campaigning under a yearly on a regular basis due to the peak festival season. Okay na, due to the peak festival season we have given advertisement. Advertisement means what? Revenue or capital? Revenue. Advertisement expense after listening Ramayanam. Advertisement expenses during the peak festival season should be treated as revenue expense. Expenses incurred for the erecting a new machine should be treated as capital expenses. Next one, in accordance with the long-term plan of providing a well-equipped labor welfare center, spent how much? 90,000, being the budget allocation of the year. What they are doing ma? On long-term plan. What is the long-term plan? To providing a well-equipped welfare service center. What they are thinking ma? They are thinking to start one service center. For that service center we require a plan. For that plan they have paid how much? 90,000. Without the plan we can do the construction, we cannot do the construction. We cannot do the construction. So that this 90,000 is called as capital expenses. Are you getting the plan? We are planning to start one service center, labor welfare service center. For that, in order to construct the labor welfare service center, we need some plan. Without plan we can start the construction, we cannot start the construction. We cannot start the construction. For the plan, who will be there ma? Civil engineer. For that civil engineer, how much amount we have paid? 90,000. This 90,000 is called as capital expenditure or revenue expenditure? Capital. The expenses incurred for labor welfare service center should be treated as capital expenses. Related to fixed asset means capital expenses. Not related to fixed asset means deferred revenue expenses. Are you getting the point? Is there any doubt? Next one. This thing you need to say. An extension of a railway track in a factory area. What is the meaning of this one? In a factory, already we are having a track. Already we are having what more track. For the track, again we are going to extend. Capital expenditure. We need to add back to the particular asset or we need to disclose separately. We need to add back to the particular asset. Wages paid to mission operator. Wages paid for installation of machinery. Wages paid to mission operator. Mission operator means what? Ma daily labor. Wages. Revenue expenses. Installation cost of a new production mission. Installation is called as capital expenses. Material for extension of a foreman's office in a factory. Okay, now one office we need to extend. For that we have purchased a material, raw material, bricks, sand, etc. This is called as capital expenditure. Rent paid for the factory. Revenue expenses. Normal rent paid for the factory. Payment for computer time to operate a new store control system. Sir, computer time means for the operator, whatever the amount we are paying, that thing we will measure in the computer time. Example, control system means what ma? We need to maintain accounts. Otherwise, the control will be there, will not be there, will not be there. We can maintain the accounts in the form of tally or in the form of SAP, the form of expense. There are so many softwares you are having. The software maintenance, okay, now we need to pay what ma? We need to pay the salary for the software maintainer. Okay, now the salary payment to the software maintainer is called as nothing but computer time. Computer time means what ma? Based on time worked on the computer, we need to pay the salary to that particular employee. So this is not computer time means please take it as a base for salary. Same like a salary, we are going to give the amount. Are you getting the point? Or otherwise, payment for computer time to operate. Operate means what ma? What they are operating? They are operating a new store control system. There is one control system. For that control system, we need one operator. For that operator, we are paying what ma? Computer time means salary. Computer time means what ma? Salary. Normal salary payment is called as revenue expenses. Wages paid to own employees for building the foreman's office. Normal wages payment to employees for the purpose of production means it is called as revenue expenses. But we are paying wages only. Our employees only. But what purpose we are paying the wages? For construction of a foreman's factory. That means what ma? It is a capital expenses or revenue expenses? Capital expenses. Even though they are our employees, even though they are working for us, for what purpose they are working? They are working for the production of a good, for the construction of a building, for the construction of a building. So that this is called as capital expenditure or revenue expenditure. Capital expenditure. So expenses incurred for extension of a railway track is called as capital expenditure. Wages paid for a mission operator is called as what ma? Revenue expenses. Installation cost is called as a capital expenditure. Material for extension of a foreman's factory, it is called as capital expenditure. Rent paid to the factory, it is called as revenue expenses. Next one what ma? Payment to the computer time, it is called as revenue expenditure. Wages paid for the building, foreman's, should be treated as capital expenditure. Is there any doubts? Until now we have completed how many questions? 3 questions. Is there any doubts? Okay na maniku? What is your name? Is okay na? Next, for each of the cases numbered below, indicate whether the income or expenses is a capital or revenue. What we need to identify? Capital revenue or capital expenses? We need to payment to wages to one own employees for building of a new office extension. It is called as capital. Regular hiring a computer time. Computer time means salary. It is called as revenue expenses. The purchase of a new computer for use in the business, capital expenses. The use of motor vehicle, hide for how many years? 5 years. But the payment at every 6 months, it is called as deferred revenue. Normal expenses. We are paying what? Every 6 months we are paying the rent to the motor vehicle. So normal rent payment to the motor vehicle is called as revenue expenses. Which expenses? Revenue. State with reasons whether the following is a capital or revenue expenses. Freight and carriage on a new machine of rupees how much? 150, and erecting charges how much? 50. So total 600. Total 650 is called as capital expenditure or revenue expenditure? Capital expenditure. What we need to do? We need to add back to the particular asset. Fixtures of a book value is how much? First of all, what is the meaning of fixtures? Furniture and fixtures. We can call it as. What is the meaning of fixtures? Bolts, nuts. Furniture means which are movable is called as furniture. This table is called as furniture. Fixtures means fans which are fit. ACs is called as. After completion of class, I am seeing for when the time will be completed. Okay, after that I will talk to you personally. Okay, fixtures book value is how much? 500. Sold for how much? 1600. So whether we are getting a profit or loss? Loss. This type of loss is called as capital loss. This type of loss is called as what? Capital loss. And a new fixture of the value of 4000 were acquired, and the cottage expenses how much? 100. What is this type of expenses? Capital. What is the total capital expenditure? 4000 plus 100. Only 4000. 4000 plus 100. What is the meaning of 2000 minus 1600? Capital loss. 2000 minus 1600 is called as a capital loss. Okay, now you can understand this one easily. Wait a second. I will change the colors. Up to here is one transaction. Okay, now up to here is what? One transaction. From here to here, this is a another transaction. Okay, now up to here we are getting what? Up to here we are getting a capital loss. Up to here we are getting a capital expenses. Okay, now I am reading an answer. Loss of one sale of fixtures how much? 900 should be treated as capital loss or normal loss amount. The cost of the new furniture and carriage thereon should be treated as what? Capital expenditure. So because the fixtures will be used for a long period, so the cost of new machinery will be how much? 4100. Are you getting the point? Is there any doubt? Next one. A sum of rupees how much? 400 was spent for painting the factory. Why? I will use the Asian paints. Nerlotech. Value to the asset. Benefit more than 1 year, less than 1 year. More than 10 years will be there. Sir, even though painting cost will be more number of expenditure, but the benefit will be less than 1 year, or with the help of that painting, they will not provide any efficiency. They will not provide any efficiency. Okay, now have you seen the Desamudru film? Desamudru, okay. In that one dialogue, Hansika will say, what it's all matti, will say. 8200 spent on repairs before using the second-hand car purchased recently to put it in a usable condition. Now, why? Question only there. Okay, now 8200 also normal repairs only, but without putting that expenditure, we can use the asset, we cannot use the asset. As used. State the nature of capital and revenue of the following expenses which were incurred by the Vedanta and Co. during the year ended 30th June 2021. Okay, read on your own and try to think whether it is a capital or revenue, and then we can solve. Completed, Amma? Sir, here first point already we have no. Okay, na? 350 is spent for a repairs of second hand, the repeated once again. Okay, na? Next one. A sum of rupees 30,000 was paid for the compensation to the two employees who were retrenched. What is the meaning of retrenchment? Retirement. Like retirement, this is called as a retrenchment. We need to pay the compensation. Retrenchment means what? Means before completion of work time, we said us to resign. Okay, nama, even though they are having a time to work. Before the age itself, what we are going to give, we are going to give the termination. Okay, na, this is our loss. We need to bear the loss. Sir, nama, for that reason, what we are paying, compensation. Are you getting the point or not? Normally, the age of retirement is 60 years, but the person is having 54 years. What we are saying, imagine these are our relatives, means what we will do. Okay, sir, please take a rest. We will compensate you, because still how many working years are there? 6 years. Even though 6 years are there, what we are going to give salary as a compensation. So this is a normal compensation. This is not any capital expenses or deferred revenue expenses. This is normal salary. Yes or no? Compensation paid to the employees will be disclosed in the P&L account debit side. So this is called as revenue expenses. This is the most important. You may get confused. You can write capital expenditure. It is not a capital expenditure. It is a normal revenue expense. Are you getting the point? Next one. Rupees 150 was paid in connection with the carriage of goods purchased. Sir, here carriage of goods of asset goods. That means it is called as revenue expenses. Direct expenses or indirect expenses? Direct expenses. Purchase of good. Carriage inward, carriage outward. Carriage inward. So it is called as revenue expenses. Rupees 20,000, a custom duty, is paid on import of machinery for modernization of a factory production during the current year of rupees how much? 60. During the current year, and 6,000 is paid on import duty for purchase of raw material. How many transactions are there here? Two types of transactions are there. So up to here is one transaction, and from here onwards, and rupees 6,000 is paid for importation of purchase of raw material. So first transaction, how much amount we have paid? 20,000 is a custom duty. I think, do you know the custom duty? Custom duty means at the time of import or at the time of export, we will pay the duties, custom duties. Okay, na? Here at the time of import, we have paid how much? 20,000. What we are importing machinery. So this 20,000 is called as, this 20,000 related to asset or related to good? Related to asset. So that this 20,000 is called as capital expenses. Here also 6,000 we are incurring. Here also we paid what ma? Import duty for the purpose of purchase of raw material. That means what ma? Goods. That means what ma? Goods. This is called as revenue expenses. 20,000 is a capital expenses. 6,000 is a రెవెన్యూ ఎక్స్పెన్సెస్. ఆ సెల్ కనుక ఇంకోసారి నా సౌండ్ వినిపించింది అనుకో, తీసుకొని బయటపడేస్తా. ఇప్పటిదాకా ఆపుకొని రికార్డింగ్ కదా అని చెప్పి ఏమనలా. ఎందుకు అది నీ చేతిలో ఫోను? నాకు కనపడదు అనుకుంటున్నావు ఏంటి? Rupees 18,000 is a interest had accrued during the year on a term loan obtained and utilized for the construction of a factory building and purchased a missions. However, the production has not commenced till the last date of accounting here. There is one concept called as, one AS called as AS 16. What is the meaning of AS 16, sir? A borrowing cost. In that borrowing cost, you will get a clear clarity about this. Okay, na? Until then, you may be a little bit confusion. What is in that standard? They will discuss what ma until the commencement of completion, until the commencement of what ma construction. If any borrowing cost has incurred, we need to add back to the asset. We need to add back to the that particular asset. We are going to add back to the particular asset. Means it is called as what ma? Capital expenditure, revenue expenditure, capital expenditure. You will get a clear clarity on this statement when the after completion of what ma AS 16 borrowing cost. Okay, next one. Yeah, this is a final. Simple only, I think so. 50,000 received. How much amount we have received, ma? 50,000 received. They are saying received means what ma? Either capital receipt or revenue receipt from issue of shares, including how much ma? 10,000 by way of premium. So what we have received? 50,000 received from issue of shares, including 10,000 what ma? Premium on issue of shares. Okay, now totally how much amount we have received? 50,000. 50,000. In that 40,000 is called as what ma? Received from the issue of shares will be treated as what ma? Capital receipt, because it is a liability. It is a what ma? Liability. But the premium amount of 10,000 should be treated as what ma? Capital profit. Okay, now normally totally we have received how much ma? 50,000. In this 50,000, 40,000 only the cost. 40,000 only the actual cost we need to collect from the customer. But how much amount we have collected? 50,000. Extra 10,000 we have collected. Totally we have collected the 50,000. What is the cost of that particular product? 40,000. So we are collecting. We are collecting means we need to pay na, we no need to pay na. Share. Share means nothing but capital. We are receiving the capital means we need to pay na, we no need to pay na. We need to pay. So this is a capital receipt. This is called as what ma? Capital. The total 50,000 we should not call it as a capital receipt. Why, sir? At the time of repayment we can pay only 40,000. Even though we have received 50,000, how much amount we need to repay? Only 40,000. How much amount we need to repay ma? 40,000. The remaining 10,000 we need to repay na, we no need to repay na, we no need to repay. That means it is called as profit or loss? Profit. Which type of profit? Capital profit. Are you getting the point? సో నార్మల్గా ఎంత తీసుకుంటే సరిపోద్ది? 40,000 తీసుకుంటే సరిపోద్ది. కానీ మనం ఎంత కలెక్ట్ చేస్తున్నాం? 50,000. బికాస్ ఆఫ్ అవర్ బ్రాండ్ వాల్యూ, అవర్ గుడ్ విల్, వీఆర్ కలెక్టింగ్ ఏ మోర్ అమౌంట్. ఓకేనా? అట్ ద టైమ్ ఆఫ్ రీపేమెంట్ టు ద షేర్ హోల్డర్, హౌ మచ్ అమౌంట్ వీ నీడ్ టు రీపే? 40,000 ఈజ్ సఫిషియంట్. ఓకేనా? బట్ వీఆర్ కలెక్టింగ్ ఏ 50,000. దట్ మీన్స్ వీఆర్ ఇన్ ఏ గెయిన్ సిచ్యువేషన్, లాస్ సిచ్యువేషన్? గెయిన్. దిస్ టైప్ ఆఫ్ గెయిన్ ఈజ్ కాల్డ్ యాజ్ వాట్ మా? క్యాపిటల్ ప్రాఫిట్. ఆర్ యూ అండర్స్టాండింగ్ ద కాన్సెప్ట్? ఓకే, సింపుల్. నెక్స్ట్ వన్. Purchase of agriculture land for a mill, for a what ma? Mill, for rupees how much? 60,000, and 500 is paid for the land revenue for a period after purchase or before purchase? After purchase. First of all, that 60,000 is called as capital expenditure. There is no doubt about it. Why ma? Because cost of land of 60,000 is treated as capital expenditure, because it for the construction of a mill we have taken that land. That and the land revenue of rupees 500 is to be treated as what ma? Revenue expenses, because after purchase, at the time of purchase, after purchase. The same type of expenditure of 500 at the time of purchase means it is also called as capital expenditure. Are you getting the point? This 500 we have paid at which point of time? After the period of was paid for the land of revenue for the period after purchase, at the time of purchase, after purchase. Are at the time of purchase means what, ma? At the time of purchase means put to use will be there. So that 500 we are going to add back to the that particular 60,500 we can say. But we are incurred after purchase or before purchase? After purchase. So this is called as revenue expenses. Next one. Rupees 5,000 paid as contribution to PWD. PWD means what, ma? Public work development. There will be something fun for improving the roads of sugar producing area. What they are doing, ma? Normal contributions. Normal contribute. After contributing that any fund, they can do anything. They can do anything. Normal contributions is called as revenue expenses. Remember this point also. Normal contribution is called as revenue expense. After contributing that fund, that with the help of that fund we can do anything, but contributing the fund is called as what, ma? Revenue expenses. Next one. Rupees 40,000 paid for excise duty on sugar manufactured. Sugar manufactured means what, ma? Good, etc. Good. It is called as what, ma? Revenue expenses. Okay now. Next one. Rupees 70,000 spent for constructing a railway siding. Railway siding means what, ma? Tracks. It is called as capital expenditure. Are you getting the point? So is there any doubts up to here? ఏదన్నా డౌట్ ఉంటే అడగండి చెప్తా. Shall I disclose all the things? To conclude, capital expenditure is a asset. Revenue expenditure is a normal expense. Capital receipt is a liability. Revenue receipt is a income. Are you getting the point? Is there any doubts? So shall I show the examination question? We think to such. Here they have given one sentence. What, ma? Briefly explain expenditure. Briefly explain expenditure means what? Capital expenditure, revenue expenditure. You know, is not a question. See this one. Which attempt? What is the attempt? December 24. They asked the capital and revenue for how many marks? For 7 marks. How many marks, Amma? So, first one, expenses incurred in connection with obtaining a license for starting a factory of rupees how much? 10,000. Without license, we can start the factory, or we cannot start the factory. Benefit is more than 1 year, less than 1 year. Related to fixed asset, not related to fixed asset. Related to fixed asset. So that license of rupees how much? 10,000 is called as Ramayana Mathini. Related to fixed asset, capital expenses. Rupees 1,000 paid for removal of stock at a new site. Okay, now in the new site there is some stock. We are paying for the removal, revenue, expenses. Rings and pistons of an engine were changed at a cost of rupees how much, Amma? 5,000 to get full efficiency. With the help of that expenditure, the efficiency is increases or decreases? Increases. So that capital expenses. Rupees 2,000 spent as a lawyer's fee to defend a suit for claiming the farm's factory site belongs to the plaintiff. Sir, here we are having one farm factory site. Okay, now on that factory site, someone has filed the suit. For that, we have appointed one lawyer. For him, we are going to pay the lawyer fee. Okay, now this is called as capital expenditure related to fixed asset. Normal lawyer fee means, legal fee means revenue expense. Here this is also legal fee, but related to fixed asset. So this is an important point. Okay, now here this is also an important point. License is called as capital expenditure. Normal legal fee means revenue expenditure. Here the legal fee we are incurring for the purpose of farm's factory. So for the purpose of fixed asset means it is called as capital expenditure. Okay, now next one, rupees 10,000 was spent for advertisement completed. Advertisement means revenue expenses. A factory shed was constructed at a cost of 1 lakh. A sum of rupees 5,000 had been incurred for the construction of a temporary huts. Okay, now here two types of constructions are happened. One is called as a factory shed. How much amount we have incurred? 1 lakh. And there is another construction. How much amount we have incurred? That construction is called as temporary huts, permanent, temporary. So this 5,000 is called as revenue expenses. This 1 lakh is called as capital expenses. Next, a pair of buffaloes. Here one buffalo is there. A pair of buffaloes of rupees how much? 50,000 was killed by lightning. Lightning means pidugupadi anybody. Okay, na? So how much? 50,000. Okay, we have lost capital loss of rupees how much? 50,000. So this is the total overall information. So we have learned the 1 to 2 points extra. Okay, now license means capital expenses, and then what normal legal charges is called as revenue expenses. Legal charges relating to asset is called as a capital expenses. Is there any doubts up to here? How many marks we are going to get? 7 marks. That to which item they are asked? December or June? December. Now you are going to write on which attempt? If you write the December 2025, definitely revenue expenses will come into the picture. If you write the June means we may get MCQ. That's all. Okay, guys. So until now we have completed what are the topics we have completed. So I have decided not to teach journal and ledger once again. Is it fine? Huh? This is not a foundation. Okay, na guys? So accounting basics completed, double entry system completed, capital and revenue transactions completed. In tomorrow's class, I will discuss the subsidiary books onwards. Journal and ledger, these are foundation topics. Do you know the journal in the modern approach? Already we have discussed from the basics, capital, cash purchase, credit purchase, cash purchase of good, credit purchase of good. You have discussed the debtor account, creditor account. These money accounts, after discussion also you are asking journal ledger means what can I do? So I will discuss the trial balance, no problem. Trial balance I will discuss, but I will not discuss the again what journal and ledger. You are having the questions, you do practice. If you are getting any doubt means I will answer in the class. Are you getting the point? If you are going to do the again once again journal ledger means it will take 1 week time. In that 1 week we can complete the subsidiary books, cash book, BRS. The examination what they will ask? They will ask BRS, they will ask subsidiary books, and they will ask the cash book. They will not ask cash book, but subsidiary books and cash book. Cash book is the base for BRS. Subsidiary book is the base for rectification of errors. Okay now. Now what is the use for learning the journal ledger? Is there any use? Base for you already learned the base for accounts and CMA foundation. You have got 253 marks. In accounts, how many marks you have got? Huh? Yes, 80 marks in CMA foundation, and again you are asking journal ledger. What is the entry for salary? Salary account debited to cash account. The salary account, which side you will record? In the cash account, credit side. What you will record in the cash account? What you record in the salary account? Okay, completed. Journal completed, ledger completed. Cash account, which balance? Cash account. Salary account, which balance? Debit balance will be recorded in the trial balance, which side? Debit side. Credit balance will be recorded on which side? Completed trial balance. Okay, now. Okay, I will discuss from subsidiary books, ledger, and trial balance. Okay, now I will not discuss journal, ledger, and trial balance. I will discuss what more? Subsidiary books, ledger, and trial balance. Subsidiary book is equal to the journal, no problem. Okay, now. So journal is subdivided into two parts: subsidiary books and journal. Okay, now. Journal proper. We can discuss in tomorrow's class, no problem. Okay, now. You want, you can discuss in some other time. At last, we can discuss what is the journal, ledger, all the things. Okay, na? Okay. Tomorrow, what is our agenda? Subsidiary books. Okay, please be ready with the subsidiary books. Subsidiary books after cash book, after BRS, and the direct target what ma? Rectification of errors. Trial balance is a small concept. You can complete it, no problem. If you complete up to here, you are going to complete up to rectification of errors. 7, you are having a luck means 14 marks. How many marks you will get? 14. Second question will be completed. If you complete up to where ma? Rectification of errors. And then after depreciation, including depreciation, I am saying, man. Up to rectification of errors means depreciation is where it is. Middle of the topics only, yeah. Okay, is there any doubts up to here? Thank you. Have a nice day. Bye bye.